Hello, hello, hello. Good morning. Little bit of a change for you guys. Hello. Greetings, MGN. Uh, Good morning, Azrael. Good morning, Justin, Giovanni, Pratik. Good morning, everyone. How are you all doing today? Hope we are doing great on this Thursday. Thursday, almost end of the week. It's been an interesting one for me. I'm not gonna lie, this price action since NFP has been a bit infuriating for me. I'm just gonna be honest. So a bit of a tougher week for me, but hey, we move on and we party because it's what we do. Take losses, we take wins. It's a trader's life. So I think I might just get straight into it um, and share my screen and show you guys what I'm looking at the moment. And in the meantime, I'll say a good money morning to everyone. And yeah, how's your trading week been? Let us know in the comments. Feel free to give us a shout if there's anything in particular you want us to look at. And I will have a quick run through on the charts. By the way, I'm not sure how much effect this will have, but we do have PPI later on today. We had obviously CPI yesterday and NFP on Friday. For me, as I mentioned earlier, been a bit annoying for me, especially because I was like trading the Euro USD, and this is the NFP. This is a 15-minute chart, right? We had NFP on Friday. This is a 15-minute candle. The entirety of the week from Friday 1:30 when that NFP candle has basically been within the range of that 15-minute candle. So, and that includes CPI here. So that for me has just been like, where is the price action? Why aren't we moving? Why are we just consolidating so much despite all the big news we've had? Hopefully PPI will change it. I'm not sure it will. Maybe, and I've said it before earlier on during the week, maybe we get some news on Iran and that finally kickstarts the markets and gets us moving in a direction or something. Because for one, at least the way I trade, I don't like ranging markets. They annoy me. When you get strong moves like this, I'm all for it. Ranging markets, I can't trade very well. I know there's some people who can, who love them, but hey, I'll be honest, not for me. So guys, be careful around PPI. And yeah, just reading through some of your comments now. And yeah, where am I from? I am a Nigerian born, London raised trader. So living in North London now. For any Spurs fans out there, you might know the area that I'm in. No trade week so far due to the electricity situation. By the way, I don't know. Should I say shout out? Should I say commiserations? I hope everyone is okay in Australia. In Australia? Sorry, wrong continent entirely. I hope everyone's okay in South Africa. I have heard there's been a few storms that have messed with power out there. So if you're tuning in from South Africa or lucky enough to have internet, glad to have you with us, and I hope everything is okay. Um, and also, I know there's been recent earthquake in Colombia, I believe it was. So if you're tuning in from either Colombia or that region or South Africa, glad to have you with us, and I hope you're doing okay. Yes, I will be going over my trading strategy, just to let you know, in a minute. And yeah, just a couple of comments saying it's been a tough trading week basically with all this whole pattern. I am with you. I don't know. I'm kind of losing hope now. I am in a bullish EU trade still, just hanging on for dear life with my stop loss at 1.15. Late entry for me. And I'll talk you through why I got into this trade, and why I say it's a late entry. So how I trade. I trade rejections from equal highs and equal lows. So an equal high would be depicted by this red line here with the red circles being where we've got the highs that are equal, and equal lows are where the blue balls are, which depict equal uh, equal lows. Just checking you can double see my screen. Just bear me a second. Sorry, technical difficulties. Okay, just waiting for my screen to come back up. Awesome. Right. So as I was explaining, we have equal lows here. So if I take off this indicator for a moment, what you can see here is, and that actually lines up quite well with this line. See, this low, for example, was at 1.14997, and this low is at 1.15004. So that's about a pip's difference. So you can say that they're roughly the same in terms of lows. So I look for areas like that. Um, Another one that my indicator picked up was these levels here, where we had the market just being at an equal low for an extended period of time, uh, roughly around this region, roughly around 1.1577. So if you go down to lower time frame, what I then trade is a rejection from an equal low. And what I like to look for as a rejection is a low, a high, and ideally I would look for a lower low, because if it goes through that, then I'm more confident. This was a riskier trade for me because we went low, high, so low around here to a high around here, and then to an equal low. That's a riskier trade for me. Still a valid trade, but riskier. And then I can trade off of that. So I jumped in after NFP on that basis with my stop loss just below the previous swing that we had. And I'm still holding on to that trade, looking hopefully for it to go back up. But what I'm going to do now is going to have a quick rundown through all of the market, essentially. And no, we haven't been hacked. And I don't usually trade based on RR. So I try and aim to see if I can get at least a zero point 0.5 or 1 to 1. But the idea, less than RR based, is more um, can, if it were to go to my target, would I have an opportunity to move my stop loss? So even if it's low R, so this is the zero point 0.6, it's negative RR, I guess. Um, would I expect in the time it takes to reach that target to be able to move my stop loss into profit on a 15-minute time frame basis? And I reckon that much movement would potentially give me that space to do that. So I don't necessarily trade like a fixed risk to reward 1 to 1, 1 to 2, or anything like that. But I do see if there's enough space and enough structure for me to hopefully move my stop loss into profit, like so. But let's get through into a couple of trade ideas. Bitcoin. This one has been annoying for me in that it's also decided to do this ranging price action, which I was lamenting at the start. Right now, we're coming off the equal lows. So as you can see here, we have the low here at 63,250 and the low here at 63,235.88. So that's a 15 pip difference, which is not much on an asset of this value. I would look for anything within a range of 100 to be counted as the equal low. If we go down to the 15-minute time frame, and this is the structure that I ideally like to see. So here we have a low, here we have a high, and then we have a lower low. So what would I be looking for? Well, I'd be looking for it to come. Hello.
Hello, hello. How's it going?
Hey. Good, good, good.
Us?
Was just
Yeah, go on, please.
yeah,
Sorry.
was just talking through what I'd be looking for on Bitcoin
Oh,
in terms of what I'd be looking for to get into a trade. But welcome to the stream, Dirk.
thank you. So nice to be doing this with you again.
Yeah,
Ah,
loving the early morning coffee.
yeah, my second espresso of the day. So it was like welcome actually when I heard like, oh, Bowie's on hour by himself this morning because I was doing boring bookkeeping stuff, and that's a welcome excuse, to attend to charts instead of spreadsheets.
Yeah, I mean, who doesn't want an excuse to trade?
Yeah, really. But you were talking about Bitcoin. Sorry, I didn't want to.
Yeah, yeah. So let me just quickly round up my thought. So at this line, I would go, and I don't know if anyone else uses this trick, but I tend to set an alert by a line, and then I'll just edit the message. So for instance, here I'll put long with a stop loss of, I think I cancelled the name out. Okay, never mind. So long with a stop loss, and I'd want it to be just below. Ideally, when I put my stop loss, I like it to be in the fair value gap. This is quite wide, which would mean the fair value gap is all the way down here.
Hmm.
I'd love to try and get a bit more return, so I'd probably put it somewhere around here, the 63,000. That way it's got enough, maybe 63,100. And doing that, I'd accept to myself that, hey, this is a riskier trade, because it's not sticking to the rule of, okay, put it at the bottom of the fair value gap. But I'd accept that. I'd accept that, hey, this is a riskier trade in terms of me getting in, or in terms of me, my stop loss placement, it'll be riskier in terms of that.
Hmm. Hmm.
So that would be my setup. It would have to break through the resistance, which would be the equal highs. Um, it comes through that nice price action that I like to see broken through. So the low, high, lower low. If it breaks through that, then I'm bullish, and I'll be aiming for. So if you put this at 63 or 100, again, my stop loss will be a bit riskier on this trade. Ideally, my stop loss should be down there, but that gives me way too low RR. And if it does break through these levels, I'm a bit more confident that will at least come up to take this level here. And that will be a zero point 0.6 trade. Again, not quite one to one, but because it's broken through resistance, and because we have a clear target, and because there's enough space in there for price to move enough for me to move my stop loss into profit, I would then say, okay, if it does come up to that level, that's a reasonable trade for me to take. And that's kind of the setup that I look for. So rejection from the equal low, with the confirmation of a rejection being that invalidation of the last swing high or swing low, and then targeting the equal highs or equal lows, depending on which way you're going, um, trying to give myself enough room to move my stop loss into profit if it were to come up to the level. And I know, for instance, here you have a swing low there or a swing low there that based on that kind of price action, it would have enough. If it does run to that target, it would give me enough time to move my stop loss into a decent place.
Hmm.
But
It, it's fascinating, no? I mean, you're in the 4 hour chart. How unvolatile is that a word in English? I don't know. Bitcoin recently is.
yeah, it's for me, it's been quite infuriating that not only on Bitcoin but on quite a few assets, despite NFP, CPI, we've just held and consolidated
Hmm.
and not really gone anywhere.
Yeah, I agree. It's a bit difficult these days, I have to say. So on my side, yesterday, you guys that were online yesterday, remember I let myself be lured into a trade into NASDAQ short, which got stopped out when CPI data came out. So that's one of these examples. You have a stop loss placed on your evaluation account, two-step, for example, and it gets stopped out during a news event, like 2 minutes before, 2 minutes after. That doesn't count as a violation, of course. It's just you should not open a new trade during that time. So that one's going on right now. Is I just entered another gold long. I quite like the setup, honestly speaking. First of all, gold has been extremely nice to me this week. So on gold alone, I'm up 4.6%, 2 times lost on the NASDAQ, so net 2.6%. So I hope this one, can get the 2R again, because it looks good right now. Can have a tight stop loss. And not a big move in order to capture those 2R again. That would put me up again 4.6%. But I shouldn't do these games. Should, would, could. This is how you're not earning money. Richard, your internet is back.
Morning.
No, it is not. I'm on my phone internet right now, and it is super unstable.
And it's going to churn through your data really quick as well.
Yeah.
Yeah. It is unfortunately what it is. I can't close my trades on my account, unfortunately.
Uh-oh. Prioritize that.
Yeah, man.
Yeah. We can hold down the stream while you close some trades if it's too much on the data.
Absolutely. How's it going, Kevin? Good to see you. Oh man, this is my comment of the week here. Will my trading improve if I shave my head? No, it has to be natural, When you become so good at trading that your brain grows and pushes out your hair roots. So if you look like Buyu and me, you have achieved the master level.
Yeah.
Trading.
Exactly.
So Richard still has some way to go, obviously. What else are you in, Buyu? Any besides the Bitcoin, anything you are looking at the moment?
So I was just actually just going through. I'm just going to go down the list, as it were. So let's have a look at what ETH is saying. So pretty similar setup. We just bounced off the equal lows. Let's see where we are in terms of. Yep. So we've got a low, high, lower low. So I'd be targeting, somewhere up here to go long on that. Don't like that that's just before the equal high. So and there are quite a few wicks up here. For me, I'd say that's a no-go. Even though I could move it up past here, it still doesn't give me much room to get to these levels where it could also reject from. So ETH, for now, not touching that. If it were to come back down and retest it, maybe even wick just a little bit past it, then you would have a new setup where I could possibly go long from here to target there. That'd be a nicer setup for me. But for me, ETH, not really what I'm looking for at the moment. Any thoughts?
Yeah, pretty much. I think at the moment the correlation between Bitcoin and Ethereum is super high. So at this phase of a cycle where we are, at least when it comes to swing trades in Bitcoin, or in crypto, I tend to actually only look at Bitcoin. I might look at. Sometimes we have days where that deviates a bit. So in the background, my software is anyway monitoring the top 10 cryptocurrencies, with the exception of the stable coins. But I think the time where it gets more attractive again to look at something like Ethereum or Solana. I actually like Solana a little bit better when it comes to price movements than Ethereum, to be honest. But maybe that's also because I think it's transactions are much faster when you transact crypto with Solana than with Ethereum as the base layer. So that's a personal preference. But yeah, for now, Bitcoin, when late October, early November, moving on, when we probably have reached the cycle bottom, at least when it comes to the sentiment, I might concentrate on the others again. So one thing at the moment is I'm very careful about, as we see so many crypto exchanges that actually were long-lasting crypto exchanges, like Bitmart, for example, dying. So I'm very careful where I put my money at, which exchange I put my money at the moment. I just said this, I think I mentioned this last week also with Bitmart, who still have I think it's $10,000 or $15,000 that I have lost access now to, and they don't reply to anything anymore. So you gotta be careful, with those centralized crypto exchanges out there. However, nowadays, with stuff like Hyperliquid, for example, where good decentralized opportunities as well. Or you use one of the super major exchanges. That is, of course, possible as well. I can see you had, like, I think Coinbase there in the background. Or is it just for your data stream?
Yeah, just for my data. Yeah.
Fair enough, yeah. So be careful with that. It's like the consolidation at the business level we see every 4 years, and let's see who's left after October, November still on that market. But other than that, really, if you want to trade cryptocurrencies outside of an evaluation account or prop trading account, look at like some of the decentralized exchanges. They are really, really good nowadays, and you don't lose control over your coins.
Yeah. And one thing I don't think has been made a big deal out of enough is that the 5ers, I think recently, or I don't remember this historically being the case, but we've expanded the amount of cryptos you can trade. So I believe back in the day, or at least when I was checking like a year ago or so, we could only trade BTC and ETH. And now I notice we can trade Doge, Solana. We can even trade LTC and XRP, and also the Euro. So BTC EUR and ETH Euro.
Okay, that's new. I haven't seen that as well.
Yeah.
And the spread on Bitcoin is actually quite good, I must say. I'm looking here right now. It's like $2.50 roundabout. The only thing is, we look at the specifications. Yeah, the swap is like $60 to $70 per 24 hours. So that's still a little bit on the high side, but you are absolutely right. Yeah, that is much, much better than it was a year ago, because my latest memory was what you just explained as well. Yeah.
Yeah. So while we're on that topic, since you can trade Solana, might as well go through the setup and what I'm potentially seeing on Solana in terms of positions. I would say be careful on the swap fees on the cryptos. Pro tip for me, it is quite easy just to, if you are still awake, close your trade just before rollover. I usually close my trades half an hour before rollover, and then you can open them back up after rollover is done. On crypto, you don't tend to get the wide spread over the 1 hour period after rollover happens. So you can jump back in quite quickly, and that also means you avoid the swap fees as well. And the market tends to not move that much during rollover period. So rollover period, for those who don't know, is 10 p.m. UK time, so 9 o'clock GMT, because we're in summertime now. And I'm sure you can figure out what time zone, in what time it would be in your time zone for that.
Do you have, I don't know, maybe you know that, Buyo, or maybe Richard knows it. Is there any cost involved on the MT5 for an 5S account when it comes to trading cryptocurrencies, or is it like when you trade the indices?
Is it
You mean like commissions?
Commissions, yeah.
I think you pay commissions.
Yeah,
I'm not sure.
Commission.
Because I think it changed on gold recently. Can that be like from a dollar fee to a percentage fee?
Yeah, it was a dollar fee, and it's now a percentage fee on gold. But I don't trade crypto, so I've actually never checked that. But I do think that there may be commissions.
Yeah, I'm very sure there may be commissions. The question only is it like percentage, or is it a flat fee per is it percentage?
Oh.
Yeah,
Okay.
I can see on ETH, for instance, it's 0.03% of volume is the commission, and then the swap longs and short are minus 4.1 pips, and that's for ETH.
So 0.03, probably round trip 0.06 then.
Yeah.
Which is actually quite fair. I mean, with the crypto exchanges out there, you have a round trip between 0.1% and 0.15% usually. So that's really on the lower end. That really makes it tradable. I love to see that. See, that already paid off when I joined this morning.
Yeah, it's 0.03% per USD per lot with the 5ers on Bitcoin.
Okay. Per USD.
Ethereum, same.
Yeah, I'm assuming it's 0.03 across the board on commission. The swaps, though, they do differ quite a bit between
Yeah.
the cryptos. So, for instance, on Solana, I'm
Across the
looking
board.
at the long and short
Yeah.
minus 50 pips. As I mentioned on ETH, it was minus 4.1. So again, if you want to try and avoid the swap fees, I'd get your trades closed just before rollover, and then you can open up shortly afterwards.
Yeah, you shouldn't use it like to hold on to the position in like a swing trading style. I think if you want to do some intraday trading with it, it's just fair and square.
And so I reckon we've got a equal low touched here. Now, we do have the risky setup. I don't necessarily like taking risky setup unless I'm like, in a full-on risk mood, which I'm not anymore this week. So the risky setup for me is low, high, equal low. If you take it once it rejects, goes through that, that's a risky setup. For me, the safe setup is low, high, lower, low. So if it breaks through roughly this area, I like to aim for the top of the FVG. If you have the high is in the FVG, I like to aim for it to break that FVG. So that means it breaks both the high and inverts that fair value gap. For those who don't know, let me see if it comes up. Fair value gap is, let me see if I can neaten this up.
Give me a second, guys.
Okay. So where you can see this area marked FVG, that faint red box, that is where the fair value gap is, and basically it measures the area. It's a 3 candle setup, is a fair value gap, and it basically says if this is the middle candle, candle number 2, candle number 1's wick, the bottom of candle number 1's wick, and the top of the wick of candle number 3, if they don't overlap, then it leaves a space in that middle, and that space is called a fair value gap. And that's how that works. So, you'll get them all over the place. For instance, here, you can see the top of that wick and the bottom of that one leaves a fair value gap here, which got traded through. And these are meant to act as sort of areas of resistance, I would say. So, sometimes we'll get price bouncing, getting rejected from that fair value gap area, as you can see down here with this example.
Have you tried my ICT indicator on TradingView?
No, I
I
have
have
not.
an open source free ICT indicator, and since you use the Lux Algo one, which they make great indicators, I would be super nosy to get a feedback on mine from you. It's called, I need to look it up again,
Okay.
ICT Auto Validated SMC.
Auto.
Let me quickly.
There we go. Good Bad Bitcoin.
Yeah, that's mine. Yeah.
Yeah, I've actually taken off the indicators and purely just focusing on the equal highs and lows now.
When if you have some time, the next days, maybe you want to check it out, and because I'm always interested, since I just programmed the thing, I'm not actually trading ICT rules, but of course I would be super interested to get from an actual ICT trader feedback on this.
Okay, and you can add alerts on it, which is interesting. Let's see if they're based on function calls.
You can also have function calls. With an, I have to lie. I need to see quickly. Did I already integrate this there? Because I normally always integrate function calls in all my indicators.
So for those who don't know in the audience, a function call is basically whenever an action happens that it will basically tell you. So for instance, we have a function call here, and that will tell me when a new equal high, new equal low, equal high tested, and all of these things happen on it, rather than a crossing indicator, which basically just says when it crosses that line, you get an alert. And a function call will tell you whenever these ones happen once you have it activated. So for
I do not have that. I'm seeing a good point. See, already worth it. because I used to, because I got a lot of requests function calls, and this was one of the first open source indicator I published on TradingView, and back then I didn't include that yet.
Okay.
So right
So it
now
looks
you
like it
can,
has all the functions here, but not the function call
yeah,
itself. Yeah.
yeah, good point. Yeah.
Okay. Let me take this off for a moment. There we
It's
go.
already on TradingView. So that one you can find on TradingView. And
Yes.
the
We were just.
function calls I need to integrate. Well, you can also do that yourself, of course, because it's open source, the whole thing. So you can just, for example, copy the source code, paste it, preferably in Claude code with a good model, Opus 5 or Fable, and then just tell it, oh, can you add the function calls for me? But I'm going to integrate this anyway, so everybody has the update.
And yeah, just to let you know, so it's this one here. If you are still looking for the indicator, Abadolf. Yeah, awesome. So for me, I'd be looking at a long once it comes across this line with my stop loss. I'll go back to the 4-hour time frame. Will be just below this equal low area here. And that is an equal low area because it's roughly that candle, that wick, and this wick roughly the same height. Good, I'll put my stop loss probably just about here. So maybe 74 point, I like round numbers, 74.7 would be my stop loss in terms of looking for positions on Solana, with a target of aiming up there. But yeah, feel free to check out what other cryptos, and I know there is some other minor pairs like on the Forex side that you can trade. There's been an expansion of what we can trade with the 5ers.
I'll definitely give it a try, because I mean that feeds right into what I'm trading anyway every day. So why not, also do that on an evaluation account? But it needs to go through my stage testing always. So I gotta get the data, tick data first, and see if the signals that I generate, for example, normally I work off the Binance Perpetual Future streams of the API. And I always need to see, does that translate also into the live stream of the 5ers? Because like if we work here with 50 minutes, 5 minutes, 1 minute candles, at least in an automated setting, like differences in ticks can lead to totally different outcomes sometimes. Always never ceases to surprises me how much that can change an automated strategy. Hard lesson learned a couple of times for me. Yeah, but nice.
Elvin, I saw your comment saying, good morning, the incredible host live trading, the 5ers. Why the 5ers did not diverse cryptos such as Trump Coin? I don't think we're going that diverse yet. Top 10 coins at the moment, are getting added. I'm not sure Trump Coin is quite in the top 100 of coin market cap yet. Who knows? Maybe one day. Although I think you might be waiting a while for the Trump coin to be added, or any other meme coin for that matter.
Yeah. You gotta always, hey guys, in the background, you have to think, of course, it could be fun, adding some weird meme coin that is somewhere in place 90 when it comes to market capitalization. But the ultimate goal of these evaluation phases and funded phases later is that what you are trading gets added to the 5ers overall portfolio. This is why they can pay you up to 100% in profit share, because they are then copying your trade on their main portfolio. So basically the own money the 5ers as a company is trading. And I think some weird coin that can tomorrow basically disappear from the market or gets rug pulled or something, this is nothing where you can build really a sustainable trading strategy on. I mean, I've been doing this trading with cryptos for such a long time, and I really refrain to 4 or 5 coins nowadays. Of course, Bitcoin, of course, there's Ethereum, there's Binance Coin, there's Solana, which I super like, and funny enough, Doge, for example, is also always quite nice when it comes to trading. Sometimes it has a life of its own. So you better, if you want to go down that road, stick to 5, 6, 7, 8 max coins that are very liquid. And always have in the back of your mind also, always start off analyzing what Bitcoin is doing. Because usually the altcoins are going to copy more or less what Bitcoin is doing. So don't just totally, in my opinion, rely on, I found a signal on Trump coin for what it's worth, and which probably is going to have a life of its own anyway. Bad example.
Yeah.
Vishu Sharma is saying, hey, Buyo, you have an unconventional and very effective trading style. I very much agree with this, by the way. I think it would be a pleasant surprise and a valuable gift for every trader if you do a seminar to make it understand. Oh, that's a good idea.
Yeah, we'll see. We'll see what we have in the works.
Yeah. I agree.
Right. Moving on to gold. Gold, always believe it. I've got that song stuck in my head now. For those who don't know, Spando Ballet, Gold, classic. Give it a listen.
Yeah.
Classic karaoke song if you ever need one. So I don't usually trade continuations, and I am angry for myself for being lured into trading a continuation because I was looking for gold to push up a bit higher, and this is the reason why I don't trade continuations. So we had the legitimate entry, would have been the rejection from these equal lows here. Went through that level there. If I go back, in fact, if I draw out, so I can see it on a lower time frame, that equal low there. So we had a low, high, we had a low, high, equal low. Riskier entry for me, but, I would have been happy to jump into that trade because we were seeing a strong focus on gold. Sorry about that. I just got a message. I was just wondering what it said. And we've been bullish on gold all week. I've been bullish from down here. For those who don't know, I was in it, got out just before NFP, got back in after NFP, and we've continued. And I was expecting it to come up here. I do have my... actually, I'm out of it now. My gold trade from earlier. This is, for me, a no-go zone until we see some sort of rejection. I'd love for it to push down a little bit lower, just so we get like a nice equal low here, and then hopefully we can look for a long. This not the greatest trade for me. I tried to jump in, hoping it would just continue. Not my usual trading style. So if I take the L, that's on me for not following my trading plan, and I'm happy to say that's my bad.
Tis what it is.
The way I trade.
Exactly with me yesterday in the NASDAQ trade, where I kind of talked myself into, and also that LJ was in the same trade helped my confidence a lot, of course. But for gold, at least, you're on the 4-hour time frame, I believe here.
Yeah.
On the 15-minute, like I told you guys earlier. At the minute I joined the stream, actually, I opened this long trade. And this one is solely based on this massive support that we have down here. So we had 1 time, 2 times, 3 times a lot of buy limit orders that soaked up market pressure from market sell orders. So that looks good for me. And then I can, very easy say, okay, if we break through the structure, probably we're going to continue downwards more. So then what you are thinking, I think, is playing out there. But I see a good chance that we at least, make another lower high, for example, before that happens. And that's what I trade. Not ideal for me. I don't super much like trading gold in a contrarian way. But as you can see, the standard deviation channel is kind of parallel at the moment. So that shows me, okay, being a contrarian in a ranging market is probably more effective than trying to catch a trend that's not still there yet again. This, for me, indeed very important. So on any chart, at least on the lower time frames that I trade, I always have this standard deviation channel attached because at a glimpse it can tell me what is the current market structure. Are we trending or are we ranging? If we're trending, I'll try to follow the trend. If we are ranging, I look for contrarian orders in a very what is the name? discretive. Is that a word in English?
Discretionary.
Yeah, discretionary.
Definitely,
Thank
yeah.
you, Richard. Yeah, in a discretionary way when it comes to this year. And wow, I'm happy to see that stack 79, the standard again is gold. I started to use it. Buyers empty. Minute 15 is super. That's exactly the pocket. Gives great results on gold. You are very much welcome. Happy to see that you like this one. It helped me, and you guys know I'm still not. I would never call myself like a day trader. Still, at the moment, I'm still learning. I come from longer term fundamental investing, selling options, so being the underwriter of options, the writer of options, and but I kind of think I found my pocket now. It looks quite good. And I did it by copying a lot of stuff or taking a lot of stuff what other traders do here. For example, LJ, back when Alex, Jonathan, when they were still here, what Richard is doing, Victor is doing, Buyu, what you are doing, but I need to get more into your trading style first. I haven't watched enough, or I haven't been on streaming with you enough yet. So it's going to take some week. And then, take these pockets and try to incorporate it into my own trading style. There might be some, this is what LJ is doing. I think that's nice. LJ gave me the idea with his standard deviation channel because he uses this too sometimes. I found it very useful for what I'm doing. And there's nothing wrong with this. And for me, always the greatest feedback is when hearing from you guys out there, I like what Buyu is doing there. I'm going to take this part of his own trading and incorporate this into my strategy. This is exactly what the result of live streams like this should be, not to copy us, copying another trader is never a good idea, because what are you going to do if that trader suddenly doesn't stream anymore? Then you're back to square one. But take some concepts, incorporate them into your own trading. That's the way to go, really.
Yeah. Did you draw on that thick green line yourself? Because I'm actually seeing something similar on my chart as well.
No, that comes from an indicator called Aurora. Order
Okay.
flow, also free on TradingView. So if you guys, but you only can use it on where you have order footprints. So on futures. This is why I'm always looking here at the gold future or the NASDAQ future. Plus, you need for that one, you need the premium TradingView plan, because only on the premium or ultimate plan they give you access to order footprints. So that's a little bit. That's why I'm right now starting to port some of my stuff, for example, also to Ninja Trader, which arguably for trading is the better platform than trading from TradingView, in my opinion.
For execution or for analysis, or both?
Sorry?
For execution or analysis, or both?
Well, right now, only for analysis, because I need to get used to that platform still. But later I will do both. The nice thing about Ninja Trader in comparison, at least to TradingView, is that you can do much more stuff coding-wise, because it's based on C#, and all the calculations, at least in the version that you download to your desktop, are done on your desktop. With TradingView, there are a lot of limitations. A lot of other stuff that I could add to this specific indicators, but I cannot, because TradingView doesn't let me. TradingView will eventually say, no, you only have so and so many thousands operations, because it recalculates everything on every candle, which is very computational heavy. I don't know why they chose to go this way. Whereas in Python, for example, or also in C#, which I'm not super good in, I still need to get into that one more. It's done not on every candle close, but usually with kernels or vectors.
Okay. Did have a question from Void VN Form.
Simulate indicator. What is RTM? I wish there was for RTM.
Yeah, I'm not sure what RTM is either.
What is RTM, Void? Yeah, the ICT indicator, you just need to go up here and search, just type in ICT, and then it's this one, ICT auto-validated smart money concepts by the good, the bad, and the Bitcoin.
Read the market.
Read the market. Is that a platform?
I wish there was a similar indicator for reading the market, I'm guessing.
I will Google it quickly. I mean, there's so many platforms out there. RTM, okay, read the market. Never heard of it before.
Has something come up on Google?
Yeah,
Okay.
seems to be a platform. 2 marks on a short, a line, and a rectangle. Huh?
And this could get confusing because it seems like we're having a little bit of a void off in the comment section. Because the other void is like, void what?
Wait, what? Okay, price. I never heard of it, so I cannot comment. And I know a lot of people are also using, what is it called, Think or Swim, by also some broker, especially in the USA. That one is quite popular, but I want to concentrate, of course, on the platforms that I'm also using by myself. And before you ask, this specific indicator cannot be translated into MQL5. I tried, but it's impossible, at least for me. And it also wouldn't work because on CFDs, we only have tick data when it comes to volume. We don't actually have order footprints. We have 2 voids.
Apologies, guys. I'm having probably the most frustrating week I have ever had in my life, both in trading and just in general. Apologies if I'm not being the most
No, that's okay.
consistent and chatty person. I've had just the funnest of weeks. Fun.
Yeah. But I mean, it's okay, Richard. You can also, leave and take care of the stuff you have to take care of.
No, there's nothing to be done right now. I've locked tickets for my internet being down. I've locked tickets for my Black Arrow account not closing trades. It closed the limit orders, the limit buy and limit sell, which is the take profit and stop loss point. It's closed that, but it hasn't closed the original entry. So, I mean,
Okay.
yeah.
But at least you're hedged. No one.
Say again?
Are you hedged then currently?
No. I've literally I can't place any take profit points or nothing. It just doesn't close anything.
That's a bummer.
But I've reached out to support. So let's see. I didn't have electricity yesterday and the day before. Tried to do the stream yesterday. Couldn't get onto the stream. I got into the stream the moment there was I opened up TradingView. It couldn't handle both, and it couldn't stream. So it's just I'm frustrated. It was my wedding anniversary yesterday as well.
Congratulations.
Yeah, so that was the only shining light in a whole week of just annoyance, and at the most annoying times, just having this negative stuff happening. It's so annoying.
Things like
had
this
a meeting yesterday with my manager, and I'm about to go into the meeting. The power goes out. It's on for 15 minutes. Power goes out again. That kind of stuff. And it's just okay. Do the meeting on my phone. The whole town doesn't have power, so the whole grid is down. We had a massive storm here, and then that massive storm knocked out our grid, and we have something we called midnight shoppers. A midnight shopper is somebody that comes and steals after dark. So we just call them midnight shoppers. So the midnight shoppers rocked up and stole some cables while the grid was down, which then caused the follow up substations to have to be inspected, and so there was vandalism and all of the kind of stuff. So the original issue could have been sorted out by rerouting the ring subs, not with the follow-up vandalism and so on. So just a week. I'm glad to see the end of it. To be dead honest, I'm honestly glad to see the end of it.
I wonder whom LJ and you are going to pass on your bad luck this week. I mean, you with your power internet issues, LJ basically with his apartment trying to kill him all the time, and I hope it's not going to be passed on to me.
It is. Yeah, I hope for you guys' sake that this is not contagious. But yeah, okay. I am here now. I've got a backup for the internet. It's a bit unstable, so if I do drop off, I do apologize. Will is not in today, and Samir is not in today. So thank you to Buyu and to Dirk for for jumping in literally on the shortest of notices and taking over. I really appreciate you guys, and the stuff that you've done yesterday and the day before as well. Thank you so
no
very
worries.
much.
You
No
know,
worries.
So
it's
I'm
given
I
and
feel
taking always.
dejected. I don't know if you guys have ever felt like dejection. Just
Explain that. I don't know that word in English.
so dejection is when you have a certain expectation and nothing reaches that expectation. It's
Yeah.
like, it's not depression. It's just like you feel dejected. You feel like whatever you had done was for naught, or whatever you had planned did not work out. So there's like this negative feeling associated with it.
I
So that
basically
to me
have
is
that
dejection.
whenever I put hours and hours and hours into an automated strategy, and then ultimately I have to admit that it fails. Like the feeling, oh
okay.
my God, this cost me like 100 hours of my life. So much work went in there, and now I'm at the stage where I have to admit it's not going to work. You know, whatever you're
Yeah.
changing, it's simply not going to work. And I think, at least when it comes to trading, any trader I know has been at that point. You know that, and we all know that feeling. You know, when you think you've discovered something new, trading-wise, strategy-wise, and you're like super excited, you backtest it a little bit, you have a look, looks very promising. Then you go into the details, still super promising. Then you put it on, at least in my case, the live stream. It's going to trade on also, and suddenly you see like, nope, it's not going to work. Sorry.
Yeah, it's this is my week. We'll call it the winter blues, because it's like the storm we had was also a massive cold front, so it was like minuses in the degrees here by us, and raining at the same time as well. So it's just what can you do? Like, I don't know. Like, what can I do? It's at that point where you just kind of like go, all right,
Yeah.
whatever.
Yeah.
I was in a NASDAQ short.
I think
Oh no, he's
I can't
frozen.
close the
Oh
trade.
wait, he's back.
you
was in
were
a cold
frozen, like literally at the most exciting moment. Last we heard was I was in a NASDAQ short, and then you were gone.
I was in a NASDAQ short on all of my accounts. I could close them on the CFD side. On the future side, it couldn't close. It's still open. It's still stuck here. I had a gold short as well on the futures platform as well, which went amazingly well. I just can't close this one. So if this one breaches the account, what can y'all do? What is what it is.
At least I hope it's on the evaluation account.
Yeah, it's on evaluation, but still,
Because your own money or funded, that would be.
But you have the stop loss in place, right? So if it's just a loss, it's just a loss. No, you don't have stop loss in place. Ah, crap.
So the way that it works is the futures platform has the OCO, which is bracketing. So
Yeah.
you have one cancels other. So you place your order, and then it places a limit order, buy or sell, as your take profit points. So when the power went, not the power, when the fiber went down, the internet, and I switched over to my phone, I logged into everything again, and I decided, you know what, this is a struggle. Let me close all of the trades, regardless of where they were. I was just going to close the trades. Closed them all on CFD, tried closing them on the Black Arrow platform. All it did was just removed the limit orders, and it left my trade in place. I can click cancel and close. Nothing happens. It just says invalid order, asset not allowed, already sent, please wait for response. Click close, invalid order. I can click a buy order or a sell order. It just does nothing. So I did drop it in chat, so into the futures Discord. And I did reach out to support as well. So this one's currently just sitting there. I don't know what to do.
But it's not an issue that you did something wrong. That sounds like a platform issue, no?
They
Yeah,
did say that they've had. Where was this? It seems to be a global issue. Unfortunately, seems to be a global problem. I already tagged support to investigate. Sorry for this inconvenience.
Okay.
Okay.
Yes.
But quick note on the futures platform while we're talking about it. I was going to show you something, but I'm going to get back to that in a moment. For those who couldn't get enough of the 1v1 battles earlier this week, Real Void, aka LJ, aka Lost to Justin, has just joined the chat. And for those who were here earlier in the week, they'll know why his name is Lost to Justin. We had some great 1v1 battles earlier in the week, and we also have 1v1 battles taking place on the Futures channel. We do switch over to the Futures channel automatically at the end of this stream, so be sure to check that out and keep your eyes on that if you want another chance to get into the ring with the hosts on the CFD side or the Future side. They give away a 100k swing account. We, I believe, earlier on during the week gave away one of our 100k summer plan accounts. So, and our battle is 30 minutes. Their battles is 10 minutes, if I'm not mistaken. So there's this
They
really
have
high
10
octane
limits.
stuff.
They have 10 minutes, and they have in order for you to win an account, you must reach 5k in profit. Or is it
Wow.
I think it's 1k in profit. They have to. But with us, it's whomever did the best. So even if you did not reach the 5% or against the competitor, for us, that's why the CFD side is better. It's better. Come on, guys, it's better.
They're running
But
it at New York Open, though, I guess, right? So you get that volatility and, kind of activity coming through, yeah.
And welcome, LJ, by the way.
Yes.
Hello. How we doing, guys?
Glad to see your apartment hasn't killed you last night. So.
No, it hasn't. No, I'm still here.
Your back, everything good?
Hey?
Is your back and everything good? From
No, it's very sore. I can walk around much better today.
Oh, okay.
But it's really sore. It's now, before, like yesterday, it wasn't like persistent pain. It was just sort of when I moved. Now it's like persistent, but I can move better.
Okay.
So, I don't know. It seems alright though. I think I'll be fine. I'll probably just take a
Knock on
week
wood.
or something. Yeah. Rich, I fell down the stairs the other day. So, if you didn't know.
Oh yeah, you weren't around, Richard, right?
Oh.
What a week we've
My
had.
partner's place.
What a week we've had.
Yeah.
So I was just going to
Keep
quickly
going, right?
ask you about this, Rich. Have you seen that you can basically open with the OCO orders? You can just use the Alt button if you go to
Alt
custom.
and Shift. Yeah.
Alt and Shift.
Shift.
Yeah.
Shift for longs, Alt for shorts.
Oh, is that what it is? Okay, I was trying to figure out. I just kept pressing Alt and couldn't figure out how to get it to go to longs.
So you can change the
I remember
shortcut
you were-
keys. You can change them.
Okay.
So you could have, like, for argument's sake, I had them as Alt L for a long and Alt S for a short. But then I went through it again and I saw that there was another one that was just Alt and Shift. Like, without clicking anything, you can just go Alt click or Shift click, and then it will enter a market order. So yeah, pineapple.
Yeah, because I couldn't remember what the shortcut was, like last time when we went over it. So yeah, it was,
If you go
it was annoying me.
I think it's
So
if you go to trade and then trade hotkeys, and then go down to the hotkeys, you'll have trading hotkeys, file, chart, trade, studies, view, fast trading, chart trading, all of that kind of like stuff. If you go, for argument's sake, to chart trading, under the hotkeys portion, you'll see all of the orders that are there with the short keys. So all of them are there. The hotkey on the left-hand side, and then the name, and then the description of everything.
Perfect.
Let me see here.
and what I found interesting as well was the OCO time. Now they do use Chicago time for the OCO time, but you can automatically close trades at the end of the session or whenever you want if you also have that set up. So, I have that set up on my Black Arrow where I have the close OCO time half an hour before the markets close, just to make sure that everything gets closed automatically. So for me, I just set up all the stop losses just using this handy technique that was taught to us by Dave.
Yeah. That, or you get a summer plan where you can hold overnight on the swing summer plan.
Yeah.
There you go.
But caveat to that, you can only hold a certain amount of contracts over. So always remember that. You can't just enter 10 minis and then expect those 10 minis to hold over. There's a limit to the amount that you're allowed to hold over. So go and check that in the FAQs. It's all written down there.
Right, and I just saw someone asking about giveaways given away in the stream. For those who don't know, we are having our psychology month over on Discord, and the week 2 challenge is literally the easiest thing I have seen in a while. It's to touch grass. So
Yep.
you go outside, step away from your screen, find some real grass, take a walk, and provide some proof that you've done so. And you could be in with a chance to win a 20k boot camp. We're selecting 3 winners for that. So yeah, post your submissions in IRL, in real life challenge, and see if you can win an account just simply for touching grass. And if you need some music to listen to while you're doing that, I think a very cool DJ has decided to send you a little reminder in our break room on Discord saying, don't forget you don't have to stay in the house every weekend. Go out and touch your grass, and it might just help your trading journey. And with a nice little song called House Every Weekend as a bit
That
of a
is a good song.
throwback. I used to listen to that song on repeat for every time it came on for like a good year or so. That song was on repeat,
That is
and
a banger track. Banger track.
even now in my head, I'm like, do the house every weekend.
Weekend house every weekend. Yeah, so good, so good.
There is a question here from Fast Raw saying, what's the difference on the summer plan and the normal 2-step? I can't see any useful info about it on the 5ers website. If you go to the 5ers website, so literally just the5ers.com. Sorry, I'm just going to hide that one. You can click on futures or anywhere you want to. Oh, I think I just closed that one. You can scroll down. You can scroll down and then you'll have... Yeah, we're on my screen, yeah.
Okay, awesome.
So 5ers.com, you just scroll down. Ah, there's Griff. You can click on the summer plan information. You go to the 2-step one, and you'll notice here's all of the ones with their information as well. So it is right there on the main website. So the differences between them, you'll have to click, for argument's sake, on CFD, 2-step, and then you can go and compare, for argument's sake. Let's go to 100K. The new one, this is the information on the new one. You have a max loss of 10% from step 1. You have a 10% profit margin that you need to make for step 1. Step 2, 10% maximum loss, 5%, so a total of 15% across the 2 accounts. The cost is $491. You have 10% for scaling, and it scales up until $500,000. Every account on the high stakes one can scale up to 500,000. And then you need 3 profitable days for scaling, as well as 3 profitable days for you to pass the account. The difference with the summer plan 100K, let's take the equivalent 100K 10%, 5%. You don't have the profitable days at all. What you do have is consistency, but that's only once you're funded. So the account itself still has the 10% maximum loss, 10% target for step 1, 10% maximum loss, and 5% target for step 2. And then you need 10% for scaling. There's only 4 scaling. It's from 100 to 125, 125 to 150. Well, technically 3, 150 to 175. So 175 is the max scaling for the 100K bootcamp account. It costs for this one $149, but there is a payout cap of $2,000 per payout cycle, which is 14 days. So one account, maximally, you can get $4,000 payout every month indefinitely. So it doesn't matter if the account scales, the payout cap stays $2,000 after the profit share. So you need to make $2,500 in profit amount in order for you to get a $2,000 payout, and you can have that every 14 days. So this account requires you to have consistency once it's in funded, which means that it's a 50% consistency rate. When you look at your total profit made in the account, you have to have that at least in 2 trades. You can't have it in 1 trade. The consistency requires you to look at your total amount of profit that you've made and divide it by the amount of trades that you've taken, and then that amount must be below 50%.
But it's per day, though, isn't it?
Yeah,
Not
it's per day.
trade. Yeah.
No, it's per day. Yeah. So it's consistency per day. So whatever profit you made on that day cannot be more than 50%. So if you had one trade on the day and all of your profits from the day is from that one trade, it's all of your profits comes from a single trade, which will make this 100%.
Okay.
So you need to do
that makes
two
sense.
trades at least.
Yeah.
You need to make two trades at least on the day for that profit, so that your profits are split into the amount of trades that you've taken on the day.
Yeah, so at least two 50-50 trades, or ideally you'd probably do 3 trades so that you're not at like 51-49 or something like that.
Yeah, so the idea is like if you have 2 trades and one is 60%, let's say it's $1,000 that you made on that day, and the one trade is $600 and the other trade is $400. If you were to average it, you'd be around 50%, but still the 60% of your profits of the day is from one trade. So your consistency would be 60%. So the best would be to have 2 $500 trades for that $1,000 to get it to 50%. So that's the consistency. Myself personally, I think this is the best account in the industry. Best, absolutely best.
I think so. Like with the price as well, I think it's really good. I would love if there was scaling for like the 200K, but understandably. But that does clarify that for me as well. I thought it was like per day, like total profit from one day's trading, not the individual trades of the day.
Yeah, individual trades per day is the focus point here. So the thing is, if you look at the scaling, 125. Okay, so let me just give you a scenario. Why I think that this account is the best account in the industry. There's a lot of people that's going to look at the payout cap and say, oh, this is horrible. No, this is not a bad thing. All right. So because the account is capped in terms of its payout, it means that when you're requesting a payout, it is less likely that you would ever be said, look, we're not going to give you a payout. Not that the 5ers is like actively trying to prevent people from getting payouts or anything like that. It's every trade or every account is being scrutinized to make sure that you are not doing prohibited trading practices whenever nefarious trading practices. The lower the payout cap in this case, like $2,000, you can basically ensure that you're never going to have a restriction at all. Bar you trade with the right, you don't trade like prohibited practices. Yeah. If you look at the amount of risk that you can take on this account, you can have minimal risk. Let's say 0.25%, which is $250 initially. Have a 1 to 2 to make $500 on a trade. You just need 5 good solid trades. This is now the assumption of all of them being winners for you to get to your payout amount. So psychologically, you're never going to run into that issue of, oh, I'm over leveraging or I'm over risking, because there's no upside to over risking. Mm-hmm. There's just no point in doing that, because you can slowly build your way from low risk and basically have very, very, very little psychological impact. Because, I mean, if I'm going to be risking $2,000 to try and make, I don't know, $4,000 on a regular high stakes account, yes, I can get a $4,000 payout. But if I'm not used to risking $4,000 or $2,000, that's going to psychologically impact me. It's going to be like, ooh, I don't know. It helps with that psychological aspect of it. And the thing is, you can have up to $600 worth of accounts on the summer account side. So if you have 6 100K ones, you can have a maximum of $12,000 payout every 2 weeks with minimal risk. Minimal. If you had to make that same $20,000 or like $12,000 on a singular account, which is basically the price of all of these, let's say 2 accounts, you still have to do 6K, which is 6% of the account's balance, just to get that equivalent payout per 2 weeks. My mind, this is just low risk, high reward. It's amazing. In my opinion, I want them to keep these accounts forever.
I would like to keep them as well, just as long as don't get rid of the others. Also, I did pick up the 200k today, so
Nice.
yes.
How many summer plans have you got so far? Are
Just
you
that one
qualified for Pro
so
Booster?
far.
Just one.
Sorry.
Just one so
just
far.
that one so far. Yeah, I was trying to figure out like a better copy trader before I got all the rest because I've had problems in the past, and I've literally had, you know, like 5 funded accounts just die in one go because it's like disconnected, and then it's such a pain having to then run them all back through, that kind of thing. So I didn't want to do that until I'd actually sort of figured something proper. But yeah, I think I might get a second 200k as well. And then
How many 100ks have you got, LJ?
None so far. Of the summer plan.
Of the summer plan.
I've only got the one 200k.
Okay, so there's 3 ways that you can get to maximum allocation. Maximum allocation with the summer plans is 600k. So you can have 2 200k accounts, which brings you up to 400, and then you can have 2 100,000. So you can have 4 accounts for a maximum of $600,000 in initial allocation. Other option is you take 1 200 and you take 4 100k accounts, which will bring you up to that same 600. And then the last option is you can just have 6 100k accounts to get you to your 600k allocation. So make a decision. So the only thing that I would say is go and look at. All right, maybe
There's
if we
the
put
other benefit stuff, right? As well, if you get the 6, like
there are benefits with the boosters and stuff like that, but there's the 200k is not a ×2 for the payout either. It's capped at 3,000.
Yeah.
So if you take option number 1, which is 2 200ks and 2 1,000 or 100k accounts, the maximum payout that you can have per month, maximum per month, per 2 weeks or per 4 weeks, let's rather say, is 20k, because it's 2k, 2k, 3k, 3k. So it's a total of 10 every 2 weeks. All right. If you take 1 200 and 4 100s, you can have a maximum of 22k a month, which is 11k per 2 weeks, because it's 2k, 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 3k. And then if you take the 6 100ks, 6 accounts, you have 24,000 that you can pay out maximally every 4 weeks, which is 2, 2, 2, 2, 2, 2 for 12k every 2 weeks. So take that into consideration. But if you're somebody that doesn't really care about that and you just want the least amount of risk to reach those payouts, the 200ks are great. The 100ks are also great, because you'll be risking less relative to how much you need to earn in order to get a payout. And the question that Raphael asked here, do I still get to request a payout even if I don't get the 2k? Yes. So you have a minimum amount that you need to make in order to get a payout, which is $250. And then the maximum that you can do is 2k. So you can be anywhere in there. If you make 1,000, you can request a payout. If you make 800, you can request a payout. If you make $2,500, you can request the maximum payout. So just remember,
Yeah, I like. I'll probably go with the 200ks, even though I understand, like, yes, the technically the max payout per cycle would be lower. I work better with bigger numbers. Like, that's what I've been used to trading for so long. It's just more natural, more intuitive. Like, I just, punch everything in. I'm like, okay, cool. Rather than having to, like, reconfigure it down to here. And yeah, some people get the opposite. Obviously, as the numbers go bigger, they wig out more. For me, as they go up, it's more calming. If anything, oddly enough. So it feels more natural, more normal. I did have one other question though, with the 50% consistency.
Sorry guys, before you continue, I quickly gotta make a move. It was a pleasure, Buyu, and you guys again next week probably.
Thank you very much, Dirk, for assisting.
Thank you.
Once again.
Dirk, as well. You're still in the background. I am also long gold, just by the way. So there you go. Yeah. Anyway. Yeah, it has.
Cheers,
All right.
Doc. What was your question, LJ?
Yeah, so with the 50% consistency rule, say if you have a trading day that then doesn't meet that 50%, is the profits or whatever excluded, or like how does that work?
No. So it will be more difficult for you to request a payout. What you need to do then is you need to bring back that daily one down to 50%. So what they then look at is they look at your account in total and they see whether or not all of the trades that you've taken falls within that 50%. So what's going to happen is you're probably going to have to make more than 2.5K to get that maximum payout. So you might have to make, I don't know, like 3.5, maybe 4K just to bring your, maybe let's say in that case it was 60% back down to 50%. So
yeah, that's what I was wondering, because say you got let's just use the 14-day cycle. So you got 10 trading days. Say you had 8 days that fit within the 50%. What happens to the other 2? Like, are they just excluded, or like you can't withdraw that portion of
let me find out exactly what is the wording of that, so I can give you the exact answer. But from my understanding, they will then look at all of the trades across your account and look at those 50% trading days to make sure that they fall under that. So don't quote me. Let me find out for you, and then I'll give you the right answer. Okay. Right. Yeah. And then yeah. Sorry, Boo.
I was going to say, just to clarify, can you get these accounts, so the 600K and summer plans, and also high stakes accounts?
Yeah, they're completely separate. They're completely separate. So you have the summer accounts, which is allocated to 600 maximum allocation. Like you can have them. You can still have your regular high stakes accounts as well. But remember, the high stakes accounts still have their own limitations as well. Like if you have a 100K high stakes, you can't have a 50. You can have 100, a 20, and a 10, those rules still apply. But the summer accounts is its own thing.
Yeah, I like that, because I want to get the I want to have the regular high stakes up with the summer ones and run them together. It's really nice. I like it.
Rawfar saying, sounds to me like the standard account without the consistency stuff is much easier. It is not. Because the high stakes accounts requires you to have 3 profitable days, whereas the 100K summer accounts, the 2-step ones, you can literally pass that in 1 day, because the consistency only comes into play once you're funded.
Yeah, so they're not easy. They're just different.
Yeah.
And now, the summer ones you could pass in 1 day. Obviously, not going to recommend that.
Not recommended, but like
you can.
The minimum that you can pass a high stakes account is 6 days, because you have 3 days for phase 1 and 3 days for phase 2 that you have to make your profitable days. So that's a week and 1 day. Whereas with these summer accounts, you can pass them in 1 day. Even the phase 1 has got a 50% consistency on the evaluation, the 1 step. But if you have 2 trades in that day, both are equal to make the 10, let's say I have a 5% and a 5% trade on that day, you pass the account.
Yeah, so, or I'd say do 3 just to be safe. So you can even go like 4.8, 4.8, and like 0.4 or something,
but like the point being, the argument being that you can pass them all in 1 day.
Cool.
So if it depends on what you deem to be difficulty, like what is difficult. You still have the exact same profit that you need to make across them, 10%, 5%, or if you're going with the classic ones, 8%, 5%. So your target is still the same. Your drawdown is still exactly the same. You still have the exact same 3% daily drawdown soft breach. The only thing that's different is the profitable days. So, yeah. And then obviously the payout cap.
And to point out the obvious as well, there's a vast difference in price between a 100K classic account, classic 2-step, high stakes account, and the summer plan. 100K 2-steps account with a 10% profit target is $491. That equivalent account on the summer plan, and this is without any of the discounts you can get at the moment, code ICT if you want to help raise money for St. Jude Hospital, that equivalent account would be $149.
Excluding altogether the
withdrawal
affiliate codes.
Withdrawal cap.
Yeah,
as well.
excuse me.
Yeah, and the affiliate cap. Yeah.
So you're looking at roughly $150 versus $500 in terms of cost for a same size account.
Side thing, Rich. I don't know if you know or have any idea. With the ICT code, is that still active?
I believe it is. You can use any affiliate code as well. It doesn't have to be the ICT one.
Because I think it. I saw a lot of people saying it's been changed to just first-time users now. So I was wondering if it has been changed or if that's like an error.
I have zero information about that. I've not seen anything about that. But you can use any affiliate code.
Yeah. Yeah. Sure.
Yeah. If it's been changed to that, then I bear no knowledge of that.
It is not. Yeah, so it's not active anymore. It is just for first-time users, the ICT code. So if you've already bought an account before, you can't. It won't work. It has been changed. I just got word.
Okay. Cool.
Yeah.
Okay. If you do have the starter booster, you do, I believe, also become eligible to be upgraded to the 5ers affiliate program. So if you are not already on that Real Void, aka Lost to Justin, you can, if you want, start getting your affiliate commissions from that, on top of your already exclusive sessions with Will.
That's an interesting thing. I can only imagine people wanting to sit with Will and then Will being like, "You're a great trader," and he just boosts you. Like, you just feel amazing after having a call with him.
That'll be one reason just for me to like pick all that up, just so I can have a 1v1 call with Will and just be like, "Yo." I could just literally like pick up the phone and talk to him anyway, but
yeah.
I'll just turn up and under some pseudonym and just give him some grief.
Elite quotes, it is 50% consistency rule, max profit in day. So it is the daily profit is not allowed to come from a single trade. It needs to at least come from 2 trades so that you can have a 50% consistency rule. So it's very simple. It's not as complicated as people make it think. Like, for argument's sake, Alvin saying it is quite difficult to arrange. I honestly don't think it's difficult to arrange at all.
It just means take 3 trades, right? If you $1,000, you make 333, 333, 333 averaged, right? Then you're under it, right? If you make 501 and 499, you're going to be slightly over 50. So it's pretty much just take whatever profit you're doing in a day, try and split it over 3 different trades throughout the day. That's the safest way to do it.
Yeah.
From what I'm gauging, essentially.
Yeah, exactly this. And that's exactly what I'm doing with mine. I have $250 in risk per trade, and I have a $500 cap for every trade that I take. So, yes, slippage sometimes happens. Yes, commission. You can have, like, well, but NAS doesn't have commission on CFD, but in that case, it's just my profits are 1 to 2s every single time.
Yeah. And do not forget, each payout cycle is 14 days. So, you have 14 days within to reach that 50% consistency rule. And I was going to say something else, but it just slipped my mind what I was going to say. So, blah, 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 blah. You have 14 days to reach that consistency rule. You can split it across multiple days, and you don't have to take the $2,000. You can take a payout for less than that. And I remember a question earlier asking if you have to reach that 2,000 target. No. If you lock in a payout, I think the minimum payout is $250.
Yeah.
So, even if you were to do $100 3 times, you got a payout. Done. The 2,000 is just the max amount. 250 is the minimum.
And then you get refunded on the third payout.
Yeah.
As well. So yeah.
So yeah, you 70% of your initial payment will be paid out to you once you've had your third payout. 20% will go to hub credits, and then once you reach funded, and I think 10% when you reach stage 2. Can we just get like a confirmation on that one? It's on the, I think it's on the summer information there.
Yeah, I'm just trying to go through the FAQs now.
Yeah, wait until you find it. Frank, yeah, need your commission. I think Dirk will be debiting you for that trade because he held onto it into the CPI. So I think he got taken out.
Vishu asking, can you take some trades across summer and high stakes account? So I'm assuming like you're talking about copy trading from one account to the other. Yes, you can.
Yeah.
I believe there is a limit across copy trading, but this is only if you're like doing major numbers. So I think 500,000 is a limit you can have a copy trading across all accounts at the 5ers.
Yeah.
So you know, if you're one of the big boys or big girls or big person in general.
Big person in general.
Big person. Actually, no. Okay, shout out to the little people as well. I mean, you know, I'm just digging. I'm just digging myself into the whole firm, aren't I? If you are an existence that has a conscience and are trading 500k or more in funding at the 5ers, then that is the limit in terms of copy trading. So, for instance, you have 600k worth of funding, then you're going to have to split up how you do, make sure you're not copy trading on 500k or more.
Yeah.
I think I got myself out of that nicely.
No, you did. You pulled it back. It's fine.
Yeah.
It's all good. By the way,
each $500
hang on.
profit on the same day, does this qualify for 50% consistency rule or on 3 individual? So if you have 3 trades on that day or close enough, you're well within the 50% consistency. You take the amount of profit that you've made and you divide it by the amount of trades that you've taken. And then if you get to 50%, then you're good.
Yeah, so 1,500 divided by 3 trades of 500. Obviously, each trade is going to be 33.33% recurring each. So that's lower than the 50.
That's under.
So you're good, yeah.
Yeah.
No problem.
And if you are not sure, if you go to our FAQ section, there is a place in the summer plan where you can check how is the consistency calculated. You can see the formula there. It's fairly easy to calculate. So if you're not sure, feel free to go to our FAQ section. We've got it all there.
Yeah. Frank also saying here, LJ, do you think a re-entry of the same trade, if we're talking about the short NASDAQ trade, I got to say, I do agree. Like, I am short NAS right now. It kind of looks bearish. I think we could completely fall out. Since we got that kind of like double top earlier on, I think we're kind of looking down towards 29,560 or so. So I am in that short right now. So I do agree with that, Frank.
What time frame are you looking at?
Time frame for the trade or just time frame in general?
Time frame in general.
Well, I mean, I'll always scan across like 5 minute, 15 minute, 1 hour, 4 hour. I'm seeing that on quite a few pairs. Like on the higher time frames, stuff looks a bit bearish. We just seem to want a bit of a retracement. Here, I'll show you. Oh, my screen's not there. Sorry, it's my bad. Here we are. Yeah, so this was that small trade yesterday. We were looking for a bit of a deeper drop lower. Then I just got out pretty much at 1-to-1, just about, before the CPI. I then took another long through here. I had on a personal account. I got tapped in once the CPI broke. But yeah, now looking for pretty much a pullback down through into here. It kind of seems like we could fall out of bed. So let me just get rid of the Kalman indicator for a second. It's a bit easier to see, but yeah, down into this sort of cluster through here. This just seems very lackluster to head higher. Lower highs.
It is a little confined at the moment.
Yeah, I would have liked to see us actually push up from here, but I would have wanted to see this kind of level through here hold and then actually push higher to the CPI highs. But we're just not getting that. So I'm taking that. I've got this stop up here. I'll actually just, what am I doing? Just put the trade on the chart. So I got in a bit earlier just over here and sort of looking at something like that.
Okay. We do have a symmetrical flag on the 4-hour right now. Struggling to break through, what was this? We wicked above the 10th, Monday's highs, but no real follow through. So
yeah, and so this is where on the 4-hour as well, when I do go to those higher time frames, it looks like we want to pull back to this like 50 moving average on the 4-hour. Basically by the candle close cluster here after we pulled up from the wick lows and then drove higher. It just feels like we want to roll over, have a bit of a dip, and then decide sort of where we're going.
Another thing to look at, go back to the 4-hour, LJ. If you look at the price action around the 15th of July, the 10th of July, and the 6th of July. So
those
you see them on the left-hand side, more towards the left.
Oh, July, sorry.
Yeah. Go up toward the top. Yeah, there. Those ones.
Those equal highs, yeah. That's what I'm seeing on my chart.
Really struggling. So we're at a reasonably strong area of resistance. We've peaked above and then volumetrically pushed lower on, what was this? Friday. On Wednesday, the 5th of August. So we've really struggled at this area to gain some sort of traction pushing higher. So really struggled. So you can see it here.
Yeah. Seeing the same on my chart.
Very, very, very much a struggle to try and push above that zone. So we have, I don't know, if we're going to break out, it's going to break out obviously to try and test these highs here, I would think. But if it doesn't, there is quite a bit of reactionary points. Like here's one.
I think
here's one.
As you're marking that up, I think this is exactly right. Like some of the so the lows that we had, that's where Leopold Aschenbrenner got like wiped out. You know, Citadel bought his positions, that kind of thing, and we've seen the biggest weekly gains in all of those pairs for more than a year from this run higher. So I think it just seems like there's a bit of profit taking, a bit of froth. We had some capitulation around the Nvidia stuff the other day. So yeah, I don't think we're set for new all-time highs on the NASDAQ. You know, obviously S&P's been doing very well. The Dow's been doing better, but I think, I do think we need that pullback on the NAS right now. It just seems very lacking confidence. Like there's nothing wrong, but just lacking conviction, lacking confidence. You got this, on the 4-hour, obviously the 50 moving average, and so of course that's going to be on the 1-hour, the 200 moving average, which is now climbing up right through here and about to meet those lows through there. So I've currently got the TP at 29,560, just sort of above that area.
Are you already in it?
If we've got conviction to push like beyond that, then I'll keep holding it. But
okay.
Yeah.
Yeah, I'm looking at a potential short. I'm still in a long. For me, I want to wait till the 4 hour FEG is inverted before looking at shorts. But definitely seeing that big band of resistance, those equal highs here. If I go down to the 15-minute, we have a bit of a low. Let's see if I can zoom that in for you guys a bit. High, low, higher high here. Although that being said, again, I don't like to trade necessarily, once when we're at the equal highs. I like to see it invalidated. So, just below those equal lows at the bottom of the FEG, that's where I'm moving my entry point. So for me, I'd be going short around about a hair with a stop loss just above there, targeting this level here, although recognizing that it might try and bounce off here. So I'm still in the longs. Hasn't quite invalidated for me yet. Very much could do, but
it finally closed the trade.
Oh, nice.
Yeah. I think support did something now because I could close the trade. I've been clicking the close button the whole time.
Yeah,
it's fine.
I had the same troubles the other day, Rich. Same with some of the levels where it had the OCO, like it went through it and just. So yeah, like you highlighted before, it was some sort of universal problem or something.
Yeah.
Yeah, I think your trade is like plenty safe. Obviously, it's a swing trade. Like you've got so much room. You're right to down here. Okay? We're definitely not coming down.
Is it me or is it LJ?
I think it's the screen. LJ screen has gone off temporarily. It's gone to black now.
Yeah, and his camera is also just frozen.
Yeah, and we can hear you.
Barely hear him. I can barely. It's like very robotic.
I
think, yeah.
Okay. Well, we can hear you. We just don't have visuals on your screen at the moment, or on you, for that matter.
Yeah, it's showing that you have internet issues. Yeah.
Okay.
Nice.
But
I wanted to.
Should we go over some USD pairs and gold?
Yeah, we can. Okay. Yeah, let's do that. Do you want to go through gold?
Yeah. So weren't talking about gold just not long ago, so I'm not going to go too much in detail. I am seeing a potential equal low forming with the bottom of this wick, which is 4364.17, and this wick, which is 4366.23, so just about less than 2 difference, if it were. So difference between there and there. If I go down to the 15-minute, so not quite in it yet, but seeing a high, low, lower low, and looking for that to be invalidated. So, I've got a long order here with a stop loss of 4355. Again, that's actually a much better risk to reward trade. I wish I had waited for that and tried, instead of trying to trade the continuation like an idiot, which is not my strategy. But yeah, I tried to trade the continuation. I got cooked. If it goes through here, it gives me a bit more confidence that gold is heading higher. And what are your thoughts, Rich, before we move on to the USD pairs?
So initially for myself, I thought gold was going to do a bit of a pullback. If we go to my screen. So this is gold. What we had was, if this is the 4-hour information here. So we had this wick here, which is this. and the follow-up candle closed below the previous one. So we started presenting with downward price action, which then eventually dipped below this area over here, which was the lows of yesterday, and then also the low of rollover as well. We had this very long wick here. I'm assuming that this was CPI.
CPI, yeah.
Yeah. So with CPI, we did nothing. We got to the highs of yesterday, and we could not push through. So in my mind, I wanted us to get back down to this area over here. Because this wick over here, we'd already taken it during the Tokyo session. So I wanted price to continue lower. So I took a sell. So I was in a sell this morning for that. So if you just look at the 4 hour with these candles over here, this candle to me presented the idea that we were most probably not going to sweep these highs again. Because when we reached the highs, there was no follow through. So this follow-up candle here, this 4 hourly candle, which just closed now, we're a little bit flat right now on the lower time frame, but there is a potential for us to continue going a little bit lower, trying to sweep these lows over here, which was Tuesday's lows. And if that gets swept, we can potentially look at Monday's lows of the New York and London session. That's if we continue going lower. If we don't continue going lower, the idea would be that we try to do another test down here, fail to close lower, and then start picking up, sweeping these highs on our way up to try and test the daily highs. That's what I'm looking at. But remember, lower time frame, higher time frame. On the lower time frame, the sell that I took was over here, and I took it somewhere to down here and then closed the trade. That was roughly when my internet issues really peaked. Lovely. So as it stands right now on the lower time frame, we're looking very flat. So we're kind of stuck in this area over here.
Yeah.
It looks like it's bouncing up and down, but it's very flat. Like what is this whole range? So the whole range, let's go to there, is 18 points. So 18.15 points, give or take. And we've been stuck in this area now for the better part of about 3.5 hours. Well, it's more. It's almost 4 hours. So 3 hours and 45 minutes already. So struggling, doesn't quite know where it wants to go, in my opinion, just yet.
Yeah.
I mean, I can see this reaction that we had right here as a potential area, like a very, very nice area, because it falls in line with all of this. So you had yesterday's New York lows, you had the rollover low, you had a wick reaction which tried to push up, you broke through and consolidated, tried to push up again, and then volumetrically started pushing lower on this 5-minute candle right here. So this is that I'm struggling to push higher. I pick up volume with these volumetric candles. I try and break up higher. I fail and then volumetrically push lower. So we can potentially come back to this area over here and see if we're going to have a similar reaction or even a slightly larger section like this. So price will make its way out there, and then we'll see if we have that. No, I can see you now.
You're very
fuzzy. Frozen.
This
to me, you're
so
completely
weird.
Frozen.
It's working perfectly on mine. It took a long time to load into EV Mux. I don't know if this is an EV Mux thing. I don't know why, though. It's very odd because the rest of my internet is working.
Your connection is showing on my side as unstable. It had a pop-up saying your connection is unstable.
Okay, look, I'll try and figure it out and come back. Sorry, guys. Everything looks completely fine on my screen. If I could take like a recording, you'd see like I can do screenshot, but yeah, I don't know. Okay, I'll try come back. Hang on.
I was going to ask you, LJ, have you got anything running in the background?
No, just normal,
any updates
like,
running? Any like
no.
anything that could potentially be using up your bandwidth?
No.
Yeah.
Nothing.
The audience
No.
are also saying the voice is fine. It's just the picture that's lagging.
Yeah,
And he's
no.
comparing you to a Minecraft character.
I think Minecraft characters have more definition.
Okay, I don't know. Maybe I'll try just restarting my PC and see if that helps or something. I have no idea because everything else is working fine. Internet's working fine. There's nothing downloading. There's no Steam updates or anything random like that. I have no idea. Give me a second.
Awesome. Gold, like I marked out here, is that area of interest that I have where we had a bit of a struggle. This is on the 15-minute. We have a base, meaning the movement that originated off of this broke these high swings that we had here on the previous day. So to me, this is a base. When price tried to come back down to it, it failed and then even pushed higher, breaking those bases. News just came back in and wicked it. So this was a base. It became an area of interest. So it became an established zone. So established zone to me is when price comes back to an area and has a similar reaction to it had the previous time. So in this case, this pink little box is now, in my opinion, an established zone. So the question now is whether or not it's going to... So established zone can be a support or resistance. It doesn't matter. It's just an area of interest where price had a reaction off of and then reacted yet again. So in this case, we eventually broke through. So broke through, retested, and pushed lower. But this volume that we're getting here, so this one leg that we have here is larger than any of these previous attempts to try and push price up. So multitude of strong bullish candles relative to the previous bullish candles that we had. So in my mind, kind of in no man's land at this point in time in the lower time frame. I would very much like to see us respect this area and then attempt to push lower. So down to this area over here where we have a bit of an order block. Would love to see that. Also a reactionary point as well. So I would have loved to have seen us sweep this and then potentially try and push up. But as it stands right now, it is in no man's land for me right now. Notice on the weekly, if you go over to the weekly, last week, very, very bullish week. And we're now already on Thursday and we've barely done anything this week. There is a potential that we can have this as a rounding where we close, maybe on Friday, tomorrow, roughly where we are now. And then come Monday, we either gap a little bit lower, try and fill that gap, and then close the week out maybe as a bearish candle.
Potentially. I mean, I'm
not sure.
I'm just not so sure on price anymore because it's been so lackluster despite all the big, two of the big three happening. It's this week's just frustrating.
Yeah, I've had the similar week as you.
Yeah.
No internet, no power, just no trades. I had a trade on Monday, which ended up being a losing trade. I had a winner later in the day, but then just ended. It didn't end up. I think I ended up closing the trade a little bit earlier. And anyway, so I had a losing day on Monday. Tuesday, no trades. Wednesday, no trades. Today, thankfully, had a winner. Just kind of like pushed me up again. But the futures one, that was unfortunate because instead of it being... where's this tool? Instead of me closing out at, give or take, $500 and something, I closed out for $174 because I couldn't close the trade. So,
yeah,
what can you do? What can you do?
Right.
So I want to reset. I want to reset for the week.
Yeah. Let's just forget about this week. Next week will be perfect. This weekend you're gonna touch grass. Hopefully, if you didn't already celebrate the anniversary, then you get to do something nice. Over the weekend. And next week, come back fresh.
Dude,
Power
I'm
supply
gutted that I
back and
missed the
everything.
1v1s. I'm gutted because so much planning went into that, and just on the day it was a rush because I can't access anything. Remy and yourself and Will and Rich and everybody that was like running the show on Tuesday and yesterday just did a phenomenal job. So very thankful for you guys. You know, rocking up in style.
Yeah. When is the next? So the 1v1s, are they going to be a regular thing now? Every 2
Yes.
weeks?
Yes.
Or Yep.
Yes.
Okay.
Every 2 weeks. So we alternate. 1 week is the 1v1s. 1 week is trivia. 1 week is 1v1s. 1 week is trivia. So we had the 1v1s on the 11th. The next one's going to be on the 25th.
Okay, and so that means the next trivia is going to be on the 18th?
Yes. Yeah, it's either going to be the 18th or it's going to be the 20th. It depends on what kind of like news events we have on the day. Like, let's say hypothetically, because I haven't checked it now, if we had a high impact news on the Tuesday, there's no point in doing the trivia on the Tuesday because we'll be talking about the news event. So we can do it on the Thursday as an example. So I want LJ to be there for the trivia because the trivia was more LJ's thing. So much better. Much
Amazing.
Better?
Yeah.
Good?
Yeah.
Okay, we're good.
Yeah.
I have no idea what happens, but it seemed restarting worked, so go figure.
Bandwidth was locked up.
Just quick look forward to what's on the new red folder on the news next week. We have on Monday CAD CPI. On Tuesday we have claimant count change
next week
for GBP. On Wednesday we have GBP CPI and FOMC meeting minutes, not FOMC, just the minutes. And on Thursday we have unemployment change for AUD. And those are our big red folder news for next week in our flash news segment. In regards to how that affects trivia, guys, be prepared. Be prepared. You've been given a warning now. Either next Tuesday or next Thursday, we will have trivia. Have a chance to win a prize. Make sure you're brushed up on all your knowledge. I don't know if Baby Pips is still around, but you know, I want to check out Baby Pips. The 5ers FAQ section.
I just want to mention that Justin won an account with the 1v1s and he won an account with the trivia. So maybe doing well in trivia is kind of like a cornerstone thing for you to do well in trading as well. I don't know. Like maybe having knowledge in trading plays a vital role in you actually making money. I don't know.
Yeah. And I don't know if Justin is in the chat, but we do have another winner from this week's 1v1s in the chat. It's Vinny, 38. Everyone leave a like in the comments for him. Absolutely brought it on. Round of applause. To take the defeat over Samir.
Yes.
What happened there? Okay, so I didn't see any of that. I just had people give me the result and say, look, Vinny won, Justin won. What happened? What was what did Justin do? Give me a rundown.
He went heavy on some trades. Then was slightly up. I was also up. I got into a pound trade which dipped much lower. Also had some. There's some other things I'll have to talk to you about later with it. But yeah, basically then I was like margin locked with the pound trades. Couldn't enter anything else. I exited my gold trade too early on a very small profit. He stayed in it. Gold then did come up. So he took that there. Then I entered in some other stuff later. We then had a news release come out right there. I had TPs on my trades, and he just had his open running. So mine, the news release, or it was like a headline came out, I hit TP, his kept running up here because he didn't have TPs on it. And then he was just skirted ahead. Yeah. So.
Good on him. What was his close P&L at the end of the day?
What was it again? He was almost towards the 5K there. I think it was like 103 or something. Something like that. I was then at 101.
Like 3K. It was 3K up, like 3%.
3K. Yeah. And then I was up 1,500. And then we had like 3 or 4 minutes left. so I like full margin some stuff to try and like catch it, and then ended up at like 200 profit or something, whatever it was.
Ah, okay.
Because it was on gold. Gold dipped down,
yeah,
and then gold
well
came up after.
Beat you.
But after the time frame. So yeah, dude, yeah, he got it. Yeah,
He took advantage of the moment. Congratulations to him.
Stitched up on the TPs. That is one of the things we were talking about this, how it can be good sometimes to actually leave TPs like open a little bit and just do like a mental TP. Is this me, Boo, or is this?
It says Richard's screen.
Okay, I'm just checking it's not.
So I'm guessing Richard may have just accidentally dropped off. Am
I frozen as well?
No, you are good. But I do. Oh, okay, awesome. He's back.
Okay.
Apologies. Yeah, my internet just dropped again. Anyway, I'm going to have to hop out, guys. I'm going to have to answer a few emails quickly just to kind of like sort all of the stuff out that's going on right now. I will be back in an hour, though, just to kind of like carry on with the segment. I'll be back. Yeah. Hey, Rich.
Yeah.
Bye.
Nice chatting to you.
I will also be hopping off soon, but before that, I'll be back. Well, before that, I do want to give a shout out to Vishu, who just said he has a suggestion for you guys. You can join one of our regular viewers on your show to help them in their doubts related to trading, and also would add a new dimension to your show. Well, actually, today we have an exclusive webinar with yours truly, who is in the stream right now. So if you check out our Discord, there is an exclusive performance webinar with Rich where you will have a chance to talk to him about your trading doubts. We do have weekly Discord calls with him where he goes over trader psychology and various stuff like that, and open mics on Friday. So get involved in our Discord, have a chance to speak to us. It's more of a one easier to connect and talk because you can have audio. You as a audience member and us as those, we both have voice, so we can talk more easily rather than YouTube, which can be quite difficult because we have to read through all the chats and try and track a conversation like that. So make sure to get involved in the Discord. Check out the announcement that has been made yesterday at 5:28 or around 5:28 my UK time, and make sure to join our Discord. And on that note, I will see you in about just over an hour. All right.
Awesome. Thanks, mate.
Take care.
No worries, B. See you, man.
See ya.
I tell you, Rich was a flyby. It was like he didn't even say "love you, bye." He just was like "bye," like straight out. Yeah. Are you hanging on? Are you keeping us company?
Yeah, I'm hanging around. Yeah. Rich has had he's got internet issues. So just before he came on, it disconnected for him. My EV Mux also had a problem before where everyone could hear me, but my screen was frozen, everything else was frozen. So just be aware of that. Rich, something seems to be going on. Obviously, Rich's stuff is his own internet, but in case I freeze up or whatever, I'll try and be back. Just so you know.
Oh, good. But, I'm going to get my screen up and see how we get on with this. Won't worry about pulling it up just yet, but it's there if we need it.
Yeah. All right, cool.
Wonderful. Bring us up to speed, mate. What have we been cooking this morning? What have we been touching on?
A bit of everything. We were talking about the summer plans and that kind of stuff. We covered a few of the bits and pieces of what we're seeing today. I think Buyu and Dirk were talking about gold. Buyu's still in his swing trades from earlier in the week, but Dirk was definitely looking at these long gold trades. I did get in on this as well. I've now jumped out of this at this point. Other trades we're looking at is a NASDAQ short. NASDAQ just seems like it kind of wants to roll over. Looking at like the 1 hour, we've got the 200 moving average coming up. Same with if we go to the 4 hour, let's hide all this garbage. You can see it a bit better. We just seem very lackluster. We're kind of capped at these tops through here, near term. So it kind of feels like we want to roll over today. We do have PPI as well. That's something we haven't touched on just yet. Just a quick thing. Just like CPI yesterday came in right in line, I do expect PPI to come right in line today. So PPI month on month will be a touch higher. So we may see a bit more strength in the dollar from that overall. So apart from that, what else is there? I am in some euro dollar longs. I've been in from just down here after we had this sort of drawdown from the CPI, and then we've been languishing today. So this is pretty much just we've had one-way traffic from yesterday's news the whole day, so it's a bit of a mean reversion play. I also took this on the Aussie. Got in somewhere here, I think it was, and jumped out just now. There goes Rich. Wait, you're back? Okay.
I don't think I left.
You disappeared for me.
Okay.
I don't know if it's me or if it's for everyone else. Chat can let us know.
Yeah.
And you're gone again for me. I don't know if it's for everyone. I'm not sure what's going on. But either way, that's what I've been in. I did pick up the 200K summer plan today as well. So I've been trading all this stuff on there and going pretty nicely. I think I'm up 8.4K now so far for today.
Nice.
So,
when did you pick that up?
2 hours ago.
2 hours ago. Just a casual 4% in 2 hours, as we do.
I can show you the thing. Hang on. I closed that.
Just getting a little bit of feedback saying it seems to be on your side, but both of us are still fine on the stream at the moment. If you if you do drop out, I'm in at the moment, you're frozen for me, but I can still hear you. Worst case, I got my screen that I can pop on over here.
Yeah, all right. With my internet and all that kind of jazz, so I have no idea why this is happening overall. Let's try and make this a bit smaller so we can see. That's where we are so far today. So
well, you don't like red trades much, do you?
Not really. Nothing over $200. I don't like it.
Fair. So one thing I found is the larger the accounts, the larger the lot size. Like, it's very easy to get much bigger size. Just curious, if you pull yours back left, I'm kind of curious what volume you're trading on that. We're gonna dive into negative trading habits in just a minute, but I'm curious. That's not that heavy. I thought it would be. I thought it'd be bigger, if I'm honest.
No.
I appreciate anyone who just joined. That sounds terribly out of context. We're talking about LJ's volume. We're talking about how I thought the volume would be typically a little bit larger on that, but looks pretty good.
Sorry to disappoint, Rich.
Okay, I'll tell you what I'm going to do. I'm going to try and pull up my screen. Nope, I'm not going to do that. Nope, hang on. I'm going to try.
Is it playing up again? Is it? It's still doing it?
We have a screen. We have a screen, and all being well, I should be able to draw on this one as well. So if you can just let us know in chat that you can see this screen before we get too creative on it. So we're going to dive in a little bit to negative trading habits to avoid, but not just the theory of it. There's one thing I really like doing in the coaching workshops we do in the Discord is how to move from theory to action. So first of all, we've got to become aware of negative trading habits. We've got to try and figure out what's the kind of stuff that we do that keep us in that same kind of loop. So if I was to look at your trading account right now, what does it say about you? Because often a lot of traders, let's say for an example, let's say we're trading gold, right? We'll jump to the 30-minute time frame. and you've got just some random 2-candle directional trade here. This is your entry, stops on the low. And let's say you're targeting this high, but the trader constantly keeps bailing out of their trades and cutting their trades here. If I was to look at this account, I wouldn't know what your intention is. I would only know what you're actually doing on your account. Now, this is something that we see a lot on traders, that if you look at the account, it tells a story often about how the trader feels about themselves. Most of the time when we're trading from a state of trying to protect our identity in some way or another. Bit of a deeper topic, but we'll go into it in another section. So in whose screen is this? This is mine. If you haven't joined a Discord session, this is what it looks like. We've got these weird, funky green and blue candles because I'm massively colorblind. This is about the only thing that stands out to me. So let's get some feedback on the kind of stuff that negative trading habits that we would do. So for an example, one could be closing trades early. You've got your analysis and you just cut your trade off here. Market runs up. We feel like we're owed something. Then we start FOMOing in. Another one could be we see a valid trade. If we use the replay tool, could look something like, let's go back just one more candle. Could look something like this. And we just think, you know what, this looks awful. This looks absolutely horrible. I'm not going to execute on this. Now, in the performance coaching course that we created in the 5ers, I've specifically shown a video that talks through how to deal with this kind of issue. So, in my honest opinion, trading without data, trading without a spreadsheet, is going to leave a trader absolutely blindsided. So if you haven't seen it, in your Traders Hub, you click on Academy, you click on Performance Coaching, and in Module 3, you're going to see how I have tracked my data for the last 5 years. So I'm going to draw out a very crude version of a spreadsheet, just like this. Hopefully on Excel or whichever version you use, your lines will be a little bit straighter than this. And all we do is we fill in the date that we took the trade. In the next box, we would put, for an example, the pair or whatever asset it is that you're trading. In the next box, you can put direction, and then we will put SL size. Now, everything about this gives the ability for the trader to go back and look at the detail of the trade they took. So let's be completely real. Most people who are trading an account today probably won't be trading that account in 6 months, 12 months from now. So if you ever lost access to your terminal, which gives you all that beautiful trade logs at the bottom of the terminal, if you ever lost access to that, you're never going to know how you performed in the past. So when we record the date, the pair, the direction, and the stop loss size, all we're doing is we're looking at our valid trade and we're saying, okay, this is a valid trade according to my plan. So we can see today's date, and I'll actually fill one in. Obviously, it takes a lot quicker on when we do this on Excel or whichever spreadsheet you use. So let's say, for an example, we've got 13:08:26. I'm just going to put this a little smaller. It takes me about 30 seconds per trade to fill in. Hang on, let's see if we can adjust the settings on this. There we go. Pull this a little smaller. A little bit bigger than that. So we've got today's date. We've got the asset we're trading, which will be gold. We've got the trade direction, which is long. And we've got a stop loss size. We'll call it 116. There we are, 116. Now this gives me the ability, this column here gives me the ability to come back and check out every trade that I've ever taken in line with my strategy. Now here's the really cool thing. Let's say you're a trader and you're still in that practicing stage of your journey. That's me. I'm still a student of the markets, right? Might be trading for 8 years, but there's still room for improvement. This process has the entire system built into it, and I'll show you how. Let's say we look at this and say, this is our valid trade. We need to take this trade, and you know what? Looks awful. Looks a terrible trade. The fear kicks in, the FOMO kicks in, the greed kicks in, whatever it is, these bad habits that we have to navigate as traders. So many grammar mistakes. Yes, I am probably dyslexic. And am I going to apologize for it? No. This is my superpower. You know, we work with the tools we got. So this is the valid trade. Now I'm going to take this trade, but then all of a sudden, maybe the doorbell goes. Maybe I look at this trade and my terminal doesn't load. Maybe I can't open my position size calculator. Maybe I get an awful fill and I get filled up here. And I immediately close the trade because it just feels wrong. Whatever the reason. Now we're going to go to our spreadsheet, and in this column here, and just to add to the flavor, we're going to write the word actual and actually spell it actually correct. We're wrong. So you've got your actual result, and then you've got your real result. Hang on, this will be, I'll just put real and I'll put strategy. I'll stop messing around.
Yeah. Oh, I liked it. It was a very French spelling.
Mate, I'm still working on it on English. Once I get that figured out, I might move into French. So we've got the strategy column, then we've got the real column. So this column here shows us what did the strategy produce. Now we're going to assume that we took this trade perfectly with a stop loss in the correct place, and then the trade just moves up and does whatever it does. Now we're going to say for this example, hasn't quite hit 1R. All right. Let's say we're a 1 to 2 risk reward trader. Market comes up, hits 1 to 2. In this column, what we would write is we would write 2 or 2R, whatever the case. Now, here's the important bit. In the column next to it, this is the result you achieved. Now, let's say we skip this trade. We got a 0. Now, this sounds like a lot of work, but when you've set up a spreadsheet, which takes you 30 minutes, the performance course shows you how to do this, you end up with a process that shows you how to log every single trade, and it shows you the complete result of the strategy versus your result. So at any moment, you're able to look back and realize, how's my strategy performing? Now, after a few months, you might build out 70 trades, 80 trades, maybe 100 trades. And then what you get to do is you get to look at this column here. It might be -1 on the next trade. Maybe it made 2R on the next trade. But this is where you look at your column and you see that maybe this was a 0 because you skipped the trade again. Maybe this trade you took and you got the same result. Now, once we fast forward through 60, 70, 80 trades, we can very quickly look at the result in these columns. So we can see that this column here makes 3R. We can see that this column makes 2R. Now, if you printed this out in an equity curve, it would show you over time that the strategy is trying to produce this result. If you could just follow your edge properly, this is the result your strategy was trying to produce. And why? You've got the evidence in this column. These were all the valid trades you saw, but you didn't quite execute on it according to your plan. And that produces your real equity curve. And often what we see is traders, we only see this bit here. We only see the result in the account, and we can only say, what does the account say about the trader? But when you build a process like this, it shows you how healthy your strategy is, what kind of drawdowns your strategy has. It shows you what kind of results you're getting relative to your strategy. Because a lot of traders will say, Rich, I don't understand, what I'm doing wrong. I'm around break even, but they're not consistently executing. So if you had this column here, you can see there is a deviation in the strategy's results from the trader's results. Now, this is the most important column. It's this end one over here. I'll make it a little bit wider. And for those of you who have been in the coaching workshops, you'll know that this one is called notes. And this is where you write down the reason why there's a gap between these two. So for an example, it could be felt fear, didn't trade. Could be just a simple note to yourself like this one. This one could have been, give me a reason. What would be a reason that you skip a trade? What's a normal reason that you guys would skip a trade? LJ, what would be something that makes you go, man, this is a valid trade, but I'm not taking this. I don't want to.
Well, apart from not being at my screen or being distracted by something, I think, I've also had, I've been the max amount of trades I'm in at the moment, are valid reasons. But also just against my bias. So sometimes, I'll notice a reversal, but I'll be very stubborn and be like, okay, I want the market to go in this direction.
Yeah.
So even though this is my setup, I'm not taking the trade because I'm being stubborn and I am commanding the market to do as I will as King Buyu.
Okay. So the trade sets up. You look at it and you say, do you know what? Nah, I'm going to be stubborn. I think I know better than my plan, and I'm not going to take the trade. Even though your opportunity presents, you just say, you know what? Nah, I know best. I'm not touching this. Okay.
Yeah.
So it's like, I'm just going to put, thought I knew best. Now, this trade, we got the same result. So in this column, we could put good trade, held in line with plan. There we are. And I'll make this one a little bit bigger. Now, what we're going to do, we're going to put one more trade on here. And this trade also went -1. And we took the trade and we got -1. Now, we would also be able to include, this was a good trade in line with our plan, and we took it and we held it to our objectivity. And on this case, it was just a good loss. Now, this is where traders start to shift, because you're changing the focus from I made money to I did the right thing. Now, in trading, there are two different skill sets. Knowing the theory, all of us in chat, we know what to do, including how to spell, right? I'm still figuring that one out. But most of us in chat, we know the theory, right? We're here with our own ideas. If I threw a trade idea up on the screen, there'd be half of you that says, Rich, that looks awful, and the other half that says, looks pretty good. We all have our own ideas about what looks good, what doesn't. Now, there's a separate skill that comes down to how well can you implement your ideas. It's much easier to implement someone else's idea. If LJ says, hey, I got a trade idea, it's very easy to execute on that, because if it's wrong, LJ was wrong. But when it comes to my ideas, I've got to execute on my ideas. And there's a lot of pain, there's a lot of fear, there's a lot of identity that gets wrapped up in being wrong and taking losses. So we're reframing that through this process, and we're calling losses good losses, providing they're in line with the plan. So we would fill each one of these in for every trade that we take. It literally takes 30 seconds to fill in your spreadsheet. And you are building a workflow that shows you exactly how you perform as a trader. Now, we're going to take the highlighter tool, and this is exactly what I do in my column. When I get a different result to the strategy, I highlight this one. Let's get this looking proper. Let's make it red and see if we can make it a bit bigger. There we go. I highlight this as red. It means that there is a difference between the strategy result and the real result I actually got. So that means that my equity curves are going to start moving against each other. My account didn't move. My strategy should have moved my account. Whether it was a loss or a win, it was still, I didn't follow the plan. Next trade. We were trying to be king ding-a-ling on this one. We thought we knew best, and it went to stop loss. And in these moments, it's very easy to go, yeah, I knew I should skip that trade. But the brain doesn't have the recorded results on what was the result of the last 50 trades you skipped because you thought you knew better. So if LJ turned up and was like, nah, I know better, but he had no comparison, it's always going to be a gut feeling, which is okay once you get to your later stages of trading. But when you're still trying to figure out, does my edge work? Can I execute it consistently? We as traders need some kind of feedback loop. So this second trade here, regardless of missing a loss, has to be marked as red. We didn't follow the plan. We had a valid trade, it's set up just like this one here, and we looked at it and said, nah, this looks awful. I know better than my strategy. If you have a proven profitable edge, you've got to go well to beat it. Now, maybe you can because you've got a little bit of discretion as a trader, but you build the evidence. Now we're going to look at the next trade. This one was a 2-hour winner. We took it, we got 2 hour out of it. And now what we do is we take this one and we mark this as green. Hopefully we can see that. There we go. We mark it as green, and we do exactly the same on the last trade as well. Now this is a system that's unique to you. You back this up on USB, you've got this for life. This is yours. You lose your prop firm account, this is your system that tells you how your strategy performed, how you performed. And best thing about it, you can filter all this stuff by I knew best. And you can look at 30 of these trades where you thought you knew best. You filter them at the top and you can look at the results, and all the trades where you think going off piste or breaking your plan shows you that you are a better trader than your strategy. You look at all the good trades that you took and you turn this into a game of how many green trades can I take in a row where I just follow my plan. So we're changing the rules of the game. We're not turning up trying to be right on every trade, because our job as a trader is not to be right. Our job is to be objective. And it's incredibly difficult to be objective when the emotions and then fear and that greed and it all rocks up. And you get that little voice inside your head that goes, do you know what? You've taken one trade today, you've had a winner. You've got another valid trade that's setting up. Imagine if this loses, you'll give back all the profit. Why don't you just take it on one of your accounts? Well, that goes in the spreadsheet. Thought I knew best. And so at the end of the week, what we've got is a spreadsheet with maybe 5 trades in, or however many you take. And you can look so clearly and go, I am literally sabotaging myself for these reasons. I thought I knew best, and I had a bunch of fear that I didn't take the trade. And so we build this process so that at the end of every week, we can look at the strategy's results versus our results. Now, when you give yourself this kind of visibility, you change the game from a trader who's just turning up, hoping that your edge is going to work, thinking that you have a psychology problem, when in fact, you're building evidence to see whether or not your strategy actually works. This system I've done for 5 years, and as a result, I have passed many funded accounts and I've received many payouts. And it is the exact process that tells me my strategy has physically stopped working. Why? Because I can look at this column and I can see -1, -1, -1, -1. And I know how many losses I should take in line with my drawdown. And I know when I've reached a level that I say, okay, something massively has changed in the markets. And what it does better than that is it takes all of the emotions in trading of trying to be right. And it builds this idea here that, you know what, I followed my edge perfectly and I've been trading for 3 months this strategy and I break even. And it's exactly where I should be. That's a trader that you can back. That's a trader that you could look at and say, right, I'm going to start allocating capital or moving from a demo because you're trading well. But the trader who has no visibility of this, and I've seen 1,000 equity curves, and they often just go whack. And then the trader starts like trying to revenge trade, few small wins, max account loss or daily loss. And it's so common that if traders knew what happened in this moment or what happened in this moment, because they had a sheet that showed them, I got emotional. I didn't take this trade, and this trade was, maybe it was a winner. I didn't take it. And I'm going to be honest, I got massively emotional. So I revenge traded on the next. And it could have been that they over leveraged on the next valid trade, put on 5% risk, and then it didn't work and they hit their daily loss. So this sheet builds in everything that you did on a snippet. And when a trader builds this and says, Rich, can you have a look at my account? I feel like I'm not getting anywhere. I can very clearly see, do they have an edge that works? And are they following that edge? So 70 to 80% of traders will not follow their edge with consistency. And probably 90% of traders do not have this kind of visibility where they know how their edge should perform by hard-backed data. Now, the cool thing is at the end of every week, when I've got 10 trades in this column, whatever it is, I will go back through every single trade. I will rechart it up and I will go, yep, that was a valid trade. Yep, that was a valid trade. Yep, that was a valid trade. And I'm affirming that my data is correct every single week. It takes me 2 hours to do a weekly review. Welcome to the world of being a trader. If you want to be a professional trader, if you want to build a skill set, you've got to start by taking some kind of account of where you are within your ability to execute your plan and how good is your edge. LJ, can you imagine a business that just opens up and just rocks up and just says, yeah, we ain't got a clue how much we make, but like we sell stuff, we buy stuff, like there's a bit of money in the bank. Could you ever invest in that?
No, those are the businesses that have all sorts of problems. They either go bankrupt or they have tax issues or they can't pay their staff properly because 1 month the books didn't balance with the new orders of inventory and that kind of stuff. Doesn't work at all. So 0. Not good.
Which is the same when it comes to trading. Is we need to have a benchmark, like this column here, this strategy column. This is the result the strategy would have got if you were able to follow it correctly. And you know, if you worked on a production line, and let's say you were building lawnmowers, and your job was to build 30 lawnmowers a day, and at the end of the day you built 5, and there would be this gap between, well, we should be able to have an output of 30, but you're actually producing 5. So can you imagine if you had this same process to that? At the end of the week, you go, well, you should have put together 130 lawnmowers, and you've put together 25. We've got a problem here. Now, it's much easier to go, is it a problem with the process, meaning the strategy? Does the strategy not work? Or is it a problem with the trader themselves not, you know, are they having too many fag breaks? Are they swanning off, turning up late? Are they, you know, like...
Smoko.
Yeah, like
That's
a
what
bunch
we
of
call it here,
excuses.
Smoko. Yeah.
So it's as traders, we've got to build some kind of feedback loop that shows us whether we're actually following the plan. I see we've got a comment here. When recording data, we should add and miss trades to record only triggered trades. So if you're trading with limit orders, for an example, let's say that this is your trade idea and you're trading with limit orders, and the market comes in and just does this, and it misses your limit order and goes to the TP. Now, in my spreadsheet, when I used to trade limit orders, I used to leave this level here, but I wouldn't trade it. And I would record what happened when the data come back and it eventually hit this level. Did it go to stop loss and I'd done the right thing by pulling the trade? Or did it come to the level and then bounce and would have been profitable? So again, if you're trading limit orders, you can say, here, pulled the trade because it went to my TP without me, missed by 3 pips. So you build a feedback loop of 20% of my trades would miss my entry by less than 3 pips and go to 1-to-1. So that process there, I can tell you that because I built the data around it. So when I tested it, I knew what to do, because when I would miss a level, it was actually more likely that the market came back and would sell through that level. I'll give you some random example. Let's look at some WASI on here. Okay, prime example. We're going to use this replay tool here, and I'm going to go there. This one. So let's say we're trading a quasi, right? We're going to call this our break on the high. Came up, pretty much equaled it up there. And let's say our job is to say, right, market has come down, swung this low, ran all the stops on this low, trapped in the breakout traders to the downside. We're anticipating that the market is going to come back, print some kind of quasi. Here's our left shoulder, here's our head. We're anticipating some kind of reaction in and around here. We'll jump down to a 15-minute chart just to get a little bit more context around this. So market's pushed up. We're going to put a limit order somewhere in this box. Let's say we decide to limit order here. I think this trade will hit and win. Let's say that we put a limit order here. For an example, market comes down and this is our trade idea. Comes in and it misses our trade. Sucks, right? Now what do? Because the market pushed up and went 1.5 hour in profit. So in my testing and in my data, I would look at this and say, oh man, I didn't get filled. Like the market just missed my limit order. Now, rather than calling it a scam, I would be able to say, okay, how do I get feedback on this to know whether or not I should still leave my limit order on? Because nothing causes anxiety like more than just doubt and having missing information in our mind. So I could feel that out through data, through the same thing that I've shared. And what I found is that if I just missed my limit order and price sort of rallied up high enough for me to go 1-to-1, there was a higher chance that when the market come back, it wouldn't bounce again. It would often just go straight to stop. So I knew I had one shot at this. I had one opportunity at this. So we'll play it through, and it doesn't really matter what it does on this occasion because it's just one trade. But when you build this out over dozens and dozens and dozens of trades, and you have, let's say, a 0.3 expectancy at a normal entry, but a break even over 100 trades that were missed and pulled, you realize, okay, I was close to the volume, but I missed it. It's not going to be in my best interest to FOMO into this trade. Why? Because I have a negative expectancy. Like going into this trade with $1,000 and slamming it down when my win rate would be 46% at 1-to-1, I've missed the move. And so traders have got to work with their emotions and manage themselves. And it's a whole different skill set because when we miss moves like this and we can make $1,000, $2,000, $10,000, I mean, LJ just done 8,000 in the morning. So if he missed his order, it brings on this, I'm owed this money and I've got to get this money back. And so what we want to do is know at what points in the market do you have a probable edge where you can risk one and have a slightly higher expectancy than break even. So let's see what this trade does, just for argument's sake. Hopefully it doesn't pick up. No, we're going to say that we didn't get filled by the spread. All right, we're going to say that this didn't get filled by the spreads, okay, which now makes it even more tilting, which I love this, because the amount of times this would happen to me and I'll be like, I swear it's personal. I swear it's personal. So we're going to just knock this one down for any confusion and say we didn't get filled on this. And we're going to just watch the market and see what happens. So the market has gone up very clearly to what would have been 1 to 2 risk reward. I'm done with the trade. This was the move I was trying to catch. I didn't make the trade. No problem, it is what it is. We're going to see what happens. We're going to run this across. And I would use my data sheet to record what happens in this same level. So we're moving from the idea of like bad habits in trading to bringing our awareness to knowing when you're doing something that doesn't hurt you. Doesn't help you. Like if you saw, like, okay, that's a gross analogy. I'm not going to use it, but you wouldn't typically choose to go through life physically hurting yourself most of the time. Like if you saw like a broken bottle on the floor, you wouldn't sit there and go, I'm going to grab hold of that with both hands on the sharp edge, right?
It's like jump onto it.
Yeah, like, but as traders, when we're trading the market, it's very easy to act in a way that feels like we're either protecting our identity, getting back something that was owed, seeking immediate gratification, or just avoiding pain. But those emotions aren't going to help you act in a way that has a profitable edge and a sustainable edge over time. So when you build out the data and you're using limit orders and the market just misses, you go to your spreadsheet, you put in all the details. So you go, it's like the 11th. You'd say the currency pair was GU. You'd put your entry price if you wanted. You put long, your stop loss size so that you could refine that trade idea. And then you would just record, hold this trade as it missed my order. And just even that information gives you insights. Could you front run that level by just a few more pips next time? And so you have all that data and you can go back and figure out, like, you're close to the volume, but how do you make money out of it? Now, when we take that and we put it into like an audit on a piece of paper, it is piece of cake to work through and figure out, okay, I've got this edge. It's not very good. How do I make it better? The data doesn't lie, providing you record it correctly. So we're going to say this was a missed and pulled trade. We're going to play it through and see what happens. And there we go. And we got a little bounce just here. Price pushed up to about 1R, straight to stop loss. And this is what my data supported over hundreds and hundreds and hundreds of trades. So when a trader says to me, prime example, as soon as it goes to 1-to-1, you must hear this quite a lot. Like, let's say you got filled on this trade here, right? Because you caught the bounce on it.
I was going to say, that's where I would have jumped in, though.
Yeah, like that's why I put the entry.
Experience, that kind of, I would have jumped in, just a touch higher. But regardless.
Yeah, that's why I was like, I need to put this entry lower because I think we get filled here. And we still got tagged on this. But let's say, for an example, this was our trade. There's a lot of times that traders will aim for bigger TPs than 1-to-1. Okay, I trade at 1-to-1 because I like a slightly higher win rate. I haven't got to sit through the consolidation. I've seen so many times, and yet my data even confirmed the amount of times the market would come, fill my entry, move to 1 hour profit, come back and snatch the break even. And the amount of times I see traders go, I moved my stops to break even at 1-to-1 and I got stopped out of break even. And then I got emotional and frustrated and I revenge traded it and all this kind of stuff. Why? Because it feels like the market owes you. When you've got a 600 sample size and you go through and go, right, I'm going to look at every single trade that goes to 1-to-1, maybe like 350 trades, and then go, what happens if I move my stop at 1-to-1, aiming for 1-to-2? And what I found is that more times than not, the market was likely to rebounce on my entry after going 1-to-1. If I was aiming for, say, 1-to-2, for an example. And the data told me this. And so I realized, okay, if I'm going for 1-to-2, like this, I don't have a break-even rule. And that means that every time the market would come back and bounce, I go, well, probabilities are still in my favor. We found a bit of volume, but I'm aiming for 1-to-2. And I knew what to do. And the data showed me what to do in line with my in line with my strategy. So it was having that data whilst I was backtesting showed me where my profitable edge sat, but then having it whilst I was forward testing showed me how well am I acting on these trades that are set up. And it is very, very common that traders are going to get this gap between this is the strategy result, over time it just does this, and this is the trader's result, blow the account. Because they get emotional and they do stuff that doesn't help them. So our job as a trader is to change the game and say, right, whatever result my strategy produces, I'm going to mirror it. I'm going to put that result straight into my trading account, minus slippage, spreads, swaps, and commissions. I'm going to put that straight into my trading account, and I am willing, and this is the important part, I am willing to get the result over the next 3 months, even if my strategy does this. This is the result I'm willing to get. Because when you build the discipline, when you build the structure, when you build the processes, you put yourself into a position where that skill is transferable. If your edge stops working, I've gone through 4 cycles where my edge just stopped working. And I was able to pivot or adjust because I had a big enough data saying, wow, I can't believe I've just gone through a minus 30R pullback. And it was super easy to be able to see because I had the data, I had the process. It takes me probably total less than 5 minutes a day. And it is the compass that steers my trading ship and tells me at what point are we sinking and I need to jump off the ship. Because not every edge will work forever. There will be some things in the market that are simple patterns that you might be trading today, and maybe in 3 months it stops working. And wouldn't you like to have a very clear picture of that within your data to say, logically, I'm not system hopping, but my strategy is actually showing me that it's not able to survive or work within these market conditions. I need to pivot. I need to do something with it. See a comment here. Do I only trade reactions? So for 5 years, I used to trade quasis, head and shoulder patterns, stuff like that. And these were kind of all the stuff that I would be doing. I'd be looking for trap volume in the market. I'd be looking for quasis. I'd be looking for head and shoulder patterns. And my job I've built thousands of sample size on this. It was my first profitable system I ever developed and discovered. And it was on the back of looking at what's an order block? What's a breaker block? Like, how can I frame this stuff? I'll just go on like EU for an example. So it would be looking at, I'll just come back to, oh no, it's got a nasty gap on it. Hang on, let me just remove these drawings. Something like this. So it would be looking at the last upwards candle before a break of structure to the downside. And I went through the charts and I started marking up, like, is our break of structure? So if we were using the replay tool, this is what we would see. And I started marking up every upwards candle, the highest upwards candle before the break of structure. So we would see it would be this candle. And all I did is I just kept watching price and seeing what happens when price comes back to these turning points in the market, these decision points in the market where the market previously turned from. So for an example, we would say this is our break of structure down here. We would mark up this candle here. Market come down and it stalls through it and then starts to push lower. We've got a break of structure to the high side up here. We've got a bearish candle here. We put another box on it here. Market comes down and stalls in it and then pushes back before selling off. And I noticed there was these reaction points in the market. And I was like, well, how do I build these into trading ideas? And I just marked up thousands of them. And I just watched to see what would happen when the market came back into these candles. And I was like, but why? Why would it work? I don't understand. Like, why would the market come back and do this? And I'm sure in chat we've got, a couple hundred traders that have got loads of different ideas as to why this would work, right? That's the theory that we're talking about. This is the theory of, like, we all have our own analysis, our own ideas. Some of us love smart money concepts, others love supply and demand. There's all sorts of different flavors and things that we can cut our teeth on as traders. But can you apply what you know? Have you built a process to be able to help you apply what you know? Or are you still stuck in a behavioral loop of bad habits that actually don't help you? Because if I looked at your trading account, if I look at many traders' accounts, I mean, we know the failure rate statistically is above 50%, right? If we looked at those accounts, it looks like the traders are trying to fail. Now, why can I say that? Because their equity curves will be, I win one, I lose one, I win one, I lose one, I win one. I just hold on to a loss for too long. It looks like a trader is physically trying to fail their account. Now, we're not obviously trying to fail our account. I mean, maybe a few of us do, but whatever your flavour. We're not trying to fail our accounts, but so why do we do these behaviours? So our job as traders is to put them in a place where we can objectively see them, we call them out, and we put ourselves into a position where we can go, I've noticed that I do this thing. It's not very helpful. And when I do it, I end up blowing my account, or I end up not passing the account, or I end up denying myself a payout, or getting a smaller payout than I should have. And this is one of the key things about trading is we want to put ourselves into a chapter where we understand uniquely what are we doing that's holding us back as a trader. What LJ does will be different to what I do. Like LJ's problems that he has to work through, and there will be a couple of things that every trader works through, they won't be the same. He might say, mate, I get FOMO. And I might say, I get FOMO. But what drives that FOMO, the little hamster in the wheel, they're different hamsters.
I'd tell you it's my apartment trying to kill me. Power going out, I'm getting flooded, the internet goes down, all this kind of stuff. Like I'm being sabotaged over here. If you just give me 1 sec, just gotta pop to the men's room, Rich. Also, we did have some questions before, which I also did have kind of the same question about the structure you were highlighting before. Was some of that. So once you're done there, maybe I'll touch on some of that.
Yeah, sure, mate. I'll catch you in a minute.
All right, cool.
I'm going to pull up this comment here. Rich, am I right in thinking that this will only work if you have one consistent strategy? So let's say you trade 3 systems, 3 strategies. You could take 3 different spreadsheets and record the results differently. You could take one spreadsheet and you could record a column that says trade type, and you could record 3 different types of trades and then filter them by strategy. Personally, I like to have different spreadsheets for different strategies, and I would focus on, first of all, if you're a rules-based trader, this system, wherever we put it, here, let's see if we can find this. I thought it was on gold. Nope. I've lost it. Maybe it was on pound. Nope. Whatever it was, whatever system it was that we were drawing up, that system there is a universal system. So if you're a rules-based trader, you can look at this and say, okay, I'm just going to trade this entry criteria, and it's a pattern every time it trades up. Like I trade the DAX, and so I'm just looking for a pattern that turns up every time. When it does, it goes in my spreadsheet. Now my job is when I look at it and say, let's say for an example, where are we? Look at this awful price action. Let's remove that. Let's leave this. There we go. That's why I couldn't find it, because it was on here. Let's say, for an example, you're a rules-based trader. Every time your pattern turns up, whatever it is, maybe 2 candles, a break of structure, a pullback, whatever that thing is that gets you into the market, if you can clearly identify it every single time and say, this is my valid trade, then we go to our spreadsheet and we fill in this. Now, we can't put the result in until the trade has played out, but something happens in the mind when we go to a spreadsheet and affirm our valid trade is setting up. It helps us to recognize and pause and say, this is the trade I need to take. Now, maybe we don't take the trade and we skip the trade. That's fine. But if you're a rules-based trader, this is the system I found to really help me with this. Now, if you're a discretionary trader, and this is something a bit different. If you're a discretionary trader, you've got to look at the market, and when it makes sense to you, say, this is my valid trade. Because your valid trade, if you're a discretionary trader, might not fit one entry model. It might not fit the exact same pattern that shows up. You might be just watching price and seeing this rally up and going, you know what? It makes sense to me that I can get in this trade. And do you know what? I'm happy to manage risk around it. So a discretionary trader could use the same system, but all they would do is go, right, I'm going to enter here. I'm going to put my stop loss in a place where I'm wrong, maybe under here. And this is a trade that makes sense to me based on my experience, my intuition in the market. Then all they would do is go to their spreadsheet and go, right, this trade made sense, I'm going to put it in. And then they wait for it to play out. And if it goes -1, and it goes -1 for the next 100 trades, then that trader's intuition isn't really serving them. And it gets the trader out of the gap, out of the loop of going, I think my strategy sucks, or I think my psychology is just off. It shows the trader your strategy either works or doesn't, and you are able to apply it or not. There's no grey area. It's ones and -1s. And it's either red or green. You either took it, got the same result, or you didn't.
Yeah. So on the back of just what you're saying, because there's like two questions here I can hit at once. So Mr. RS78, hey LJ, do you follow technical strategy or just purely focus on macro? So kind of what you just said right there, Rich. So what I do, guys, is basically I look for the technical structure first and foremost and see if that lines up with the macro, right? Or I inversely look at the macro first and then try and find the technical structures that line up with the macro, right? But they both have to go together. But ultimately how I actually enter is from that technical structure or pattern or whatever else, right? Or some key levels in the market, that kind of thing. But I always want it to be backed up by the macro outlook that I have. Now, if it's not backed up by the macro outlook, it's like counter trend or potentially like against the current momentum, then sometimes I'll still take those trades because it might be like some kind of retracement or something like that, or a dead cat bounce going against the overall flow. But then I'll take it at like a reduced exposure size. So reduced leverage, reduced exposure, and then still jump into it so I can still be active, pick up those pieces in the market with that back and forth. But ultimately, the big, heavier trades, when I see the macro lining up, like I start with the macro, what's my macro view, look for the technicals, and then find if the technicals are there, and if the macro is there as well, because sometimes the macro is like today, tomorrow, sometimes it's the like monthly general flow, right? And then once they both align, I'll hit that. Now, the next piece that I had, Rich, this was from a while ago. I wanted to ask this. So with the strategy in real, I don't know if I missed this before when Buyu was here and I had to dip out for a second and reset. How do you qualify those numbers? Like, how do you get 2 versus 1 or -1? Is that like what's the calculation? What's the quant component there?
Okay, so this strategy column is the result the strategy would produce if you followed it perfectly. So this would be 2R. It would be like 1 to 2 risk reward, you got 2. Now, the real column is the trader's actual result. This is where the trader says, look, here's my trade, you know what? I didn't pull the trigger. And then this is the reason behind it as well. So like if we look at a few trade examples, let's just look at, we'll do pound pairs, because I used to trade GUEU as kind of a bit more of a, like my reoccurring thing. Let's just go back to some random date, and I'll just find there we are, this one will do. Let's say that we've swung this low here, we pushed up, broke this high, so we're looking for some kind of reaction in and around this. So let's say that our trade idea is based on, here's our left shoulder, here's our head, here's our break of structure. We don't think these retraces have come deep enough. We're going to try and catch a limit order maybe down here, stop loss on the low where we're wrong over here. And this, let's just say that this is a valid trade. Market's coming down to it, and our trading plan is we just go for 1 to 2. So we already know that our TP target is 1 to 2 based on how we manage our trades. Now, all we do is we just wait for the market to come down, hit the trade. And if we took the trade according to our plan, we both receive -1. So the strategy column gets -1, our column gets -1. If we said, you know what, like, nah, this is news. This is barreling down to my entry. I don't fancy taking this. Then what we can do is we can say, okay, well, the strategy's still got -1. but the trader got 0 because they didn't take the trade. So we're building the difference between the result the trader gets and the result the strategy gets. And what we're hoping to see over time is that the strategy produces steady gains. And once we have that as a benchmark, this is the thing that hacked me off more than anything. My equity curve used to do that. And I was putting in all the work, I was putting in all the time, I was sitting there for 9 hours a day at the chart. I was executing on stuff that was valid. I was just closing trades. I was just doing stuff that was hurting me in blind spots, and I didn't realize. When I was able to record the result that my strategy was trying to produce, it annoyed me because I could see this gap. And the crazy thing was, I was up about 2% on the account. Based on 1% risk, my strategy was up like 19%. Now, this might have been over, say, 3 months, right? Now, I sat there and said, okay, hang on. As much as I want to improve this, how can I really grind my gears and make sure that I'm gonna change this? And I said, well, okay, let's have a look. You've got a $100,000 account and you're trading 1% risk. You're up $2,000 right now. But if you would have followed your strategy perfectly for 3 months, you'd have been up 19%. So let's say 15% was to pass the account phase 1 and 2, you would be up and withdrawing $4,000 right now. And I said, Rich, how does it feel? You're up 2% on a challenge and you could have $4,000 coming in the post into your bank account. And it wound me up so bad as a trader. I said, you know what? I don't care what happens on that next trade. I'm gluing myself to that bloody thing. The moment I say this is a valid trade, I'm taking this thing with 1% risk. And if you go to my stop loss, I don't physically care. I need that result. And it cemented the best behavior I'd ever done as a trader, and loads of green trades. And yeah.
I would say not even as a trader, like that's where you start taking it to like it being an actual business. Like you're trying to run an actual, something that is profitable, an actual business, an actual operation, rather than just trying to like play a video game per se. Because just like we were talking about when you brought up a business with having whatever it was before, I forget what we were talking about. But yeah, if you had a business that you could have had X amount of profit, and then instead you're nowhere near that profit and you're way down, potentially in drawdown and in costs, right? You'd say this is a bad business, right? And you're a bad business operator. So the same way, I think once that's always the way I've whenever anyone's trying to ask me about trading or investing or anything like that, my key thing is always to try and tell them like operate it like a business.
Yeah.
Because then you start thinking very differently. You're not trying to think about the next biggest trade, the next biggest profit just to get like a Lambo or some new down payment on a car or something. You're trying to think about operational success over time.
Yes.
Yeah. But also you answered the prior question with the so it's based on RR.
Yes, risk to reward. So make 1R, 2R.
So it's not like a qualitative component.
It's just based on flat dollar risk. Yeah, if you have flat dollar risk, you can put a column in for grade A's, grade B's, grade C's. You can have rules where you use like $500 for grade A, maybe $200 for grade B, whatever the case. But the data will show you, how did my grade A's do this month? How did my grade B's do? You might have a trade idea that you're like, you know what, I fancy experimenting with this. And you put it in your spreadsheet and you call it like an experiment trade. In your column, you just put experiment or E. And at the end of the month, you go, man, I took 30 experiments and I lost 5R. And it might be you're risking $10 a trade and you lost $50. Well, now you know, okay, next month, I'm 5R down. I've got to make that back before my experiment trades are starting to show profit. So it gives us a benchmark to aim for. And the cool thing, and I love that you pulled this up, is as a business, if a trader builds this kind of information, they can look at the evidence and go, should I really be backing my skill set as a trader? And we see traders that will just go, just bust a 100K account. Okay, look at why you bust it. And then they're like, no, I've got to get another account. It's like, okay, but if you knew why you bust it, then maybe we wouldn't have that definition of insanity on the next account, and maybe you could improve your behavior and all that kind of stuff. So if you build an audit like this and look at it, you can very clearly see, should I invest in myself as a trader? And it might be that you go, well, my strategy made 3R over 3 months, so it's just above break even. But the trader might have got minus 3R because they're not executing it. Now that trader could look at that and say, you know what, I'm still working on my ability to execute, and my edge actually isn't that strong. Well, I will invest in myself, but maybe I'll just do it on a 5K account and it'll cost me $40. So the trader can make a better informed decision based on their results and the feedback of it. If the trader's up 50R in a month and they've made 50R because they've traded perfectly, hopefully it's not a 1 to 50 risk reward trade and they just took one trade and got lucky. But if the trader's genuinely got a track record that they're building, and this is the key word, track record, the trader can look at that and say, you know what, I will reinvest in myself. I'm going to get that 50K account. I'm going to get that 100K, the 200K summer plan that's just come out. So again, to sort of summarize, we were talking about theory, and most of us know what to do or what we should try and do. And then we've got applied theory, which is where we are able to act on the things that we know. This is most of the part where traders come unstuck. They don't need to know more information typically. So if you're struggling with that, you've got the performance coaching course within the 5ers hub. That's going to show you pretty much what you need to know about psychology, risk management, how to scale up, how to deal with drawdowns, how to look at losses. There's a whole bunch of resources in there which can help give you a different lens to look at trading. And then if you want somewhere where you can go to apply it, we've got the Trader's Journey within the 5ers Discord. This is a unique project that we launched not so long ago. We've had nearly 1,000 traders accept the role. We've got hundreds of journal entries as well, which is where traders take their own little space. They share it in the 5ers Discord. Every trader has a channel, and they just work through the things that they actually are learning. And so if you need a little bit more help with your trading, if you want to get access to what I do within the 5ers as the performance coach, go in the 5ers Discord, click the role, sign up, open your own channel, put an about me post. So say, hey, I'm Rich, I like pizza, I've been trading for 8 years, pineapple on pizza doesn't go. Or just put something about yourself, chuck a picture in there. And then most importantly, how do you want to use that channel? Later on today, in 3 hours, 45 minutes, we've got a very, very unique webinar in the 5ers Discord. We were going to make this unique to Trader's Journey traders, but we've decided to open it up to anyone who is a 5ers trader. So if you've got or had a 5ers account and you've got access to the 5ers Discord, you can join that event starting a little bit later on today. We're going to be giving away a bunch of trading accounts in there as well. And we're going to be pulling apart what we've learned. LJ, you'll like it. I've put together something a bit special in there today, visually. I'm not going to say any more than that. But we're going to pull apart the project and say, why did we do this? And what have we learned by doing it so far, and what's to come next as well? So if you fancy joining us later on, feel free to hop in. Like I say, there'll be a few accounts up for grabs as well. So just as our way of giving back to the community.
Okay, I'll make sure that I'm there as well. I don't know what you're talking about that I'm going to be enthused about, but I'll definitely be there to make sure I find out. So
okay,
there we go. Yeah, I will definitely do that. But I really like this, Rich. I know you're going to have to jump out in a second, but this is really good. I think that is a beautiful structure to actually improve your trading. And it's also very simple. Like, it's not too complex. Anyone can do it. It doesn't take too much time. You put that in like an Excel sheet, just log each of those trades. Beautiful. You do that week in, 1 week, 2 month, 3 months. That's pretty good. You've got a lot of data to work with.
Do you want to see one? Do you want to see one that I built for a coaching workshop that I haven't shared on stream? If we pull your chart up, I'll see if I can load it up quickly.
Yeah, sure.
Find it.
There we go.
All right. Only take me a second. We put this together for a couple of one-on-one sessions that we did. This is the point when my trading changed, when I built this process. I actually got shown how to build this process by an incredible trader about 6 years ago. And the moment I put this into practice, now I've been trading for 8 years. First 2 years were awful. Third year, started to go around break even. And from that point on, I made a little bit more than I lost. And I put it down solely to having this data and being able to look at it and saying, this is the right thing for me to do. When I follow only this spreadsheet, then I'm gonna make money over time. That's what my data was showing me. And then I could see at the moment where it didn't work. I just want to make sure this is the right sheet. I don't want to share. Yeah.
No, it's right.
All right. Got it.
Got it? Yeah. Good.
Share this one up. There we go. Ready? This is how it looks.
Okay.
And this is what you would have just stuck on your desktop somewhere. You come into it, you double click, and these are the columns that we spoke about earlier. You write in the date, the asset, whether it was a buy or sell. I've left the entry prices off here because these were fabricated trades. I didn't want traders going thinking, oh man, let's go figure this strategy out. This isn't a strategy. This is an example of how to record data. I would put my entry price here. I would put my stop loss size in this column. So that gives me the ability to go back and refine this trade. Then I would put the strategy results. Now this is based on a 1-to-1 risk reward strategy. So you won't see any wins in this column that are higher than 1. You might see a partial loss at 0.7. Maybe there was a management rule. And you're going to see 1 and 1. Good trade, managed as I should. 1, -1. I was not organized because I was in a call. Like, we just put a little snippet of why did you get a different result. And you can see, like, closed early because of fear. This one only made 0.5 R. I made a mistake entering too early. I wasn't paying attention, so we only got a smaller TP. Any trade that goes to stop loss, 1, -1 and -1, is still a good trade. It's in line with our plan. We did what we were meant to. We did the right thing. Now we're building a pattern of how many good trades can we take in a row. Now we're shifting our focus from P&L and we're just putting it into this process. And over time, what happens is the trader makes money as a byproduct on executing well on an edge that's working. So the horse goes before the cart and the cart starts filling up with cash. And the trader's not looking at the cart, they're actually looking at where they're going. They're looking at their trading strategy. They're looking at their data. They're looking at the chart saying, oh, this isn't a valid trade. I can't put this trade in the spreadsheet. Therefore, I was about to take this. So building this process actually helps the trader take a break, pause and say, is this a valid trade? And valid trades go in this spreadsheet. And then what we can do is we can look at this. We can highlight this column up the top. Hopefully you can see it. And it will show us there's 32 trades. I don't know if you can see this bottom column just down here. There's 32 trades in this total spreadsheet. And the trader has made 8.3R. That's what the strategy would have produced. So if they're risking 1%, they're now going to be up 8.3%. They've got an average expectancy of 0.26. Now we highlight this column.
Can't see the bottom, I don't think. But
okay.
I think you'd have to scroll down or something.
Yeah, it's right at the bottom of this screen in tiny text, just below my mouse cursor here. This is your expectancy, just there. So you got a 0.26 expectancy.
Oh, okay, right there. Oh, I see now.
It's tiny. So Excel does this for you.
Right.
So you can say, oh man, if I followed my strategy perfectly for a month, because this is only like a couple of weeks of data, I would be up 8.3R. Now this would be 8.3% if we're risking 1%. Now when we click the next column, we've still got 32 trades, but the trader is only up 2.8R, which means 2.8%. So now this builds that equity curve that we were talking about. The trader could have passed phase 1, but now they're stuck 2.8% in phase 1. And the cool thing is we can go, why? Because clearly the strategy is working. So we can go, was feeling a bit of fear, didn't place the trade, made a mistake, entering too early, not a valid trade, I started to revenge trade. So the trader starts getting these insights as to, they're leaving breadcrumbs on what their bad behaviors are. So when we talk about bad behaviors in trading, we try and get to a stage where we're eradicating them. And often, other than a bit of experience, the difference with myself and LJ to, say, a trader in their first year is we've had the opportunity to start to eradicate the things that are holding us back. And we just do it less now. It doesn't mean to say we're perfect. Doesn't mean to say we do it like absolutely, perfect every single trade, but we just do it less. Like, we make these mistakes less than we used to. So building this process shows how many times can a trader follow their plan before they break it. And then if you want to go a step further, you build it into a mini game, and you say, how many trades can I take perfectly in line with my plan? I don't care about the results. I just want to execute on my valid trades. And my record, I think, is 72 or 73 trades in a row that I executed perfectly. And you know the crazy thing? In that period, I lost 2R. And the strategy lost 2R. And I went 72 trades at basically break even. But you know the best thing? I can look at the spreadsheet and go, that's where I should be. There's no guesswork of like, oh, I think I've got some weird psychology problem and I feel like I'm sabotaging. Nope, you execute like a boss and your edge just didn't work in them 72 trades. And guess what? That's normal trading. When you have a 0.3 expectancy or a 70% win rate, you don't have 70% win rate all the time. You'll have times where you just don't have a profitable edge because the market's just not moving favorably with your framework. And then you'll have times where it absolutely cooks and you can't do anything wrong. Our job as a trader is to keep our risk consistent enough and build the evidence to support this is actually working over a bigger sample. Because if you can't handle a strategy at its worst, you don't get it at its best. And that means that when it starts cooking, when it's harvest season, when that edge starts absolutely slaying and pulling in 20, 30R a month, where you'll get periods where they just work, you won't be executing because of fear. You'll be sized down. You'll be on a demo account or whatever the case might be. And the traders that go on to become incredible traders, from what I've seen, and the traders that make the bigger payouts, they know their edge, they have a process, and they relentlessly execute on it. So everything that we've done today is hopefully a little bit more than just theory, and it gives you practical tools that you can go to apply. Love the name the 5%ers because 5% of traders will actually go and use the information they've learned and do something with. A lot of the other times traders just remain stuck going around in circles. Ask me how I know. I did it for 2 to 3 years. And it's time's too valuable to be wasting your time just executing randomly on random trades and then getting emotional because they don't suddenly go into profit. It's just story for another day. So last shout out, 3.5 hours from now, we've got a webinar in the 5ers Discord. If you want to join, feel free. If not, I will catch you next time we're up and about on stream.
And just before you go, Rich, I think the other thing I really like about this is sort of doing the journaling a bit more manually, right? Rather than it just being have some kind of plug-in and you can look at the stats and the data and be like, okay, cool. Having that kind of manual component. Because that's what I found. Anyone that has really succeeded in trading has always done some kind of journaling at some point, and it's often been very much manual, and where you go through that full process of breaking down each component, working through it, and sort of understanding it, right? Same thing. I've shown you guys in the past, like this old little journal book.
I've seen
with the early trades I used to take. I think they're somewhere at the back here, wherever, this stuff, whatever. I'd write it down manually, because there are a lot of programs or software, that kind of stuff, like where it just automatically uploads, but people just kind of look at it as like a tracker. They don't really do the work to actually analyze what was going on. So I do like entering each individual trade, just like what you're saying. It just creates a different element. It's almost like when you're at school, you're trying to learn math, and computers came onto the scene, and everyone started using computer, and then everyone that started doing that sucked, and then all the people that were still writing by hand, excelled in exams. Anyway, just a random side thing. I still very much advocate for that manual, like ingrained aspect overall.
Yeah, I like doing it manually because, and a friend said, you could automate this. I don't want to. There's something, when I go to my spreadsheet and I write in, this is my trade, it's valid, this is my entry. When it's in that spreadsheet, it's locked in. I know it's got to go in that account. I know that result. If I do it automatically, I just think I'm going to lose a little bit of that. I'm going to get lazy around it. I know I am. I like to manually have to do this, and I've got it streamlined, so it's just the bare bones data. But if I'm trading a pattern And if I'm backtesting, this is how it looks. And there will be hundreds and hundreds and hundreds of trades in this data. And I will simply click this column and say, does it work? And I got the result at the bottom of the screen to show me whether or not it's worth my time to execute in real life. Any edge I build out, I've used this process and done this process for years and years and years. In the beginning, it was clunky. Once I made it my new normal, that was it, mate. I was like, yeah, me and this process, we go in places in trading. So if traders don't use this, fine. But traders typically have to use something that gives them some kind of feedback. This is why we'll talk to therapists, coaches, counselors. This is why you'll have trading coaches. This is why, there's so many things that we do to try and gain awareness of our blind spots in trading. And it's not about turning your whole trading routine into a massive, like, Dear Diary entry, but it is about saying, look, you know what? I'm kind of not getting where I want to be. And most traders, 70, 80% of traders, they're not going to make money out of trading. Like, that's the stats, that's the data from brokers. So how do you put yourself into the camp that are? Well, in my mind, the best way is to give yourself visibility of what you're doing and then to clearly see what's not working and pivot from it. And if I never built this process, I'd still be running around in circles. I'd probably get a few live funded accounts, maybe get a couple of payouts, but ultimately I'd be, over time, net negative. And I didn't get into trading to be net negative. I got into trading to absolutely clean up. And I can't clean up if I don't have a process that tells me my strategy is able to, or I'm able to. So this, by far, this process, best thing I ever did for my psychology. Valid is valid. It goes in there. When it goes in there, it goes in my account. And every time it's red, give myself a hiding for it. I'm pretty tough on myself. So when I get a red trade, I'm like, man, why? Why did I not take that on my portfolio? Why did I just put it into some dumb little account that I don't care about? Like, we all do this stuff, but my spreadsheet spells it out for me, and I can see if I'm moving forward. And I will always reinvest in myself as a trader and carry on trading, providing I can see that I'm actually growing and changing. So if I look at my spreadsheet and it's just red, and it's fear, I'm wasting my time. That means I should be sized down on a 5K account or a demo account, trading at like $25 risk, which is ironic because that's what my master account is, but it's because that's just the easiest thing to operate on relative to anything else. Hopefully it helped someone in chat. If it didn't, then like, maybe you've just got the awareness that, okay, people out there are putting in proper work and treating trading like a proper business. This isn't a get rich quick thing that you'll see on social media. You can put big oversized trades on, you can get lucky, but if you're looking at saying, I want to do this for a period of time, maybe generate a bit of income over time that I can rely on, you've got to start putting in proper work, proper processes as well. Anyway, ran over. I could talk about this stuff for days, mate.
Yeah, of course. All right, jump into Rich's Discord call later on, guys. You get more there. You get his direct attention, one-to-one. And thank you, Rich, for everything today. This was really good, so appreciate that, as ever.
No problems. Cheers for keeping us company, and thanks for everyone in chat who persevered with us. We got through it. We looked at the numbers. We moved on. And if you're about later, I'll catch you in the Discord session for something extra special that I won't be doing again after this. Catch you later. Cheers, guys.
Cheers.
See you, Rich.
See ya.
Welcome back, BU.
Hello, nice to be back. Hey, good.
I've got like an email I have to respond to right away. If I can swap to your screen,
yeah,
and then jump back in 2 minutes.
Yeah. Let's do that. Okay. So for those who don't know or haven't seen in the Discord, this is the event that Rich was referring to. So make sure to be there for the exclusive webinar and free account giveaways. It says tomorrow because that was posted yesterday. So to avoid any confusion. So today we'll be having that Discord call. Just as a reminder, we do have news PPI coming up in about just over an hour. For those who don't know, we do have news trading rules. Again, very easy to find out where our rules are. You just go to the 5ers.com website, you click on Get Funded, go to the FAQ section. So you have the future side and the CFD. And if I want to, for instance, find out what the news rules are, I can type in news. Can I trade during news? Awesome. So for instant funding, hypergrowth and bootcamp, news trading is allowed except for bracket trading strategies around news. I'll come back to what bracket strategies are in a moment. Or actually, they do explain it here, which is even more helpful. So bracketing is when you are adding both buy stop and sell stop at the same time in the news. So for instance, you'll be like, oh, I'm going to put a buy stop just above the current level, and I'll put a sell stop just below the level. And hey, if it goes one way or the other, I'll be quids in. Yeah, it doesn't really work with news, and we don't allow it anyway. For those who know how big news operates, like FOMC, CPI, oftentimes you'll get the spread will widen, and it will take out both your buy stop and your sell stop because it just does. Because it likes to do that, likes to be a B. I'm not going to finish the rest of that word when it comes to that. But for the high stakes accounts, you do have a 2 minutes either side rule. So you can't open or close trades within a 2 minutes window before or after news. Yeah, so just be careful around your high stakes accounts because any profits made at that time will be deducted from your account and won't go towards your targets, but losses will be absorbed by you. And that answers a question I saw earlier in the chat around, give me a moment. Anyway, I saw someone asking about the 2 minute rule earlier in the chat. So that covers that. Ooh, can close positions during news such as stop loss. Provided, so as mentioned, any profits made will be deducted from the account and won't go towards your target. So if you are in a trade that's already in profit, if your stop loss is in profit, if that gets closed during that 2 minute window, then yeah, that profit won't be counted. If, for instance, you close the trade now before that 2 minute window and reopen that same trade with the stop loss now being in an area of loss, then that loss will be absorbed by you, but that will happen anyway. So up to you what to do. I would say if you are very close to your stop loss, how you trade news is up to you. Whether you want to move your stop loss or whether you want to, if you're in profit, close that trade and then get into a new trade in the same direction, but with your trade now being at break even and your stop loss being at level of loss. Up to you how you want to play that. I'm gonna struggle to say your name, so I'm not even gonna try.
You can close it, or if it hits stop loss, so long as it's a trade that you opened before that 2 minutes, right?
Yeah.
If that's the case, completely fine. Just no trades between the 2 minutes before or 2 minutes after. Or everything else is fine. So if you had a trade from like an hour ago or 4 hours ago, it hits the stop loss or the TP, or you manually close it yourself early before stop loss or TP, no issue. There you go. I don't know if you already said that. I just caught the back end. So
yeah, I was just going through the FAQs again. If you want to double check or read with your own eyes, your very own eyes, you can head over to our FAQ section, and there is news rules listed there where you can find out more, and along with all the other information, especially if you're on a high stakes account, about what news rules are, how they work, and everything as so.
With that said, there was a question from a little while ago I just wanted to answer real quick. So bias for PPI. I think PPI will pretty much come in line with expectation, just like CPI did yesterday when we were talking about that. The market seems to have come down to the kind of relative normality realization of what's actually going on. So I think for today, I need to bring up, was it Forex Factory or whatever?
Forex Factory. We've got the forecast at core PPI month over month 0.3% and PPI month over month at 0.2% is our forecast.
It's not loading for me. Forex
Oh,
Factory.
I've got it on my screen. If you want to switch.
Yeah, okay. Yeah, we'll just switch.
Yeah. So PPI in just over an hour's time now. If TP hits during news, you don't get towards that doesn't go towards your profit target. That is correct. It will not go towards your profit target if your TP is hit during that 2-minute window before and after news. So on my screen, it says news is at 1:30. So 1:28 to 1:32, any trades closed within that time won't be counted. Right, and that's only on the high stakes program. Bootcamp and hypergrowth are fine. It's just high stakes that will not be counted.
Yeah, and same with the futures. Futures is fine as well. So, yeah, with the PPI, so basically year on year, I would expect pretty much in line with what we're seeing to come down 0.1, and then the 0.1 plus for the month on month. There hasn't been too much that has changed this past little while. You know, we had the Strait of Hormuz thing kicking up once again, so there's going to be a slight input position from that, but nothing too crazy. So this is probably going to be in line once again, just like yesterday with the CPI. So I think we do have. Is Trump talking today?
I do not know.
I think it is today. I said this yesterday. I was trying to find when it was.
At least I only have the red folders currently listed on my Forex Factory, so it might be orange folder if it is. Is your Forex Factory still not working?
Yeah, no, it's saying 404. It won't load.
Okay.
I don't know if that's the same ISP thing I was having before. I have no idea.
Okay, I'm not seeing a Trump speech not listed as orange or yellow news. So if he is speaking, it's not listed on Forex Factory.
I don't know. I'll keep trying to find it because there was a headline I saw where he's meant to be making some kind of chatter.
Yeah. So while you look for that, I'm gonna try and respond to Fast Raw. Holding trades over high impact news is allowed. You cannot execute any order. So market buy, market sell, buy stop, sell stop, buy limit, sell limit, 2 minutes prior, after, or within the high impact news. So in that 2 minutes before, 2 minutes after, that window of time, that 4-minute window of time, that's the time period you can't close trades or open trades. So it doesn't matter, even if you open the trade an hour or so before it, if you close that trade, whether that's because of TP or stop loss within that 2-minute window on either side, then that would mean the profits will be deducted from the account and won't go towards the target. So whether you want to take, temporarily move your stop loss or take profit, or close the trade before news and reopen it after news, or quickly try and close the trade. So you lock in whatever profit you have and then re-enter the same trade, and then don't have a TP, but keep your stop loss on because your losses will still be absorbed by you either way. Up to you how you want to play that. But that 2-minute before and after, that's up to you. Yeah, like Luke McCabe said, you can remove your TP, for example, but keep your stop loss on, because either way, your stop loss is going to be losses are going to be absorbed by you. Up to you how you want to play that. And
I
Alex,
can't find it. I think it's just a closed press.
okay. What is that?
Closed press. So I don't know if this is going to be or figure out.
Yeah. And relying on passing challenges, as it were.
Yeah.
The spread can be crazy. Sometimes it works in your favor, sometimes it doesn't.
Yeah,
Obviously,
no.
news can spike up and down. But
Hang on. Yeah, so you're misunderstanding. Whatever it is, no problem at all. Only the 2 minutes before the actual release and 2 minutes after, right? So say you had a non-farm payroll, just before whatever it is, that's no problem. So long as it's just not within that 2 minutes before the actual release is out. Right, that's it. So you can take something an hour before. You can take something 5 minutes before, even. Now, if you're doing something 5 minutes before, just to get around that 2-minute rule, and you do that repeatedly, it's going to be seen as a, sort of malicious activity. But outside of that, yeah, any of those trades, that's completely fine. No issue at all.
Alexander, if you trade in the morning, if a new stack up your TBs, all you have to do is wait 2 minutes and then you can close that trade.
Yeah.
If you close that trade in that 2 minute after window, that's the problem. So if you spike up your trade for that TP, wait 2 minutes, and you can close the trade and it's good. You can.
I think the stream is lagging.
Alright, yeah. So it looks like we've okay, conked out for a second there, but we're back. I think we're back, but in the meantime, yeah. Guys, get those likes up. If you're excited about later on having a session with Rich or the trivia session, LJ, that's happening either on Tuesday or Thursday. Do you help build some of those questions, or is that top secret?
Yeah, I do. I often put together a majority of the questions and also throw in some try and throw in some, sprinkle some difficult ones that are a bit more nuanced or a bit more critical thinking, that kind of thing, just to throw people off. try and make it still reasonable that people can, you know, get it done with, especially within the time frame. But I don't know. We'll see. Maybe there might be a couple weeks here and there where I drop in some really difficult stuff, like proper difficult, very niche, very very odd questions. We'll see. I got to think, because I got to see what ones we've actually gone through and what ones we have left that we haven't run through that I already sent to Rich, and then try and rework some. By the way, guys, yeah, just let us know if the stream is still working, because I'm watching the side. Sorry, Boo, as well. I'm seeing that for me, it's all lagged out.
I'm seeing.
I couldn't hear you before when you were talking. So.
Oh no.
Yeah. So I had to try and interpret what you were saying. I think it's working now. Just give us a thumbs up or yep, it's fine. Okay, cool, good.
I mean, I'm seeing a bit of a delay on the live stream itself, which is a bit infuriating.
Yeah.
I'm not sure how much. Let me try and count. 1, 2, 3, 4, 5, 6. Wow, 6-second delay. But that's okay.
I've got even more than that.
Yeah?
I think mine's like, almost 30.
Okay. Gremlins in the system. Sorry, guys.
We continue, regardless. Yeah.
Yeah. So I was going to say, for those who are keen and want to win this trivia, is there any resources you'd suggest people like brush up on?
Nothing in particular, because normally I give a bunch of just like, there's some random like history facts around like finance or trading, which I normally try and make them like stuff people would know. So if you've just known stuff about like, I don't know, GFC, or maybe I can throw in some questions about like random trading shows or something. That's probably something else I could do, like Big Short or Wolf of Wall Street or Billions or something like that. Just something sort of trading related. There's some old ones where, like, you know, when we went off like the gold standard, that kind of stuff. So a bit of history, a bit of more recent history, and sometimes recent events like things around COVID or Fed members or something like that. So it's if you've been trading and you're kind of clued in, you should have a general idea. It's still general knowledge, right? But some might just be a little bit more niche. But I do have some other more quantitative questions which are related to finance.
Okay.
But it's a bit more of a math equation type thing.
See, I'm seeing the wry smile on his face. He's going to do something evil.
One sec. Let me just...
Right, LJ is plotting, so, you know, it should be an interesting trivia quiz. So, for those who don't know, from now on, what we're going to be trying is 1 week 1v1s, and the next week trivia quiz.
It's going to be backwards, isn't it?
Yeah, it's going to be backwards. A practical...
There we go.
Okay. A practical guide to quantitative finance interviews. Okay, guys, this is your sneak peek at study material potentially for the quizzes. Ooh, those are looking like pretty complex equations.
Yeah, it's a lot of math. So not doing stuff like that, but there's some interesting sort of more brain teaser type questions in here. Now, these are some of the ways to like solve it in like a heavily like quantitative method, as you would as a quant, that kind of thing. But there's still some other like conceptual type things. They're like, you know, card game. It's not focusing properly. Blah blah blah. Anyway, it's sort of ways of thinking, and the point of it is the same way around trading. Like, it's sort of how you think, how you build your approach, your strategy, risk management, that kind of stuff. It's more the way of thinking, not just like trying to find this is a fair value gap or this thing happens in the market and I just press buy every time it happens, right? You're trying to think about why this actually occurs, what am I observing, how you actually understand it, that kind of thing. I feel like I described that really poorly, but I don't know. Anyway, I'll put some stuff together with that, and I'll think about a better way to communicate that, because yeah, that was terrible. It sounded good in my brain, and it just came out not the same.
That is okay. So we've got a question here, which is a mental roadblock for me. How to stay in a trade which is going in your direction. I keep taking big losses, but when a trade is winning, I just can't let it keep running. So, for me, what I like to do to make sure I stay in my winners, for me, I've tried to reduce my trading as much. I've tried to take as much discretion out as I feel comfortable with. So I trade, level to level rejections from equal highs and equal lows. So they're very fixed. It's very mechanical, as it were, on the chart. I'm not trying to be like, oh, I feel like closing it because it's already, done, unless there's a very good reason. So, for instance, you might have seen that, okay, on a technical basis, there was no need for me to get out my gold trade, but I knew NFP was coming up. So I had to make the decision, hey, I don't want to mess with NFP. It can go either way. I'm going to get out of my trade then. But apart from that, if you try and make sure that your trading strategy is discretionary, if you can write it down and say, mark out the levels, or I'm not sure how you trade, but if you can reduce it to something that is describable and repeatable and not based on how you feel, then that helps a lot in terms of holding on to your trades. And the same with losses as well. You can reduce the stop loss at times depending on whether a trade reaches your level with losses. So for instance, here I've got my NASDAQ trade. I'm still in a long, but my loss has now been reduced to this from all the way down here. So down here would have been my original loss level for this trade. I've now moved my loss upwards. Now, if it does come and take my loss, I'm actually okay with it because I'm taking less of a loss than I did before. And I know I don't have to take a full huge loss, even though I'm still bullish on the trade. I'm not waiting for me to take the full loss, as it were. So that reduces my losses overall, makes it a bit more comfortable for me. And in terms of looking for the win, I tighten it up and I just keep, as it goes through the levels, I keep just tightening the trade, but on a mechanical basis of, okay, this is the new level that it's reached. I'm going to swing it underneath the 15-minute time stop. It's not a case of, I feel like moving my stop loss, or I've taken a bit of profit, I'm getting a bit scared now. It's purely, these are my levels. Another thing that I like to do as well, especially because I know once the money starts feeling real for you, or once the figures start feeling real for you, is I like to think my trades in terms of RR, purely in terms of RR. So, this one loss would be 1R. That's a 1R loss. I'm not thinking of it as I've lost X amount of my account, whether it's $50, $500, or whatever. And the same for the profit. I'm not thinking of it as, oh, I'm going to make $800, $1,000 from this trade. I'm like, okay, it's 1.5 R trade. If you think in terms of R, sometimes it can be very easy for you to trade regardless of the account size. And that can, remove some of the attachment you may have to the trade. And
I think of it. I was going to say, I think of it kind of like having it's often very good to have multiple accounts, or at least two, right, in like a barbell strategy. What it's sort of typically called, which is where you have your very safe investments and then you have your more risky kind of bets, right? Because normally if you're isolated in one and you're taking profits too early, it's because you want to you're like, oh, there's some money on the table, I got to grab that right now, right? If you have an account where you do secure that kind of profit, and you've got that and it's secured and you feel safe, you can have that on the side and then have another account where you can let things run and actually see where it actually plays out. And just like Rich was saying before, this is also where you can test them back to back, and where you do, jump out too early, you'll then start getting that data compared to the other account where you're now letting it actually run the entire distance and see if that's actually sensible. So both, you're kind of killing two birds with one stone there, where you're getting more data, plus you're kind of quelling that urge to take profits off the table before they've actually matured, right? That's the way I have always seen best for people, where you have that kind of more aggressive component because people have that urge often, and then you have the very safe stuff. And it also does give you that double bubble exposure to still getting the regular returns that you should be getting from that safety, but also potentially being exposed to something that does pop off. For instance, where in that risky account you might buy, I don't know, some crypto coin or Bitcoin or something, and it's probably going to be a bit rubbish, but you're like, oh, it could pop off, right? And now you've still got that exposure, but you're not exposing yourself, you're not risking your entire capital base, your actual reserve that is going to sustain you overall. So that's the way I personally like to do it. I have various bits like that, like some really risky stuff, very safe stuff, and then I've got a kind of in the middle, which is my sort of day trading, more active intraday type stuff, right? And then cover all three. But it's often better to stick with the two, just at the two ends, overall.
Right. I did see a question about, would you rather have two 50K funded accounts or one 100K funded account, which is quite interesting. I'm just going to say what I think first one, then let LJ respond, and then I'm going to say how you might be able to, maybe have your cake and eat it too, with our summer plan. For me, because I copy trade, I would actually prefer the 100K funded account, because if I had two 50K funded accounts, I'd basically be taking the same trades on both either way. The only time where I'd have funded accounts where I trade them differently is because the rules state that I must trade them differently. So for instance, earlier during this stream, we were talking about the cap on copy trading for 5er accounts being 500K. So if you got over 500K in funding, then you have to trade them separately as two separate entities. So for instance, I might trade Forex in one, I might trade everything else in the other account. But as far as that is concerned, if I'm just copy trading, I'd rather have the 100K funded account. If I was trading them separately, two 50K funded accounts. LJ?
I would say if we're purely looking at these numbers right here, I would say one 100K, just myself, just to manage that. Now, in general, I prefer having larger sized accounts, not too many smaller accounts all stacked together, because it does become too much to manage. However, going back to what I said before, I always have some accounts that are running more risk and others that are running smaller risk. So if I could only have two accounts or one account, I prefer to have the two. Right, so two 50s. So I'd run one on one kind of approach, which is a bit safer. The other one is going to be run very similar, but I might take some extra trades, which might be a bit more speculative or something like that. So I still get that exposure, that potential upside, but I haven't burnt the entire war chest at the same time. So if I got the opportunity or the decision of only two accounts and that's it, or only max 100K allocation, Would I have it in 1 or 2? I'd go the 2 myself.
And that's because you're trading them differently. You're trading one safe, you're trading one risky.
Yeah. Correct. Yeah.
Yeah.
So hence, that's why if one goes wrong, like the more risky one, the other one's safe, and you're still stable. You're still in the game, right? You're not going to blow out. So it protects you with that, but you still get that potential upside exposure as well.
Yeah. And in terms of having your cake and eating it, if you were to get, say, 250K accounts with the 5ers, that would be 2 times, it's 278, but this is, without the discounts. Call it 280 because it's easier for mental maths. So you'd be paying $560 if you were to get 250K accounts on the regular high stakes program, 2-step. Now, if you were to get 2 100K accounts, that would be 149. Mental maths, call it 150. So that would be 2 times 150, 300 versus the 560 I mentioned earlier. And you could potentially, because of the profit cap, if you're worried about that, you could potentially trade one, reach the profit cap, trade the other, reach the profit cap, and then have the payments going on rotation between the 2 accounts. So that's my have your cake and eat it too strategy in regards to that question. Get 2 summer plan accounts. That way you can have the 100K level, but you can still trade them in different ways. Whether you do the aggressive, safe approach, whether you do the I'm going to trade on one account and then trade on the other, just so I can lock in my payments one after the other. Up to you. But that's how I'd have my cake and eat it too if I was looking at that kind of setup.
I agree. That's another good point. You can have the payments offset, like your payouts, have them kind of 1 week on, 1 week off, 1 week on, 1 week off. But then they end up being 1 week, 1 week, 1 week, 1 week. And the other point with that as well, you can trade different assets. So have them kind of diversified. One trading like FX, another one trading NASDAQ and gold or whatever it might be. So you've got a slight split exposure. Obviously, recently, some of this stuff has been more correlated overall, but that can also help as well. So you don't have that same cross exposure across the entire portfolio. You've got some kind of split attention, which is I think is also good at the same time. So
yeah. And we have a flurry of a bit longer questions. I don't know if you want to take one from the comment section.
Where's this? So I'm scrolled up a little bit right here.
So recently we've just had longer posts with lots of questions.
Yeah, we did. I'm just reading through each of them. We can start from the top here, I guess. LJ, during an aggressive bullish market like this, how do you distinguish between a healthy short-term pullback to buy into versus the actual start of a major trend reversal? Very interesting. Now, this is also where obviously the macro stuff comes in first and foremost. So I'll be looking at that macro landscape and seeing if that's still healthy or not. And so if somehow we have like a healthy environment, but the price action is actually starting to pull back and continuing to pull back, you now then have to ask, okay, we've got the healthy macro environment, but we're still pulling off. So you then have to go, okay, is this something to buy into? Or is this something to potentially denounce the macro outlook, such that denouncing it doesn't mean it's wrong, but often you can have like something being fully priced in, right? So it's a profit-taking event where everyone's already realized this. It's now mature, and so it's not over. Everything's still good, but you're seeing profit-taking. Now that would be the kind of macro picture. Same on the bottom end in the inverse, basically. Beyond that, I would primarily look at the technical structure. So if you're seeing breakdown below like key levels, then you have to start putting into question your entire outlook. say if you've got this like long picture, we've got upward momentum, you're starting to see lower highs come in first and foremost. Then you're now looking at the structural lows, recent lows that we've had, and if you keep pressing lower towards them and can't actually push back up, you now need to start very much questioning the entire momentum trend. So just like the chart
should we switch over to your screen? Oh, okay. I was going to say, do we want to switch over to your screen or?
No, that's right. It's all good right here. So we can see we've got this kind of like these tops with that sort of red bar, that kind of red line that you've got across. And then the recent price action, obviously we had that massive drop. We've had a huge rally back up. We're now struggling with those same levels. However, with the drawdowns, we do have a low, which is just a kind of general retracement after the massive push higher. Then we've got a roughly equal high or close to equal highs. We've pulled back again, but the low has created a higher low. So through this next third wave that we've got another equal high. So today, if we can't sustain this area and we push down towards the prior lows, start to crack them, then I'd be out. Right? That means we're probably going to retrace a huge portion of this move from the past 2 weeks. So pretty much from there, you're basically looking at the highs and lows structure to the left of the chart, ultimately. Pretty simple, really. Not much else. Yeah, I think that makes sense. Outside of putting into conceptualization the macro picture with rates, everything else going on, but you probably already know where that is beforehand.
And we do have a question for you from Solomon as well. So I'm just highlighting that one because Usam felt passionately that we should take this question.
Where's this? I'm trying to find. I feel like I'm in the wrong spot.
So that would have been just a few minutes ago. I'm just going to try and find the exact minute. So 5 minutes ago, Solomon Musa.
Oh, here. Okay. I found it. What is your take on why we had a bearish response to the CPI release yesterday across the major pairs? Yeah, so that is very interesting. So if I can bring up the FedWatch tool in a second. So essentially we did have the slightly weaker CPI. So we did see the odds, rate hike odds for September drop.
Ooh, okay.
So I can look here. Okay, I think this is showing basically the same number because of, I think, the timing when you look at it.
Yeah, the 24-hour timing, yeah.
But either way, we've gone from 55% down towards 40, so it's lower than half. However, if we go out to December, pretty sure the rate hike odds are basically the same. I feel like this is wrong. Anyway, I had another chart. So essentially what we've basically been pricing everything off is the December rate hike odds all the way since the start of Strait of Hormuz situation kicked off. And so what we saw yesterday is the more the forward months, like September, October, rate hike odds coming lower, but December basically stayed the same. So we got that initial spurt, initial kickoff, but then came back down. I got to say, I don't agree with these moves overall. The next portion is we're looking towards PPI today, which I do expect to be a touch higher, right? Now, a touch higher means basically in line with the expectations for the data today. So we're about 0.1 higher on the month-on-month, and then the year-on-year will drop lower. That's purely because obviously the the previous month, going back a year, starts to drop off, and we did have higher numbers back then. So the PPI should be a touch higher, as with expectations. So potentially we're seeing this kind of like mixed picture as far as the Fed and rate hike expectations. We had the inline/lower CPI yesterday, a touch higher PPI today. So we've got this kind of mixed, no direct clarity, put it that way. But I gotta say, it is very odd. So we also do have European summer. That's another thing, in fact. I think spoke about this quite a bit the past couple of weeks. If I go over here, so this is the at the money volatilities for options, right? If we look at the euro here, it's down at 4. Okay, so the past 7 months prior, we've been running at about 8, 9. Same with the other majors, like the pound is down to 4, Aussie's down to 5.9, dollar CAD is at 3.8. Dollar yen is the only one that's really a bit higher, obviously because we've got that intervention type aspect going on. So you could also simply have the fact that as far as you've now got a reduced ATR, there's less volatility going on overall. We hit the peaks of that expected ATR in that kind of range, and then we naturally just retrace. So it's probably a bit of both overall. But yeah, there you go.
All right.
That's the aftermath of CPI.
Yeah. Africa Tech, just to let you know, we have seen your questions. There are quite a few of them. So we may need to tackle them in the call we have with Rich later on if we don't get round to them, because there's quite a few here. I know people are screaming out for gold, like this is a Spandau Ballet concert. So I don't know if you want to provide your quick analysis on gold before we do the countdown for PPI in half an hour or so.
I definitely can. So I've got another email. Sorry, I'm slightly distracted. I've got like several emails coming in at once from what I responded to before. But yeah, so gold, as far as today, I took this trade earlier on. Dirk also, I think, took a similar trade, going long after the drop that we had. Of course, just like we were talking about, we had the CPI pump. We came up to the highs. We've run right down. And so this is a bit of a mean reversion trade, kind of dead cat bounce type situation, where you've gone one direction for quite some time, coming into the next day. So you're probably going to have a bit of mean reversion, especially ahead of data later on, being the PPI. Now, I jumped out of this early just here. That is in part because this was on the new summer plan accounts. So taking into consideration the 50% consistency rules, right?
So you're basically done for the day.
Hey?
You're basically done for the day on that summer plan account.
Not done. Just
Okay.
wanting to take the trades at a early enough point to make sure that I don't have to take like several more trades later, just because I made too much on one singular outcome. Right. So from here, I mean, this is pretty much going to be purely dependent on the PPI. The PPI being a touch stronger, I can definitely see that we start to roll off from here. This was the structure that we had outlined yesterday for CPI. If we got in line, this is where we come up to, which that's what we got, and we came exactly there. If we got higher, we'd run down to this support, and if we got even lower than the expected, we'd break those highs and come up through here and potentially shoot right through that because it would be unexpected, right? But that was the lowest probability event coming through. Now we've retraced through here, we've cracked these lows. I seem to think we've got a bit of weakness like we've had good strength overall. So I think we might be getting a bit of just profit taking. We're going into a bit of a lull period. We're in that European summer. Volatility's come off. We're now going to be waiting for Jackson Hole with Kevin Walsh speaking there, making his traditional speech that all the central bank chairmen always do. Get some kind of direction through that. And go from there. Like, that's it. This is when we come into the boring period of the markets every single year. Right? End of August, it starts to kick off sort of the final week of July, and then coming into August, it's, you know, very boring. Coming into September, first couple of weeks, still boring, and then we start to pick up again. So we're right in the middle of that. It doesn't feel like it because we have had some of, you know, NFP, CPI, a new Fed chairman, we've got the war kicking on, all that kind of stuff. So it seems very active, but not really. So if you guys go and look at a bunch of the volumes and everything that has been going through the market, same with stocks, it's really like pulled right off. You know, we had the earnings before for stock market, for all the big players. Yeah, and now it gets boring. Unfortunately, you know, so you always get, it's kind of like the pre-Christmas period, right? Where you get moves that are kind of distorted because there's very low volume, so it takes far less to actually move markets in a certain direction. And then when they do hit a certain direction, they keep going, even if there's no fundamental reason or anything else. And then you'll see later on, then they reverse that and they kind of just go back and forth. Like, it's very much just like a stochastic back and forth type situation. We're not quite at that point yet. But yeah, so I'd be saying gold goes lower from here overall. That's why I jumped out of the longs at that point. Sorry, that was probably very long-winded to say something simple.
All right, and EUGU, any thoughts on those two?
EUGU, so similar deal. I was in an EU long. I'd probably be looking for shorts at this point. Again, we just seem very lackluster. Like, I struggle to see a further push up here. Somehow you'd have to have PPI coming in absolutely abysmal, way lower than the expectation. I don't see that happening. I do see it coming in a touch stronger. So with that, PPI itself is probably not gonna, it's not gonna like ram us lower necessarily, but it will shoot us a bit lower. And then the question is, do we just eventually wilt in that direction because we've now set that that sort of trend for the rest of the day. At the same time, we could just get a push lower, come towards today's lows, and then just basically bat around in consolidation sort of sideways, right? From this area we've pulled back up to, I'd say short. Aussie dollar is going to be pretty similar deal. I was in longs there, TP'd out through here. Aussie would be one of the better ones I could see that we do come higher. But especially with the NASDAQ looking a bit lackluster, that could roll right off. So we can see right through here, we're still trying to contend with this, but we've now got this like trend line coming through there. I feel like this is going to break and we come lower. I highly doubt it goes higher. If you look in the S&P, it's been sitting up pretty nice, but same deal, we're starting to run out of steam with this charge higher. So it doesn't mean we're failing. I just think we're probably going to get a bit of profit taking overall since we've had a shift in, indices coming right back up. The dollar has started to be sold off a bit more. We're starting to get more of the picture of the Fed not having to raise rates, but it's still the bond market doesn't agree just yet fully. We did see the bond market come off a touch, but I think people are just skeptical at this point. Plus European summer. That's it. I wish there was more something else more particular, but that's all at the moment.
Now, random question: does anyone in the audience trade any of the miners? So, for instance, Euro GBP, NZD CHF, that kind of stuff. Or do
We
you
always have
trade?
a few.
Yeah.
I only very rarely myself. Euro pound will be one sometimes, especially when we get that macro differential. It'll often be better to trade like Euro pound. Say you've got European, so the ECB becoming more hawkish. You'll often get more bang for your buck going long Euro pound than long Euro dollar. Quite often. As an example. But outside of those like rare cases, not so much. Not so much. Otherwise, I end up looking at too many pairs. You know, I start looking at Euro Pound, looking at Aussie New Zealand dollar, looking at AUD yen, Euro yen, Pound yen, this, that, the other.
Okay, interesting, because that kind of ties into a question that was asked earlier by Africa Tech, who said, another is, as a new trader, do you think trading multiple assets is best, or should you stick to one asset and master it first? What's your guidance as an experienced trader?
I would say start, like, stick with probably 1 to 2 assets beginning. Then after that, once you, because primarily you're not trying to find like an asset, you're trying to find like just discover trading and mature in your trading of. If you start with a certain asset, learn its characteristics, how it works, how to trade that asset, you're probably then going to be better off when you next go to the next asset and then learn it, and you'll be able to differentiate between, okay, this asset had these kind of characteristics. This one's very similar, but there's a little bit of a skew. Why is that? And then that's often because of the, the fundamentals around it, what makes it tick, how much volume you actually get through this other asset. And you'll start to pick up on those differences, the nuances, but there will be bits and pieces that do translate. And then once you go to the next one, you can go to the next and the next and the next beyond that. And the point is to learn the assets, learn the underlying, learn how the market works, and trade it effectively, not just pick some random symbols and click buy or sell, right? You're trying to actually understand what's going on structurally and then execute orders in a effective manner that is aligned with that understanding. Right? Otherwise it's just, gambling and like speculation. So I would say start with like just 2 cores that you pick, and then understand what kind of field they're in. Is it a commodity? Is it FX? Is it like an indice? And then go from there. Jumping around all over the place, I've never really seen that work very well. Don't know what you think, BU.
So this is a tough one for me, because I do kind of jump around all over the place, but I do trade my strategy, as it were, and I have alerts which kind of point me in directions towards certain assets, and I have a kind of a good understanding of how assets should behave in certain markets. So, for instance, if we're risk on, you'll see JPY weakness because people are borrowing from the JPY to invest in the riskier stuff that will actually make the money, right? But I know, for instance, yen has intervention, for example, as well. So, having a kind of general understanding of the fundamentals helps with being able to jump around from asset to asset. That's something that I imagine a newer trader might not have or might struggle with. But I think primarily the thing a new trader should focus on is being comfortable with their strategy. And I think the best way to develop comfortability with a strategy is first to backtest it, whether you backtest it across several different pairs or backtest it across one pair. That should be the fundamental basis. That gives you an idea of whether the strategy actually works in theory. And then the next comes forward testing, where you add, emotions into your trading. So with backtesting, you can trade a bit more mechanically. There's no emotions on the table, and also you can cheat a little bit. For instance, if you're backtesting gold a year ago, the price of gold is 4K up now, and a year ago it was 2K. So surprise, gold went up. So if you backtest and you're like, oh well, this is really easy, I know gold's gonna go up, I can cheat this a little bit. Yeah, it doesn't really help in terms of that. So step one, I would say backtest the strategy, whether that's one across one pair or a bunch of pairs. Next is forward test and see if you can get some sort of demo account, something that you haven't paid for. Whether that's getting involved in our weekly competition, which is very easy to sign up for. If you just go to your The5ers hub, click on contests, I believe, or community. If just bear me a moment, I'll just double check. Well, for those who don't know, it's free to sign up to the The5ers hub. If you want access to Discord, you need to have an account with us. But to actually sign up to the The5ers hub itself, just get set up. It's free. If you go to community and then go to contests, you can register for our weekly competition. You do get a prize if you win, but I would treat the weekly competition as a way of forward testing my strategy. So you go in there, you get your competition account, you can trade one trade on it, implement that trade on the asset that you've chosen. I think you can only have one trade open at a time, so that really narrows it down for you. And then see if, with a bit more pressure on and with a bit less foresight into what's happening, whether that strategy still works. And then you can graduate towards, okay, I've back-tested my strategy, so I know it works theoretically. I've forward-tested my strategy, so I know even without foresight that it does still kind of work. And then, once you're comfortable with that, then you can start looking to, get into challenge accounts. Potentially smaller ones if you're not confident, or maybe a boot camp, because that's cheaper up front. So you have less money to lose on the table. And then from there on, you can kind of decide, based on what you've seen through back testing and forward testing, what you want to settle on. I know some people I really, really perform well based on my back testing on gold or EU or GU or whatever have you, and they might stick to those strategies. Others will go, well, hey, my strategy works everywhere, so hey, I'll just go everywhere. But the first step for a beginner trader should be really testing out strategy, back test, forward test, and then small challenge should be the basis. Whether you do that across one or many, you'll find out what feels more comfortable for you during that testing phase.
Yeah, I think another example is kind of like if you want to start out like drawing or painting and that kind of stuff, like typically you start out with like a pencil and paper, right? You don't, do like pick up a pencil and then go to like watercolors and acrylics and then to something else or whatever it is. How are we doing, Pedro? That or for instance, like if you want to start driving a car and learning how to like race cars or whatever, you tend to pick one style of car. Often, obviously, the early one is go-karts. Then you go to like a road car, and then maybe you upgrade to F1 and so on and so forth. But you don't go like go-kart, road car, drift car, rally car, Formula 1, 2, 3 type car and try and do them all at once, right? You start with one, nail that down, learn the other parameters, and then you can kind of migrate that. Or the same thing if you guys play like Dota or League of Legends or something, like, in games, you want to look down one hero, understand the rest of the game, the surrounding mechanics, and then migrate to the next characters or heroes and learn them after the fact, right? So it's not about it's more about learning the rest of the surrounding environment And if you can put some kind of control element with one single asset and then understand how the rest of that environment reacted whilst you're in this one sort of isolated pocket and compare them, then you're going to pick up more information, quality information that you can actually act on rather than just jumping around the place sporadically, randomly, all the time.
All right, and we'll take this moment
I
to
don't
say
know if
hello
that
to
made sense,
Pedro and
that's
put him to work as well. Hey, Pedro.
Real voice.
Good, good. We did have a question that, we'd like your input on as well. As a new trader, do you think trading multiple assets is best, or should you stick to one asset and master it first? What's your guidance as an experienced trader?
Yeah, but I think for anyone that is starting, I think less is more. So I think less is better in the early stages. Just to try to master something first. It's the same thing as when you are learning any new skill. So like first you learn how to walk, then you eventually start maybe crawling a little, like running a little bit, and then maybe sprinting, and then whatever it may be. So just the basics is the most important when you are starting. So one asset, it may be the best thing, because as you know, eventually every single asset has their own characteristics, which you can then be able to trade all of them with more experience when you know what you are doing first and foremost, because then you already have the experience to know the difference between each one of those different assets that you have, between gold, FX, indices, and so on and so forth. But in the early stages, one is more than enough to get exposed, to practice, to learn price action, and everything in between. So I would say one, like have fun with it, entertain yourself, try to see exactly how it moves, the different times of the day. If it is FX, how it behaves at US Open, at London Open, at the closing of the day, and so on and so forth, around the news events as well. So I think that would be the best thing to do, because otherwise, if you try to learn many things at the same time, most likely you're not making any progress at all. So if you actually stick with one thing, then you're progressing much faster at a faster pace. And then you can move on. Eventually, then you can start adding another one, and then eventually you can add another one. But first, master the first one. And even when you start adding, just add something that is quite similar. For example, maybe you start with euro-dollar. Then after a while, maybe start adding pound-dollar into it, because they are quite similar as well. So maybe you can start having a little bit of fun, and maybe start understanding a little bit of correlation as well, which is a good thing to learn eventually in the market. And you can move on like that. I would say one at a time, or one thing at a time.
Okay, I hope that answers your question, Africa Tech. Yeah, it looks like we're just having a little bit of a shuffle. Technically,
no, so I couldn't get my keyboard to work. I was trying to
Okay.
It was on a different screen. So that's right.
10-minute warning for news PPI is in 10 minutes for all those trading on high stakes accounts. Remember, it's only high stakes account that has the news rules, so be careful around that 2-minute window either side of news. Is it going to be a big candle on PPI? And are we holding US 100 into PPI? For me, I don't think necessarily PPI will be a big candle. What I'm hoping, even though I don't think it will be a big candle on PPI, what I'm hoping is it will start setting a direction, because NFP didn't really set a direction, CPI didn't really set a direction, PPI, I'm hoping, will perhaps get us out of this ranging market that we've seen on a few assets. For me, the most annoying has been Euro USD, especially if I go down to 15-minute. This is the NFP candle, straight shot up.
Let's go to your chart. There we go.
Okay. So this was the NFP candle, straight shot up. For the majority of the week, we've traded within that 1 15-minute candle from Friday. And we're back in that range of that 1-minute candle right now. And basically, we're trading almost within Friday's range, basically, still for the entire week. So I don't think it'll be a big candle. I'm hoping it'll tell us which direction we're going in finally. If not, then hopefully news on Iran will do that. Unless it's the big three, I personally tend to hold my trades for the news. What I will do is I'll treat them in the same way that I do overnight trades in terms of spreads. So if I'm holding trade over a red folder news, in a ideal world, I'll add 50 pips on, wait till the news, that 2-minute window is gone, and then remove the extra 50 pips I've added on for my stop loss. Or if it does like break through my stop loss level, then I'll just close the trade manually after that 2-minute window is gone, just to keep my account safe. And that's usually how I handle red news that isn't the big three. So with the big three, I'd potentially look at closing trades. With all other red news, treat it as regular. I'll add a bit on just to avoid getting knocked out by spread, but then I'll quickly correct that after the news has settled down. That's how I kind of tackle news.
I am going to jump out of this NASDAQ trade. It's in some nice profit right now. It's almost at my TP1, so I'm probably going to jump out just now. Like, this is the bottom case scenario if we do sort of fall out of this pocket. But we've tapped through this sort of triangle just now, trying to push back up. I'm happy to just re-enter this after, since we got I've done pretty well the whole week, so I'm happy to wait for the PPI. I do think it's going to be slightly dollar positive, and also therefore NASDAQ negative. But I'm happy to wait for that to come out, roll into New York Open, and then see where we go from there. And if we do start like really pushing on down through here, then I'll just re-enter at this point. Just like I was saying before with the 200k that I picked up, I'm up like 9k already today. So I don't need to go too hard. So I'm gonna sit out on that. Personal account, I'm in on this as well, so I'm gonna jump out there. Same with the futures. I'll probably wait till New York and then decide.
Which we close everything, or just move to stop loss to break even and gamble the move?
No, I just TP here. Like this is fine. Like it's still like a 1-to-1 pretty much at this point.
Yeah.
Right? Yeah. So
it's just because I actually like where price is kind of in this situation where even now we managed to still break slightly with the previous wall, just the most recent one in there. Because he can actually sell off from. I could see it selling off from here. To be honest,
I mean,
maybe spike a little bit. Just because you already have some distance from your entry. It's not that you are exactly at your entry point. You still have a few points in there from your entry level. So I don't think even if price by any chance goes up, you don't get slippage on that entry. So that shouldn't be a big problem. But there is a potential. I could see price falling at level 1, level 2, whatever targets you have there.
Yeah.
Could eventually go there.
No, Neil, I'm gonna take it here. Okay, hang on, give me a sec. I agree with what you're saying. I do want to still be short, so I do agree with that. That's why I'm very split. But okay, no, I just I've jumped out right here.
Fair enough.
1, 2, that's out. That one's out. Here we go. Everything's out now. So I've got a clean board right now.
Yeah, I do like some of these dollar pairs right now. Not so much the euro dollar yet, even though we did manage to break slightly that low in there when I am here. Thank you. even though we did manage to slightly go below that previous Friday low. But I do like even more pound, for example. I really like it. I like the fact that price came all the way to take also this structure in here. I like the fact that price bounced like this and still managed to make another low and now moving higher. I think maybe somewhere around this level. This is actually Quasimodo. Like I think Victor eventually is going to get to be here, but this is actually a Quasimodo right now. We actually had a double topping here, which was nice with this week with the news or some kind of news or whatever, and then price kind of created the head of the pattern. Now the only thing regarding to this pattern itself, that this price section that you're having here, is that if you do trade the left shoulder, which would be then an alignment with these two moves in here, one, then eventually two, and even the third one, actually look at this price actually even created this one and then broke the low, perfect, is that then eventually, as a theory of Quasimodo, price would go somewhere around here, back into this level to then eventually drop. Now we already reacted from it, right? So basically, as you can see, you already had this touch exactly of this candle that reacted exactly from the same line at this level. So we needed to kind of maybe go a little bit lower, and maybe the next point could be somewhere around here, or kind of even a little bit underneath, and not so deep into the top. So basically, what I want to say is that maybe whatever reaction that price may still have back to the highs may not be as deep in alignment to this level. It may be just a little bit shorter, maybe somewhere around here, and then price maybe go. I don't know if there's a fair value gap in there in another time frame that maybe price can benefit from it. We also start having a little bit of some structure in here, a little bit of liquidity at around this level. So I'd like to see, I'm kind of interested in potential shorts at around this level. Maybe now with PPI, maybe could have a little bit of spike. I would like that, and then eventually price could sell off. Aussie dollar has kind of a similar pattern as well, even though Aussie ended up taking this top in here. So basically just collected liquidity above this size, and now is moving to downside, even though one of the differences is that we haven't really managed to take this low yet. Again, Euro, as I mentioned, did manage to take slightly this low, but Euro already had this move, right? So one of the differences that Euro already made this move yesterday. So maybe let's see how price may react from here. We are literally now on the news.
Yeah.
PPI just came out, but the dollar, pound haven't really made this move in here. So that's one that I'm going to be paying attention. I'm going to actually set up an alert in here, and I may want to go short. At around that level. Now the dollar is a little bit of a tricky one, because yes, there you go, dollar. We mentioned also that we wanted to see dollar taking this highs, and I'm curious to see if this actually then an attempt to push price lower, or eventually price will just actually continue to push price into that level. Not so convinced in here on the dollar, but the pound, I like it. For example, I think it looks good. I think dollar CAD as well yesterday was kind of turning in an interesting way. So maybe dollar CAD could also be a pair that maybe could aim to go for a long opportunity. Yep, something like that could be interesting. Now that we actually managed to break above this top, also most likely broke this trend line as well, and here, and on the left side again, there could be more potential to go further down on the dollar CAD, but this is actually kind of the structure that managed to break this top. So whatever happened in here, this was the moment that finally price managed to break above this previous high. So those levels sometimes they tend to be a little bit important to hold price. So maybe there's an opportunity in here on dollar CAD to try to aim towards potentially that level. So maybe along somewhere around here could be interesting to try to go into close to 1.4. 1.4 could be somewhere around there, an interesting opportunity. So at least a 3-1, maybe even more than that, depending on the entry. Yep, another one I'm going to keep an eye on. Another alert placed. The dollar pairs, they don't look bad. They don't look bad. Dollar yen, not yet. yeah, that's what's on my radar for now. Gold also, I like it. Okay, I don't know if you guys have spoken about gold, but gold finally is managing to break a little bit of the structure. I'll be all over for potential shorts. Price is already reacting now from this supply level. I'll prefer if price actually eventually now. Again, it's some kind of quasi-model patterns that are starting to be created around here. So I have the left shoulder as well. Price then eventually created the head and now break structure here. So it's kind of that potential move to the downside, even if it is to try to retest these 4,300s. I think that's a possibility. From where price is reacting right now, it also can make complete sense. It's a good supply level in alignment with this previous level support resistance, basically in here that created the last top. So yes, gold could be interesting. Again, me preferably, I would like to see price going a little bit just deeper into the top, and then looking for those shorts. So that's one that I'll be looking. And again, gold is still reacting within the structure that we've been talking about during this week, which is within this level here, 4,450 to 60, somewhere around there, still within this supply level that we have. That's where gold is still reacting. It's definitely starting to lose momentum. Anytime it goes up, basically goes down straight away, not really sustain any kind of move upwards. And maybe the sellers are actually maybe managing to push price a little bit down before maybe more buyers are going to jump into the market in the future. So gold also quite interesting today, at least based on what I'm looking for, which is reversals. And what the reason I'm saying that is because price, as you can see, is starting to do this more of this rotation, losing momentum, and that's something that I like to see it in here. Yeah, that's basically what I'm looking for. And then you have cookie, and also NASDAQ. Go away. Yeah, it's basically cookie is the one that is telling me everything. Yep. So basically, yeah, OJ. So you got out, right? So because price actually touched your entry and now it's moving to the outside.
Yeah.
Again, which again, no surprise. Honestly, no surprise with this move on the NAS.
Yeah, I'd say it's actually surprising with the numbers that we got. I guess
I haven't seen them yet.
Yeah, kind of odd because we actually got them.
Hello.
Again, anytime.
I'm sorry, LJ. Whenever I come in, I seem
you
to
go
be
underwater.
You, I seem to push you into the swimming pool.
Oh, really? Am I underwater?
Yeah, you're back now.
I'm back now? Okay.
Yeah.
All right, there we go. That's good. Anyway, welcome, Victor. Happy to have you here, man. Yeah, we actually got the PPI that touched lower. And so hence we got that spike higher, now pushed down. We also got jobless claims coming in a touch higher as well. Kind of a weird reaction though. How much we've actually come further back down. So I'm gonna wait and see because you know, where will I take another NAS 100 sell? I'd like to see us actually hold. So we came up, tapped the top of this triangle that we have here, right into that, came back down, snapped through it again, but we're back up like in between, right in the middle. So just like I was saying before, this is why I wanted to, you know, jump out of that TP and then sort of wait until New York to actually get that final direction. If we are coming off lower or somehow we jump higher, because I didn't like yesterday's reaction after the CPI, like how much we came off on FX. I would have thought we'd have a bit more sustained, at least holding of price up here. And then again with today's reaction, this is a bit, a little bit odd. I think the market's in like from a macro standpoint in that kind of turmoil of coming to grips with the fact that the Fed isn't going to hike, that inflation is lower, PPI is lower despite everything that's going on. But we still, if I look at the bond market's still trying to call bluff on this back and forth. Yields are coming a touch lower now, but yeah, I think we're in like an indecision standpoint. and then plus European summer, like we were talking about. So, anyway, I'm gonna wait until New York.
LJ, is it a bluff in the end? Do you think?
A bluff? What do you mean? In what terms?
You said the bond market is calling it a bluff.
Oh, calling it for the bond market. Yeah. Basically, they're trying to okay. So we've got every single indication that yields should come lower now, but the bond market is still kind of trying to press them a touch higher. We've come off a couple times, but not really dropped off. So we've just come off like a touch. And so the bond market really is what's like driving everything at the moment in the background. Obviously, it's something that most people don't look at. The bond market is often considered quite snoozy, a bit sleepy for old people, that kind of stuff. But as we know, going back to the GFC, the bond market was everything, and that's what destroyed the entire world. And the bond market is actually the second largest traded market outside of FX as well. So it is very large, but it's definitely not something that most people look at. Not until it's kind of like too late type situation. But yeah, right now yields are moving everything. So it's the same reason I don't have the chart up right now, but the same reason that we saw gold getting hammered since the war. And when we had that situation where people are like, oh, okay, well, gold's like a safe haven. It's meant to be protective against like adverse turmoil events, but we saw it just come right off. But if you line this up exactly with the with treasuries and the bond market, they line up perfectly, right? Because it's down to yields and inflation and Fed forecasts into the future, not precisely what's going on now, because it's all forecasting overall. So
based on the expectation of the curves and so on.
Of rates, yeah.
Of
rates, yeah.
All right.
I
go ahead. I don't know who it was, but go ahead.
LJ, I think that was you who was trying to talk.
Yeah, I was going to say something. Hang on. I need to see if there's some kind of other piece in the. You guys keep going, because this is odd. I just want to try and see if I can find anything else.
Okay.
Why? Yeah. Anyway, ignore me. Just ignore me.
No problem. We will have a hard time ignoring you, LJ, but we will try. Let's say hello to all those nice people in the chat. I mean, if you're here, you already have my vote of confidence. We have Alexander, Russell, Alvin, someone from a Portuguese-speaking region, Boa Tarde, from Portugal, so it seems. How are you doing? I'm the only person here who can speak Portuguese, so only direct your Portuguese questions to me, no one else. No one else, my friend. Of course, I'm the only one here who can speak Portuguese. All right. All right, let's see. We have, actually, I had coming up sometimes everything lines up almost perfectly, and what normally is a risky event actually turns out to be just exactly what you need and moves exactly as you want. And what I'm talking about is a trade that I had on NQ, actually on NAS as well, on the CFDs. On the 4-hour, we had a reaction. Price was coming very, very strong. Actually, let me go to the higher time frame. We are in a fresh order block in a supply zone. So it is not too weird that I'm looking for that short. Actually, if you look at the daily, there is a beautiful, a Mona Lisa kind of entry order block on that daily time frame that we are playing with. And each time we get there, the market seems to be able to push price, or the level seems to be pushing price a little lower. Although I'm seeing that level to be breaking soon, right? We had, if you look at the daily, you can also see there was a fresh order block being created. It reacted the way you would expect, and it leaves another fresh order block on that daily. So it seems like it's only a matter of time until the market might go through it. However, following the the rule-based system, which I trade, I had a fresh order block on the H4, and using the 1 hour, was it the 1 hour? It was the 1 hour. Yes, it was. I got in there. I got in and I looked for that level for anything that could indicate that the market would reverse, being very aware that the higher time frame indicate that we might go lower, but at some point it looks like we're going to be breaking that structure, that supply zone. But in the meantime, we got a nice 5 minute, as you can see here from the left, a quasi got in, and it comes out. Actually, it was before the news, but it hit just the volatility before the news, hit the target beautifully. And the target that I had, if you wonder, was, let me go check, it was the 2 hour. Was it the 4 hour? No, it was the, actually it was the, no, that was something else. It was on the 5 minute, I believe. There was an order block there that, it was that high. That little high there probably was a top on the 15 minute. Exactly, that was my target. It hit it, and I'm out. Nice 1 to 4 for the wallet, I was gonna say.
Nice.
And that was, Cookie wants to have some celebrity
Some
time.
screen time. Yeah.
Yeah, some screen time. All right, and the other one that I just got into is the following. All right, so we have the market pushing up quite nicely, and that's not what I wanted to do. On the higher time frames, we are also in that supply zone from before, but the momentum is still at play, which is indicating that we are likely to be going higher. And if you go to the lower time frame, we've been discussing that already. We had a channel, an upwards moving channel that we broke out of yesterday, and we seem to be holding. Past tense. We seem to be holding that lower level until we didn't. We broke that, and right now we are retesting it from the lower side, meaning a broken trend line being retested. You can actually see how it curls up from below after breaking, holding that level, right? Holding that level. It actually had a very beautiful breakout. Came in, it didn't react. I was looking to get long that on yesterday with our viewers on the Discord. That's an invitation for you. You can get on the Discord as well and see us, consider. I didn't actually trade because it didn't trigger, but I was there waiting patiently with everyone until it eventually broke down, and it didn't trigger, and it didn't hold up, right? There wasn't the reaction that we were expecting, but as soon as the level was broken, right, that's the retest, because this is the first one. You could have had an idea there was some kind of a trend line there. That's the confirmation. On the higher time frames, the level was respected, and then we broke it. First we respected, and then we broke it, only to come now to retest it from the lower side. So basically you have a level that was respected for some time. It breaks it and then comes back from the underneath to presumably go in that direction. Typical break and retest, just this in this case, a diagonal break and retest. So that's one thing, right? And I combine that simple classical trend line retest with the following. We had a fresh order block right here that was created yesterday that broke, basically, that was the structure in my mind that broke the trend line. If we go to the, was it on the, oh, it was here, yes. So the current level right there created that H1 order block, and price came in, retested beautifully. We had it was on the 1 minute, was it? Yes, it was on the 1 minute. I already got TP1, and I'm still in the trade. I bagged a little less than 2.5 R, and I moved my stop loss to break even. So it takes me out I no longer have risk here, only my floating profit. And if it takes me out, I stand with 2.45, 2.46, something like that, are in profit. The area or on the lower time frame, there was a beautiful quasi right there that got reacted, came back, the head, the neckline, and then it went came back actually on the 3-minute. You can see a beautiful reaction we have here. I mean, this is to be framed. I mean, look at that. Look at that reaction we had right there. What's that? That's not coincidence. If you're nowhere to look for, you can understand where that's a one-eye smiley. I know. Let me. No, that's kind of sad. Let's put another eye there. The price action will take care of the smile. So if it takes me out, which is about to be take me out, the level, the target was the 1 hour order block right there, and that got hit right here after the news in the few minutes thereafter. I think I'm gonna be breaking. I'm gonna be hit break even, which is okay. I had the reason that I didn't close all of it was because we just created yesterday a fresh daily. That's a reason for me to hold longer. And but it looks like it's not going to happen. My second TP was aiming for 1 to 20. Already with that high kind of risk reward ratio, you're not going to expect it to hit that too often. But that's how it goes. So I already got out. I had TP, my break hit TP, and the rest hit break even right there, out of the trade. But two beautiful trades on my side here, guys. Let's see. Buyu, I think you were just about to say something. I can read your mind.
I was going to say, I am going to be hopping off now. I just want to give a quick reminder to hop into the Discord in 2 hours for the special session with Richard W, with our performance coach, who was on earlier in the stream. And I've got a bit of exclusive news for you. At least I think it's still exclusive, which is next week you'll be seeing a lot more of us because we are starting an hour earlier. So we're going to be changing up the stream a little bit, trying to give you guys a bit more focus in terms of a London session and a pre-New York session, and then we'll be switching over to the 5ers futures to cover the New York session onwards. So yeah, make sure to get the time right and tune in an hour earlier than usual throughout next week, and we'll see how you like it. Feel free to let us know in the comments next week whether you like the new setup or not. But it is a change that we're planning to make, just to kind of give each segment a more unique feel, rather than one long stream. You can think of it as London and pre-New York. So that is a bit of an exclusive for you guys.
Yeah, exactly. So it's just 1 hour earlier, and then in between it'll be the same duration, but in between there'll be a 1 hour split, right? So it kind of breaks it up a bit. Also gives you guys a chance to, get up and get a
I think it's half an hour split,
whatever, and then come back. What's that?
Yeah. So it's going to be a half-hour split, a 30-minute small break between the London and the pre-New York session. The stream will continue running during that time, but it's just so we can have that kind of distinction of New York, pre-New York, London, and then the futures channel takes over for the New York session. So from 7 o'clock GMT, the London opening bell, which is 8 o'clock UK time, will be the start of the session, and that will run until 10 o'clock GMT, so 11 o'clock UK time. Small half-hour intermission. Then we'll go into pre-New York from 10:30 GMT until 1:30 GMT, so that's 11:30 to 2:30 UK time, and then switching over to the futures channel to take us through to the rest of the New York session. So we'll try and see if we can cover more stuff that will move during during London session. During the London session, we can focus on stuff like GBP, Euro, CHF, news events, that kind of stuff. And then pre-New York session, we can focus more on the US side, like USD, CAD, the US news, that kind of thing, just to break it up, give it a bit more of a unique feel, and give you guys more time to spend with us because we know how much you love that.
Yeah, I think that 30-minute. Go ahead.
I was just going to say, it also means we get like just at the end of Asia as well, coming into London. So a little bit closer that we can cover that like final move through Asia, running into London, and then see where we head from there. So I think it'll be good. I like it.
Me too.
I like it very much.
We're going to create our own, or better version than CNBC and Bloomberg shows. So
exactly.
Yeah.
Good stuff. Yeah, I think that 30-minute is perfect to get your third cup of coffee or maybe your bag of popcorn to for the latter stretch of the session. I think it's perfect.
Mm-hmm.
Yeah.
So yeah, be on the lookout for that change in schedule next week. So an hour earlier. Join us for the Discord call in about 2 hours with Rich. And, if you need a bit of music recommendation, I've heard someone's been chucking some music into the break room on our Discord channel. No ideas who, but that person is an awesome DJ, if I do say so myself. And joining our challenge as part of the Psychology Month. So go and touch some grass for a chance to get a bootcamp account. And LJ is doing a very lovely job there.
Yeah. Should I, just before you go, Boo, should I throw some of my music in there as well?
Yes. Yes, the break room is for everyone.
Like my personal music, though. Like stuff I made.
That would be really cool.
Probably should have done that for the playlist that we have, the summer playlist as well.
Yeah.
Yeah.
I didn't think about that.
Yo, guys, like the stream if you want to hear some music that LJ has actually made himself.
I got some chill beats, some nice summer beats you guys can hang out to and trade to.
Yeah, you should actually add them to the live stream. Add them to the live stream instead of us being here in a silence room. Just add them add it to the playlist in here.
Yeah, we can have a background track.
Yeah, definitely. I'd probably have to cook some stuff up to make it like low key enough that it doesn't overpower like people talking, right? I've got a bunch like that. It's not like too much.
All right, I'm looking forward to it.
Sure. All right, cool. I'm going to have to jump out as well, Bu. So I will also be leaving you guys. I'll see you guys tomorrow in the Discord for myself and Void, aka Akram, our Friday session to round out the week. And yeah, I'll be jumping out also. So thank you guys, and catch you later.
All right, take care.
To you,
LJ.
Bye, everyone.
Bye.
Thank you.
See you guys.
All right. So we are, and then it was the two of us, Pedro.
Exactly. And there are a few quasi-models that I was looking at, potentially on gold, potentially on maybe pound dollar, the euro dollar as well. Kind of, you already mentioned a little bit, but even in the you are actually analyzing now pound dollar, correct? So walk me through. Is there a quasi-model there? Kind of,
yes,
when you
there
look
is.
On our time frame.
Yes, there is. There is a beautiful one actually. Now now you mention. How cool! How coincidental. We have, if we go to the to the higher time frame, we are currently retesting a level on the weekly, but because there are two overlapping equal structures, they cancel each other out. So that's not very significant. And I'm talking about the supply zone that is indicated by that weekly structure. On the daily, however, we had yesterday a fresh daily order block created by that almost as an outside bar. And if you go lower time frame, you want to be getting ready for something in here, right? Without even knowing exactly yet. So on the 4 hour, there is a fresh order block right here. You see it, and actually it is also a quasi. So it's for more reasons than just the freshness of it. That makes this a fresh order block on the H4. That means that you could look for, reasons to go short this whole area, on other time frame using other confluences, either indicators or whatever it is that you use. In my case, it is lower time frame price action. So if you go to the 4 hour, you go to the 2 hour, you see that you have the same level, a little bit tinier, not as much, and you have the level above us, which is the second level. But before we get there, this would be the second level, the second entry area that I would be looking for to get long, or at least to start looking on the minutes, not to get long, start looking on the minutes for that. This is the ignition. This is the place or the area that push price lower, that caused price to go lower. So that's the eventual place that you want to be looking for that possible reversal. And what I'm talking about is you could actually see it from like so. That's basically the uptrend. It breaks it, goes actually all the way lower, and there are two areas on this beautiful, beautiful quasi. Who said the Hunchback of Notre Dame wasn't beautiful? I think this Quasimodo is just gorgeous. We have an entry here, entry order block right here on the 1 hour and the one above us. It looks like it's gonna go through it, and that's fine. The only thing is, if it doesn't go through and it starts a reaction, then you can go to the lower time frames and start looking for your entry. At least that's what I would be looking. Look at that little area here, and this area, to me, according to my strategy, this is the area that needs to be tapped in. If it gets to the 1 hour, that's fine. You can take a trade. That's fine. But I would be I'm bound by the rules of my trade plan, and I can only take the trade if it gets to that level. So it needs to reach that line there that I miserably failed to replicate with my free hand. But that's the area that I would be looking for a possible short. It looks like it has all the markings of something that's going to go through it. That's what the momentum is telling us. So maybe it is just simply not going to hold, not going to reverse, and that's fine, right? These areas are not, a guarantee that price will react to them. Neither are they an assurance or of any kind that the market will totally reverse there. The only thing they tell you is that they might be a reaction, and that reaction could be the beginning, could be the first push that changes everything. But it doesn't happen all the time. Actually, it happens less often than 50%. It's in a minority, but that's fine because I combine that with a high risk reward ratio, meaning that I don't need, you get actually see some reaction on the 1 minute. It's only on the 1 minute. It's not enough for me to do anything, and it hasn't reached the level. But we're going to be watching that. That's GU. If price doesn't react to the level, doesn't create any quasis, then I'm going to be waiting patiently, as Cookie is, right here for the level to be tested, and then I'll be happy, as Cookie is when you give him cookies.
Yep. Then you ran to it, but yeah, like there were a few, right? So based on what you could see on the dollar, it looks like that there was some potential, maybe even the euro a little bit, pound. Gold as well, it looks like a little bit of a Quasimodo on the maybe 1 hour time frame. Aussie dollar as well, it may look like a potential Quasimodo, which looks nice because that's usually what you want to see when you are looking for reversal patterns. Now, of course, there are some different nuances when you're looking at price action. For example, as I mentioned in here on the Aussie, maybe you'd like to see at least this low also being taken, depending if you want to consider this low as the low or not. Otherwise, maybe you needed to see this one being taken before taking this move. Also considering on the left side, in this case, price collected liquidity from these highs and then found some selling pressure. However, there's maybe still also potential to go higher. On the pound is exactly what you mentioned. I actually have it in here, so I'm looking also to see how price may react from around around this level. And one thing that I mentioned, actually, I like the fact that price actually took this low altogether. So that was good. As again, price is still is also reacting from an interesting level in here on the left side, and definitely you have this double top, even a triple top there, fake out, and let's see how price may react. Let me actually just set up a new alert because that one is already touched. So yeah, that's an interesting one. Even dollar CAD, actually, maybe I would like your input as well on that one. The only problem in deal with is dollar CAD is I'm not the biggest fan of where price is just reacting on the left side. I could try to force an idea why maybe this is a good level, but to be honest, all these levels in here, they look quite similar, and price could just actually continue to move to the downside. But on the lower time frame or more intraday, there is also a potential Quasimodo. Maybe this is a weekly time frame there, because when you are looking more into what you have in here, we could also somehow potentially start mentioning that this could be a little bit of a market shift and eventually a Quasimodo pattern being played out in here, for example, on the 15 minutes or 1 hour time frame. Even though price actually, when I do draw kind of the levels that I like, which is we had this top, we have the fake out in there, price got to the extreme of this level. Now maybe I've been even more confident if price had managed to break above this level, and then move down and then try to do this next move to close maybe to 1.4. That would maybe even be better. But I'm going to follow price. Okay, I'm going to follow what dollar CAD is going to be doing around this level, and if there's an opportunity to do it, then maybe we can. This was already a good short. I don't know if anyone caught this one. There you go. Like when you start having this type of Quasimodos, potentially big Quasimodos on the higher time frame, what we also have is almost Quasimodos everywhere, because it's another one that we had in here as well, and this worked quite nicely to the downside already.
It's basically is telling us, the reversal on something that moves all of them, which is the dollar most likely.
Yeah.
So and the only difference is which one is going to go first. And some might, in the process get invalidated, but then created on the second or on the third time. It's a pattern, right? We see that all the time. Those who trade the quasi, they come in clusters.
Yep. And then one on gold, which maybe I would like also your input as well. If you do see it as a potential Quasimodo. Again, also I'm interested to see if you consider this one as a good order block or not, where price actually is reacting from the left side, and then this move that finally at least price managed to break some kind of lows in here, because before that price was basically holding every single low, and now finally we had a little bit of a move, and maybe price could go a little bit higher before trying to squeeze all the way back into this level. Again, on gold, they've been quite bullish since the beginning of August, and now we are decelerating a little bit. You can see that the sellers are starting to show up, saying hi in this market. Buyers are struggling, even though if they do manage to break slightly highs, price gets squeezed back into the structure almost immediately, and maybe this is a good opportunity to potentially look for shorts. Again, I have it. I would like to see price maybe going a little bit higher, and then we'll see. But yeah, what do you think about gold? Is it something that you are considering?
Actually, the gold is quite interesting because thank you, Remy. Let's take a look on the higher time frame. There isn't anything in particular. We have the supply zone above us, but we're nowhere near that level. The market overall is in a very bullish stance. If on the weekly time frame, we have some structures that are further up, I should say, and we created the weekly came back. We created right here and came back to move out of it. If you're creating a weekly structure at any time frame, and it moves, beautifully perfect as you were expecting, then you expect price to reach, reasonably to reach that level. In the same structure and the opposing structure in the same time frame. So I'm in longer term, I expect price to be going for that direction. But that's on the weekly time frame. But on the daily, you can already see that the market is being basically slowed down by a daily structure. It's not fresh, it's not part of a quasi, so I'm not too impressed by it, but the market is reacting from it. You can see it right here. So the question to me is, yes, on the weekly time frame, I expect price to reach that level eventually, but are we going to have some kind of a push down before we continue higher? The upper wicks tell us, they're getting, sellers are coming into the market, just as you said. They are coming around the corner saying hello. So if we go back to the lower time frames, one nudge, which would be then the 4 hour in my case, we can see that we broke basically a level, an uptrend, a trend line, but it's not there yet. Why do I say that? We did come back and retest. Actually, first one we had a nice H4, but that was totally within complete bullish price action. There wasn't a lot to go for a short. The market eventually reacted on it, but didn't break any trend line. And then one last time, it had that reaction right there. However, and afterwards, it started to get some traction. You can see it broke the neckline, the trend line. Keep on saying neckline. It's a thing of habit. And excuse me. And the structure on the 4 hour, and this is a neckline, we haven't broken it yet. And which is the reason why I am a little bit cautious about this. I'll need to see a little bit more of so the market on the H4 is not indicating a breakdown yet, just perhaps a slower rate of climb, meaning it's still going to go up, just not as just in a different slope, because you would expect this H4 to be broken. Maybe that's something that will happen in the future. Maybe I'm just a little bit early with my possibilities, with my scenarios. Maybe it'll happen later, and if it happens, then we have a completion of the pattern, the quasi pattern that I would then be looking to short on the right shoulder. So that's on H4. And if you go to let me indicate that here, you have a fresh order block on the H4. Let me see it here. This one has already been retested, so I can no longer use this. So I will have to wait for the market to create something new. But if you look at the 2 hours as well, it did not break. This is a 4 hour neckline, but it's also a 2 hour. Didn't break it. Price didn't create a higher level, so that means that I'm unable to take this trade. Currently, as it is indicated, the level on the there is a level here. If I take it, that would be based on the H2, not on the H4. But I do need that H4, and it's not there. So I can't take the trade without my H4 structure. And this one does not count. It doesn't count because it's already been mitigated, even though it hasn't been invalidated. So basically, I'm getting those structures that the market is really trying and succeeding a little bit in starting creating breaking of the structure, the price structure, and it looks like it could have some legs to run on, but it's not there yet. So let me go check something here. Let me expand this so we can have an idea. Right, so it reacted there and there on the daily as well. So the market is there is an H1. So if you're not bound, as I am, to wait for the H4, you could be looking for a trade right here, which is when price comes back to retest it, that would be the area you could be looking. So whenever we get back to the 1 hour order block right here, you could be looking for possible reversal areas. And if it comes and it falls together, if it, with the trend line, maybe a little fake breakout, coming back or reclaiming of that trend line coming back lower, that would be a nice entry. Get in when that breaks, put your stop above or above the whole structure, and then target initially this swing low but you can clearly see there isn't a lot after that line. You'll be going into, those swing lows. Perhaps targeting this whole area would make a lot more sense, because who knows, it might not get as low as quick. That quick. So I think there's certainly a, not for me because I don't have the H4, but this is certainly a nice area to be considered as a possible short. Putting your stop above and targeting something in that level right there. Something like that makes a lot of sense to me. I would wait for the market to push higher though, not at the current levels, maybe not as high, but could be something like that. Depending on how the market moves in about 20 minutes, actually less than that, because that's the open of New York, the New York session, the one that moves like crazy most of the time.
Yeah, but I like it. I like it, again, the same way that you have that daily rectangle where the highs are not reacting to, there's still maybe the possibility, once again, that maybe price can end up making a new intraday high or something like that.
Sure.
Before maybe the sell, as we have basically, it happened basically every day of this week. But I do like it now. I think price is finally showing some weakness in there. And again, gold has been moving to the upside since basically the 1st of August. So it has been almost 2 weeks, and eventually we need some kind of retracement before eventually new buyers are going to jump into the market. And this looks like a good structure. I like the setup as well. Just the same thing like you. I would like to see now price going a little bit higher before aiming for a potential short. I already have an alert, so I'm going to be waiting for it. Let's see, price does manage to go a bit higher in there.
I'm gonna check if there's, even though these are not valid for me to take because I don't have the 4 hour, but it's still helpful for those who are wanting to take a trade. These are the levels that I would be, had I the H4, where I would be entering or look for an entry. And then we have one here. So actually that tells me already that it is too big of a structure to look from the 5 minute. Yeah, it's too big of a structure. So I would either have to go to the 15 minute or just wait for some new structure to be created. The 50 minute, just by zooming out, you see there's one huge candle, so that's not very helpful. That's the level. This whole area is one big supply zone, which also functions, doubles as the entry order block on the quasi for the 50 minute. I don't use the 15 minute. I use the 1, 2, 3, and the 5. But I mean, there's nothing against it. Just a matter of taste. So yeah, I'm not against the 15 minute. No 15 minute structure has been harmed in this presentation.
Yeah. What about NASDAQ? There's a few guys asking on the chat about NASDAQ and US indices. Again, we are 15 minutes away from the US Open. Let's see what opportunities can you take advantage from.
The two things that are pushing here, we have the two tension fields, right? One is we are back into a supply zone that was created but a couple of weeks ago, and on the daily time frame. So within that supply zone, we have a level on the daily, which is basically this, an established uptrend. It has multiple variations to it, but eventually this is the structure that has been created. It goes back, and this whole area is a supply zone, but currently I'm only focusing on the top level, the very top level, and we've had multiple levels there coming, multiple times we come there, and each time we push away from it. That's good indication. However, the structure of the market, if you look at it, if you go to the, I'm just going to go to the 1 hour just to indicate, actually that's not a great idea since I have a couple of things there that obstruct our view a little bit. The fact that I'm talking about this little area. It looks a little, but it's not. Each time we did have the reaction, which is confirmation that it is a supply zone. Price is looking at it. I mean, the market participants are reacting on it and all of that. But if you look at how price has behaved each time we got there, it acknowledges the level by reacting off of it, but each time the reaction is smaller. And that's an indication that the market is basically consuming the supply that is in the area, right? So whatever, not whatever, but the supply that we're supposed to push price lower is getting consumed. And each time, even with this one, look at that. I don't know if this is going to be the low yet, but each time the reaction is smaller and smaller, just like any other structure, like a trend line, like a horizontal line. The more retest you have of that level or that structure, the weaker it gets. So I'm actually on the higher time frame, on the H4 and so on. I expect price to have another go at this level, and likely, perhaps on this fourth time, break through it. Who knows? I did take a short, but that was based on intraday structures just for a couple of hours. It's not based on this higher time frame. So that's one thing. And if you look just without that's the reason, the sell side of the idea. But the momentum is fairly in the indication in the side of the buyers, meaning basically this is what you're seeing. I mean, this is what you're seeing. That's the pattern where we are currently right here. All of this is this, right? And we are kind of like this. So if you classical chart patterns, this is indicating that the market wants to continue higher, break through, and go to the next level. Will it happen? We'll have to see. But it certainly is looking as if it's going to continue to go higher in about, 12 minutes or so after the open. And if you go to lower time frames, yes, there are levels there, and I did take a trade and it did work out, but it's much easier to, once the market starts breaking out, to be on that side. The side of the momentum, if it kicks back, you're going to have the market pushing higher, because all of this supply zone that was holding price down is no longer present. And whenever both sides see that that level no longer is pushing price lower, then the sellers will close their positions and get out of the market, and the buyers will be buying. You have that double whammy, and price will go, I mean, if it happens, price will go up aggressively. So if I look at that on the lower time frame, let me check here. Do we still have I took a short. Do we still have a case for a short? No, I don't see that case anymore, because this was the basis of my short, and it no longer is fresh to me, right? This is the first candle that was completely outside of that range. See it right there. So that makes it a no-go. I'm not going to be taking another short from take a short on NQ. So that leaves me on the sidelines, basically. Yeah, I could see myself switching side and looking for this, but that takes another 40 minutes, not hours, 40 minutes to materialize, and then I could be looking for levels. There are a couple of levels here that's not fresh. It's not going to be fresh by then. There is a nice quasi here. Look at this. All right. That's the head, left shoulder, neckline. We haven't taken that out yet, but maybe that could happen in the open. We take it out, we come back to a level, that becomes a nice entry order block here, or maybe this whole thing is, and then we go up, up, and up. That's the name of Disney movie, I think. But yes, going up.
With the balloons.
With balloons, yes. I'm not a pensioned trader, but I can certainly ride those balloons up with the price action we have here. Anyways, that's the quasi neckline. So there is no quasi right now. There is a potential for a reversal. But if we take out this level, if we do so with the open in about 12 minutes, that makes it interesting. then I think there isn't anything right here. The only thing we have is, let me double check this, the high is 87 and the closest, yeah, this is the entry order block, and actually I didn't have to open, yeah, this is the area. There's only one area and it's actually the tighter one. Okay, so this is the area that I would be looking for going long, switching sides after taking that TP. And this would be the area. And if we can get some kind of a, on the 5-minute or the 15-minute, let's take a look. What do we have? What do you have for our viewers? While we're doing this, if you enjoy, even if it's just for our, you know, unsuccessful jokes, if you are a little bit entertained or you enjoy this, you know, seeing me failing at telling jokes, doing those daddy jokes that are, anyways, hit the like button, will you? And subscribe to the channel if you haven't done so yet. All right, so we have the level. This is the level, right, on H1. I do have to wait that 40 minutes, so the end of the hour. But by then, you also have some levels on the opening range to use. And on the 15-minute, can we get some levels? All right, I see one there. You guys see that? It's sticking its head right here. Right, that's a level you want to be looking at, just in case. Yeah, that's the only level there is, and it's right there in the 1 hour. So that's certainly a level you would want to be looking at if the market comes back, because if it could squeeze a little bit, but not close below. As long as it holds that level, and on the lower time frame, maybe on the 1 hour, not 1 hour, the 1 minute, gets that reversal. That's what you want to be catching. And then the target is a little bit tricky because you are gonna go deep into a supply zone, so you'll have to be not too ambitious because you don't know yet if it's actually going to break through it and continue right away. It may just make a third or a fourth retest of that supply zone. So you want to be a little bit, you can hold it, but make sure you take some profits, put yourself in safety, put your stop loss into break even in positive territory, close some profits, and then you can ride it out. If it actually wants to push out and break this, then you are already, you will be in the trade. And if it doesn't, because it's a supply zone in the end, you get out with some profits, which is, what you want to be. You don't want to be in a position where, you have some decent profit and then you let it go because the market turned on you. That's, something like this, and then you target, maybe this high, that could be your nice target. And then you let the rest run, or maybe even this makes sense in my mind. You let the market hit that level, close half or some other portion that you feel comfortable with. You're in profit. Doesn't matter what happens after that. You're not gonna lose anymore if you have 6R on half the position. That means 3R on the full position. So even if you don't move your stop loss, you're still going to be 2R plus, but it makes sense to put your stop loss in profit, and then at least you will get 3R if that's the case. But I mean, I can see this push easily. I'm not even asking for price to go through the level, which will take, logically, that's going to take more time. And just maybe it does it, in one go, and you're in the trade with half a trade or whatever you left on the table. So that's it. Yeah, that's it. I think that's a nice stretch opportunity. Go ahead.
Yeah, I'm going to share my viewing here on actually on the US indices in general, especially S&P and NASDAQ. So I've been looking also. I've been, again, since last Wednesday. I think you actually caught that short initially with Samir, and then I was looking for it, and then price kind of retest back into this level this Monday, and then kind of retesting again. it looks like that price, for some reason, has been managing to hold this low, basically created with the CPI, and may attract price to go slightly higher before moving to the downside. So we'll see where it will be the liquidity now enough for price to be able to push price back down. That will be a little bit out of question. Maybe if price actually just takes literally above this size and completely reverses now during the opening and starts moving like this could be a possibility. Otherwise, I may consider that price may end up taking this high again, and because this high is getting so close now to this one, it may actually end up taking both structures before trying to find new selling pressure, which could still respect within this structure in here. And one of the reasons I'm starting to consider a little bit that could happen is when I look at the S&P as well. We can see this is beautiful, great compression. Eventually price will break there, but you do have all these highs as well in alignment, so there's going to be most likely a lot of liquidity above the structure. And then the question mark is basically the same: are you going to just take these highs and somehow find some selling pressure? And again, the moment price most likely breaks this low, I think there's a high probability that price could just fill all this quite aggressively or quite quickly. Now, is it going to be just above these highs and price goes, or by any chance price takes these highs but also goes all the way to take this high as well, and now we are into all-time highs on the S&P, and maybe after that you can try to find some selling pressure. So that's something that I'll be paying attention. First and foremost, again, how price is going to react after taking these highs. If it's rejected straight away, and if you do then break below this low, I think there's maybe a good opportunity to look for shorts, even in this particular case on the S&P and NASDAQ. It will be more or less the same. Now, I'm thinking about correlation between these two assets, right? So hopefully they are going to actually behave quite similarly, so we can actually track both of them to see how they both react. Again, S&P above the other highs, NASDAQ above these most recent highs in the year from today, to see how price may react. Because yes, this one is yesterday's high. Let's see, price actually has the power to go all the way there. Otherwise, price may just take a little bit above this level and then goes down. So that would be more or less what I'll be looking. In terms of the Dow is a little bit trickier. We did manage to go below that level, but that was expected. Again, we talked about it exactly, that potential move, which is when you do have a clear range like we had in here, where price is basically respecting these highs and then kind of respecting these lows. Most likely price will spike above, come back down, will take the lows and come back up. Again, exactly the same thing. When I'm looking at the Dow, I'm looking a little bit more of a bigger range, but as you can see, price is literally in the middle of that range. So when you're in the middle, these manipulations can happen without really giving any proper direction at this point. Personally, of course, I prefer to trade close to the extremes. This in this case, this is a 50-minute time frame. This can be seen on the 1 hour or even 4 hours or even maybe daily. So I would personally avoid trades within this range at this point. I would prefer for price to come a little bit higher, close to this extreme, or a little bit lower, close to this extreme, and try to go for it. So that would be my take on here on the Dow, to be honest, at this point. But S&P and NASDAQ, I think they can be interesting, especially in terms of falling price, to see if you do actually have that break of storage. You can see already, literally price just open, and you start having a little bit of this first reaction. Yep, there you go. Price literally just open with a bearish candle, quite an aggressive bearish candle. So let's see price. Actually, again, personally, I would have preferred to see price taking these highs. Okay, I would actually have preferred to see price taking this liquidity, and we didn't yet. So I would like to see price taking these highs, and then trying to push price down, and eventually this could become almost a potential quasi-model on this lower time frame. Something like that. Price goes down, eventually completely breaks these lows, and then something like that would be my ideal trade at around this stage on the S&P.
There is a nice reaction to the H1 entry order block on the quasi for GU on the 1 minute. It is a nice area to nice area there.
Yep.
Let's see. You see that? I don't know if you. Maybe I can put my.
Yeah, I can put yours just to see specific your web. But yes, you are seeing price. You are seeing the seller starting to say hi.
That's the whole area, right? This was the structure on the 1 minute on the hourlies, and this little thing here was the entry order block, and you can see how the reaction is. To me, it wasn't enough to get in because it had to actually reach the level above. But that's for the main strategy. The other strategies that I use, like scalping, I take reaction off of this, right? So I go to the 1 minute and I do the same thing just with a lower time frame, right? So this is the level. This is the level that on the 1 hour was visible, right here, there. This is the level, and so on, right? So, and we have a beautiful picture perfect, tiny, atomic tiny, but uptrend, left shoulder, neckline, head. It breaks it. Actually, you already had an entry here. If you had already an entry order block there, but it goes even lower, right? First right shoulder and then the second right shoulder, and then it moves out. I don't hold it. If this only on 1 minute and it didn't get to my red level, I'll just target the very next best level, and I don't see it. I would have target this, and it would have been there. That's it. I would just take for the next level and not press my luck to hold it for any longer. But this could be the beginning of something a little, even bigger than this. But I would wait. Normally, I would wait for this to be hit. But in between, before and after, I can take little naps at the market by seeing and recognizing these reversal patterns. They're textbook, rule based. The market comes in and has actually a nice reaction here, but eventually had a bigger reaction. And you can use whatever you want, right? You can use a trend line and you wait for that to break. You can use candlestick formations. You can we had a pin bar there. You had let me zoom it bigger so you guys can see it. You had a nice pin bar indicating sellers coming in and pushing price lower. And engulfing, you even had that's it. You have the engulfing. So and whatever it is that you use, that's fine. And maybe you can use some indicators as well, because you can see something happening here that the market is pushing higher but not going higher. So probably you could spot some divergence as well in some oscillators on the indicator front, and the market eventually breaks and continues the opposite direction. Hits the level, this being the level, it hits it and then makes a lower high and breaks it. And who knows? I don't have enough reasons to expect this to move way lower, but it might. I mean, it's an H1 level based on a structure quite nice from the left, which is not small, and there are multiple things going forward. You also have the H4 right there, that lower border of that level, but I'm still going to be holding, executing my plan. And that plan is that I need to wait for it to reach the level that I'm interested in. So, but nice reaction, actually. I love to see how the market does it, over and over again. It makes trading look easy, but of course it's not. But hey, someone is asking in the chat. Someone is asking, there we go, nice reaction. Let me check here. Okay. What else do we have? Yeah, this is the area it's probably going to be targeting, right? So that would be a nice area to target if you are in that trade. The level below it and putting your TP just a little bit above it. That would be based on the hourly that is, right? Something like that. If you caught that reversal from that H1 entry order block. All right, let's take a look at, have you looked at the yen pairs, Pedro?
Sorry?
Have you been checking the yen pairs? They are certainly moving a lot last couple of weeks, days. Have you had any trades on yen, dollar yen perhaps, or?
No, I've been so again since intervention, prices move really aggressively to the downside, and I've been waiting now for price to retrace. So when looking at the dollar yen, of course, just because how big these moves were, everything looks a little bit disproportional in terms of the size of the candles. But the reality is that these moves are still okay. Okay, these most recent moves are still reasonable. Just the other ones were just massive. So I've been trying to see. I would like to see price going a little bit higher. To be honest, on the dollar yen. We can see that price is starting to create a little bit of a resistance level at around this level, which is good. So start tracking sellers into this place, and I'm going to actually create a new alert. I've had one alert a little bit higher, kind of in a level that actually LJ also has kind of a zone of interest in there. But I'm going to set up another one now in here at above these highs, because what I like to see as well is exactly this. I like to see a level of resistance, price starting to show kind of a little bit of a bearish momentum for price to then come back one last time, now create that fake out, and then try to trade this kind of this leg in here. So let's see if price has the power to then come back in here and then get rejected and try to push to the downside. And dollar yen, I think euro yen is quite similar as well. I'd like to see the euro yen also going a little bit higher. Yep, euro yen quite similar. So I'm going to actually bring this alert a little bit underneath, and we actually have an interesting supply level at around this level. So I'm going to be tracking, maybe finally after that big sell-off that we had. For the last 10 days, price has been recovering, but maybe we can have a little bit of a move lower, and maybe even can go closer to this level. This could be a target. Price maybe could come here, starts pushing down, and then from here could come back up again. So I'm going to be most likely trying to find this move on the euro yen, and then I think if you start looking at the other ones, it's quite similar, exactly. Pound yen, exactly the same structure, a level of resistance now, because it's quite similar to what we have in here on the yen index. Also have a clear demand zone a little bit underneath, so it's exactly the same thing. I want to see price squeezing one more time this move, trying to kind of correct this move in here, then breaking back into the structure, and then maybe we can have an attempt to go higher. So that's basically what I've been waiting. Yep, that's the thing on the yen pairs, and I think that's going to be a potentially good opportunity. I don't mean that price is going to go back all the way to the highs in the euro yen index or euro yen, dollar yen, and so on, all the way to the lows, but maybe a little bit of a range now, because basically we are at around the 50% retracement since these lows all the way to these highs, and usually at around the mid range, price can be bouncing in between these levels or these two levels in here. But that will be something I'll be definitely paying attention to.
Nice. Yeah, it looks like it's you're looking at the pound dollars right now, but before the yen pair, it looks like it's gonna break out and continue a little bit higher. That's what you're waiting for, right? Price be getting higher before you start thinking about the continuation of that huge impulsive move to the downside.
Yeah, and again, one of the things that I like to see the most is exactly this type of approach. Okay, so actually two types of approach. One, of course, is that strong compression level that eventually price can break in and squeeze everything. But the other one, also in terms of starting to consider looking for sales, is when price is starting to create this kind of resistance structure, tracking liquidity, start showing actually some bearish momentum. So then price can try to squeeze on last time to then push to the downside finally after correcting the liquidity from here, because it's going to attract people into the wrong direction. All of them is going to be get squeezed in here. They're going to be thinking about actually going the breakout setup, going higher, and try to see if price actually then comes back into the range and starts moving lower. And I like to see this type of PA when price is getting closer also to an important structure on the left side, because it's the best combination that you can have. A strong order block or supply or level of support resistance, price pausing just underneath that level, creating a little bit of resistance, attracting sellers into these levels, and then kind of squeezing and then coming back up, coming back down.
And Q totally blasting through the levels we were talking about. Look at that. That supply zone. Totally, that's the open. That's the force of the open. It can... Go ahead.
No, it's exactly kind of what described, because the way price was moving and holding this level, especially with this walls in here, it looked like that these highs were about to get squeezed, and in this case, it will be literally about to see what the next reaction would be, and that it's actually quite interesting that price actually made this initial move down. Why? Just to attract more sellers into here. Most likely many people, they saw this price moving to downside, start having FOMO and start placing sell orders in here. And there you go. Literally they got squeezed at this point. All of them got their stopped out. Their stop loss eaten. Even if anyone protected all the way until this level, that stop loss is also already triggered. And now maybe this is one of the last levels. So let's see now, after price taking this high, what's going to happen at around this structure. That's going to be the main thing, okay? At least for me, that's going to be the next interesting level. That price maybe create a little bit of buy for shorts at this point. I would like to see price maybe holding a little bit, squeezing a little bit more, starting to create some kind of structure at the base, and then eventually when you do break that level, then try to come back down if that's about to happen. Again, S&P, exactly the same thing. We talked about exactly that as well. Would price take this highs? Most likely. Now, is price going to also take this previous all-time high? We will see. Okay, we will see if that's going to happen or not. Quite similar to move as well. First squeeze down and then price went up. And now let's see what's going to happen at around this level. At this point, it's kind of starting to find a little bit of selling pressure now that price is retesting literally this top. Actually, let me just take a look at this top quite quickly on the 1 minute time frame, if possible. Yep. Yeah, we still have actually this nice supply level.
One thing for someone in the chat, if you allow me to say anything, I'm not sure how to pronounce your name, my friend. Anger Frasiyapkan. Hopefully that's somewhere near how it should sound. You're short pound dollar. If you look at the, if I may switch very quickly with your permission, Pedro, the target that we had was a little bit lower, which is that would be the target based on the H1. If you look at the other levels we had before, that swing high, not this one because this was the same level that we had with the order block on the 3 minute, you can see these are the next level, the next things that it needs to do in order to reach the TP. One was it needs to take out this line. It did. If you look at the, actually, it did not. So that's a little thing there you want to be considering. So it should, and maybe it will in the near future, break this out. But if it doesn't, this should hold. That could be one way to look at it. And then there is another level there, which is the broken level, the last swing high before the breakout. If you're not considering the news, which is has higher volatility, is generated by high volatility, so that's a different thing. But this is the swing high, the previous swing high before the news, and we didn't reach it. Not only that, if you go to the 1 hour, 1 minute, you can see that the market is kind of switching back, right? It creates a fresh order block on the 1 minute, goes back and moves out. It's not over yet, but if it breaks this, that's a line that should consider, something is changing on the tiny time frame of the 1 minute, and then you have this last order block on the 3 minute that should hold price. I mean, sometimes it takes it out and then still goes into your direction. Happens a lot of the times. But those are the levels you want to be seeing. I mean, if it just takes it out a little bit, you know, that's the reaction. You see that? That's the reaction you want to see. That's the 3 minute right there, the order block reacting just like it's, you know, as long as you're seeing these reactions, it's confirming. You can hold that trade a little longer because you can see the reaction. That's exactly what we were talking about. You know, before it happened, rewind, you will see that, you know, this is supposed to hold if you're going to hold this trade longer, because it doesn't make sense that price is going to continue to go lower, but it can't even hold these supply areas, little supply areas on the 3 minute. And it did picture perfect to the pipette perfection. This is like a, you know, a neurosurgeon here at work, price action that is, separating two neurons, you know, under the operating, on the operating table. All right, so you have the market. This is, you know, as long as this is holding this line, you know, it can have all kinds of patterns later on. But if it breaks it, as long as it can break it, then retest it and continue lower, then no problem. You can hold it and, you know, reassess later until it gets to your TP. But if it cannot hold this level on the 3 minute, that could be a reason for you to close that position, take your profit, and just look for another opportunity. That is, you know, our friend here who is short pound dollar. It's in the opposite sequence, but we get the point. It's pound dollar. No problem. We are here to, we have your back live here at the 5ers YouTube channel. If you like Cookie, the Pedro's cat, then you know what to do with the like button and with the subscribe button. Don't do it for us. Do it for Cookie. Cookie will be very thankful for you. Thankful to you, Pedro. Let's take a look at NQ. The market is totally running through that supply zone. I mean, you know, it's nice to see the market do those things. I didn't expect it. I didn't expect it to happen this quickly. But the market went through it, and once it goes through it, that's what I meant, right? Once the supply is consumed, you know, there's nothing stopping price, and then both sides, that double whammy that I mentioned, both sides go in the same direction. Sellers, you know, they close their position, but for that they need to buy, and buyers who aren't in the trade yet, they are, you know, it's breaking out, so they're buying, and if they, you know, or adding if they're already in it, and you see these kind of moves. It's also the open, but it's, you know, the open is, let's measure how big this reaction is. It's not a reaction. This breakout 260, which is a nice opening candle, actually quite large. All right, we have 10 minutes to go, and the market seems to be unstoppable, going higher, and a huge candle. Nice, good stuff. Let's see GU, what GU is doing. All right, so we're holding that level, seeing that pattern playing out as we're seeing here, and as long as this is looking good, this is looking as if basically you're seeing this, right? And eventually you expect price to continue and then go to the next level, presumably to that level. You could move this a little bit higher actually, and hit that level. You know, that would be a nice continuation trade for if anyone who is short on EU. Do we have anything here on EU? It tapped me out after I hit TP. In break even, went higher. I didn't have anything there. Yeah, I didn't have anything there. So now I can start looking for an entry, a second entry short. So this becomes the level on the 1 hour. It's not closed yet, so it's going to be something for in about 10 minutes. The 4 hour, see, that's the 4 hour. With the 1 hour, we combine that, and it gives us this level right here. there. That's going to be the lower border of the level of interest. And this is going to be the upper border. And that's where I'm going to be looking for possible retracements into it going short. All right, let's go and check. Let's go and check. Do we have something here? We don't. On the 5 minute, there is no quasi. There is a nice outside bar here. Very interesting. Not an entry, but just a 5 minute. On the 3, nothing. 2, there you go. It's a two time. There you go. Let me check that out. Let's see. We have our friend is giving us his TP, his or her TP, to 2 minute. I say his or her because simply we don't know. And even though majority of our viewers are male, we do have a large portion of female traders watching us in our community. So, all right, so we have the quasi right here. Where would that entry be in about 10 minutes? We're going to have on Discord, we're going to have Richard Wells, who is the in-house performance coach for the 5ers, having a session in having a session in the Discord community, which will be in about an hour, a little less than that. If you're not sure what I'm talking about, then probably you're not part of Discord yet. Get yourself into that community, our community. I'd argue it'd be the best community, best trading community you have ever been in. Check it out and let me know. Come back to the YouTube channel later on after done your research and tell me if it's not the case. I'll be here. I'm here 4 times a week and I'll be waiting for your feedback whether or not it's the best Discord community or not. All right, so this is the level. There are 2 levels that I would be looking for after the turn of the hour for the continuation lower on EU, because that's what it looks like it wants to do. But we'll have to wait for price to come back. If it comes back, doesn't happen all the time. And NASDAQ is pushing higher. By the looks of Pedro, I think he is making money here. A lot of them, a lot of it by the cans, as they say in Spanish. It's making money by the cans. Literal translation, of course. Let's take a look. You have a huge candle, H4, beautiful, beautiful. But I can't enter anymore. We have the opening range, which is a huge area, which, yeah, I would have to wait for price to come back to that area perhaps, and then I'll go to the lower time frame to catch maybe something. Maybe that could be something. Price comes back, hit that level, and I can take the trade long, something like that on the lower time frame. That makes sense to me. And since this level is very nearby, I would wait for the market to actually touch it and have start getting a reaction and then get in on the long. I'm not going to get, buy the breakout, buy it right here. Not that kind of a trader. I want price to come back, give me a good offer, a discount on that move, and if it's not able to do that, then I'll say farewell, and I'll catch you next time. Someone is asking for your opinion. No financial advice is offered here from the 5ers. But go ahead.
Yeah, that's a good one. Actually, I was looking at another indices, and in this case DAX. DAX actually another quasi model. Actually, this one play out quite nicely. that we had this beautiful move and price squeezed all the way around the London Open this morning, and now it's already moving to the downside. So this is another one that, again, quite similar to what we have been talking about, price losing momentum. Anytime it goes up, goes down straight away. Nice little squeeze, and then price is which finally breaking structure and now moving to the downside. But when looking at US CAD, actually I was looking at it as we were looking at the pound dollar, because again, price just went quite aggressively. As you can see, I was looking a little bit further down. Unfortunately for me, I wanted price to go a little bit closer to this level, which never did. Price which we just reversed from there, and now at least my trade for now it's gone. At this point, to be honest, I actually prefer to see price finally confirming the break of this, and hopefully having a new deep retracement, and then moving to the upside. Or on the other side, it will be maybe breaking this and then kind of consolidating a little bit in here, finding some kind of structure, and then trying to go into the next leg, using now this new structure as a new level of support. But as you can see, it's basically gone. Unfortunately, my friends, price went away without me. Nothing I can do in here, to be honest.
Happens all the time. Happens to me all the time.
Now the structure was there, kind of this kind of Quasimodo approach was there. The same thing on the dollar, on the pound as well, and everything. Even on gold, okay, gold so far also respected this initial structure, this level of supply, which makes total sense to me as well. Again, just because I prefer to trade a little bit closer to the extremes, I was hoping that eventually price could go there. It can still go there, okay, price can still make a new low, can maybe break out this, and then still fake out eventually this structure, coming back all the way to here, and then kind of maybe do something like that. So that can be potentially still a new potential short opportunity that gold can create or generate in the future. Apparently not for now. Maybe for now, one other trade that can happen is which we just maybe retest the structure and try to continue to short it all the way. So that could be also a possibility. We actually have, let me just go back in 5 minutes. We actually have this supply level from here now. Again, I don't really feel comfortable when I know that there's maybe still some space or some interesting levels a little bit higher to trade the most recent ones. But to be honest, I think today maybe this could still work quite nicely, and maybe price will just go there in the future. Maybe the top is already created so far on gold, especially again if US indices confirm moving a little bit more to the upside as well. Which is basically what the dollar also is doing. This can be a little bit of a confirmation that, especially with the news of the PPI that we have, all this enthusiasm that we are actually noticing now, new all-time highs again on the S&P, is basically the confirmation that most likely we are not going to have a hike in September. PPI came also as expected, like the same thing that happened on Wednesday with the CPI, and most likely, actually, let me just take a look into it, because this was before the PPI complete shift. Okay, now 60% expectation that the interest rate is going to remain the same. Let's see, now it's going to, it's already increased, right? It was 60, now it's 65. As you can see, it's increasing the probability that we're actually going to continue at the same with interest rates. So no hike, as you can see. Look at 1 week ago. Okay, 1 week ago it was the opposite. It was 55% for a potential increase and 45 to maintain, and now it's 34 for an increase and 65 to maintain. Why? Because again, the CPI, first of all, it was initially the NFP, way lower than expected. So again, potential issues with employment, so or the labor market. Therefore, there's no need to hike, because that's going to create even more issues or more struggle into the labor market in the US. And now the CPI being as expected, so it's not higher. If it was lower, even better, but it's not higher. It's as expected. Therefore, it continues to delay any potential increase in interest rate. Now, looking at December, which is also interesting to look at, it's around 45% potential increase. So that's still one of the things that we're going to be looking at, or the market's looking at is a potential increase or not until the end of the year. But at least in September, it looks like it's going to be divided. We will see in October. As you can see, first of all, in October as well, 51%. As you can see, 1 week ago, it was 30% probability to remain the same. 1 month ago, it was 18%. So as you can see, complete shift in the policy, and the market is excited about it. You can see the indices just rising and getting into new all-time highs once again. That's what we have.
Nice. And with that, we came to the end of this stream. I hope you guys enjoyed as much as we did. And actually, before we go out, there was someone, JPay or JPL 00. I'm not sure what these initials are. I can only imagine. It says, I live in Spain. Never heard that. I think you were referring to when I said, as they say in Spanish, making money by the cans. And it's I don't know if it's in Spain it's a common expression, but it is in other parts of the Spanish-speaking region, meaning, or in Spanish it sounds, plata a la lata, right? Making a lot of money, making a lot of dough, anyway, it's just an expression. But thank you for that reminder or that question, that comment. It's not even a question. Anyways, coming back, we have everyone who is here with us. Do not go away. Do not close anything. Do not move. Do not breathe. No, keep on breathing. You will be redirected to the Futures channel where Dave and a bunch of great traders are awaiting you to help you with the, not to help you, but I mean to give you, let's switch here. There we go. We got it right here. Who will be, bringing you the latest analysis on the futures market. Dave, that is, let me adjust this if I can. Apparently I can't. Remy, if you could, thank you. We have the Discord session later on in about 45 minutes. We have the Portuguese, if I'm not mistaken, right? Mm-hmm. Yes, we have the Portuguese stream later on, and I think in about 2 hours or so. Check the YouTube, the Portuguese YouTube channel. Mind you, we have next week, we'll have a 30-minute break in between the London and the New York session. It's going to be fun. It's going to be excited. We're going to be streaming for an hour, starting an hour extra to guide you, to accompany you while you're trading. We can trade together. We can see these things, these patterns, these opportunities set up, popping up together. That's what we love to do. So we want to share that with you. I think that's all of it. Actually, the summer plan. This week, we announced the 200, the fresh from the oven, 200K plans, super low price. Go check them out. Amazing. I mean, the 100K was already a steal, an offer you cannot, deny. And the 200 is even more. Go check it out and make sure it is for a limited time. So, I can't say. I don't know how long it's going to be here for you to grab. So go check it out and make sure you buy if that's within your plan. That's it, Pedro. It is, well, here from the 5ers team, together with Cookie, we say to you goodbye. See you guys next time. And any last comments, Pedro, before we go?
That's all good. Later on, in 2 hours, we're going to do our Portuguese live stream. I think, just to confirm yet, I'm not sure, but maybe we're going to do our first 1 versus 1 battle as well on our Portuguese channel. Nice. The same thing that we have been doing in here on the English one. So that's going to be entertaining, to say the least. And I'm going to be away for a little bit because I'm going on holiday. I haven't mentioned that maybe here on the live stream, but yes, I'm going to go to Greece on Saturday, so I'm going to be away at least 2 weeks.
Nice.
I'm going to go enjoy the summer plan of the 5ers in Greece. That's going to live the life of the campaign that we are promoting in here. That's going to be if you see any type of summer content from me, swimming or laying on the beach or doing something like that, I'm going to compete with Dave. I noticed that Dave also shared something, drinking a mocktail or cocktail by the swimming pool. Be aware, because Dave, I'm coming for you as well. I'm going to be creating something interesting. So that's
It's
going to
I
be.
can already see Pedro with a cocktail, with a margarita. What do you drink
Yep.
when you do have a cocktail or a mocktail?
I like mojitos. To be honest, I haven't drank alcohol for quite a while, but I do like the mojitos, the flavor of forgetting now the name of the thing, but I like it. I like the flavor. So maybe a mocktail, a mojito mocktail. I like it.
Nice. While you're enjoying that rum with mint, I can already see you in in the swimming pool with that infinity pool. The blue Greek sky behind you. It's gonna be a great way to let us know you're enjoying your summer plans. Pedro, have
Yep,
a lot
I
of
will.
fun in Greece. I mean, have. Hope to see you again soon after your well-deserved vacation. Everyone else, thank you for watching. We're gonna be coming back. The main channel, this one will be back on Monday, of course. But stay tuned for the futures channel. So that's it. Take care and goodbye.
Bye-bye.